Yes, hi guys. Let's begin this case scenario and MCQ discussion, especially case scenario MCQ discussion. So in ICA book, we totally have 25 case scenarios. And you know what? By the way, these case scenarios are given only for our EVO Pro students. So no, nothing but our regular. Whoever have enrolled into income tax regular, nothing but Pro, or whoever have enrolled in group wise regular Pro. For them only case study discussion will be available. And we already completed all the 25 case studies. Trust me, guys, the case studies are superb quality. Like they're extreme. Like many opponents that when we are discussing the subject, when you're reading, you will have some vagueness, little vagueness at certain concepts. Everything will be answered. And in these 25 case studies, these case studies are something extraordinary. Trust me, you might have never solved this kind of problem. And all these cases are total income solving only. And all this are total income, tax computation, various deductions, every head of income is covered. Actually, these are some special case studies out of 25 which is given. All 25 are very good. Take ICA booklet case scenarios, all 25 case studies please solve. And those of you who enroll for our pro, kindly watch the upcoming videos in your app itself, all the case study questions, all that. Okay, and those of you who are on YouTube, must and should you should solve this, must and should solve this. I'm telling you, these are the fantastic case studies. They will make you learn, they will make you like they will make, I mean, they will add a lot of valuation to you in income tax learning. And only those who are commendable in income tax entire subject in CA Inter can solve this booklet, 25 case study booklets. I don't know whether there are some, top 50 problems, top 100 problems, top 30 problems, that and all, ignore it here. They are very basic compared to this. These are extraordinary problems where a minute, if at all, in this case study booklet, no, 25 cases are there, right? Anything they can select and give it as a question in the 15 marks. So that level these questions are. And trust me, these are the best questions that I found on income tax till date in CA. The best questions, honestly speaking. September 24 attempt one total income question is there. That is one of the best question which I love. Okay, total income question, that's like mind blowing question. And these 15 are another next best questions I can say. Even in the ICA book, main illustrations and TVK questions also, this kind of challenging discussion is not there. And also, those of you who do not have who are not our students like pro or whatever, this MCQ discussion alone, case study based discussion alone, I'm keeping it as a separate course in our website, restofuscsma.com. If you want, you can enroll on that. I think some nominal amount, somewhere around we will fix the price, which is less than 1,000 rupees only for case study discussion, because the amount of knowledge that you get through this case study and the amount of revision that you get is fantastic. And what I recommend our pro students, everybody, preferably watch once marathon on the YouTube. My income tax marathon is already there. Watch it once, then come back and solve the case study. Then you will be able to link all the dots. So I'm telling you, these case studies are especially super 15 problems according to me, the best problems on MCQs in income tax. I'm telling you, you will see the subject in a different dimension. And those of you who have not yet started this case study scenario on ICA booklet, you are doing a big blunder, because there are high chances any of these case study can be picked up and asked as a direct question. All permutations and combinations, residential status, basic concepts, agriculture income discussion, house property, especially house property, PGBP, capital gains, every chapter 6 deductions, TDS provisions, everything nook and corner they touched in this 25 case studies. Trust me, the case studies are so exhaustive, so powerful. Your perception on income tax will change. Means you will understand how seriously you have to study income tax subject. That's it. All the very best. Continue watching this upcoming case study discussion, all our pro students or case study enrolled students. Okay, this is just an introduction video to the case study which I posted on YouTube as well for better clarity of many users. That's it. All the very best. Go ahead. So let's begin the case scenario MCQ booklet. So directly, ICA booklet itself is there, right? That itself we will use. So MCQ booklet and case scenario. And with respect to taxation or any other subject for that matter, as you know, I deal with audit also. I strictly recommend not to follow any MCQ sources like WhatsApp groups, Telegram groups, MCQs. No, don't follow. 99% of the cases, what I have noticed is they are not at all reflective of ICA standard. The level at which ICA MCQ is designing and there the questions which are circulating, both are not matching. You will just get happiness that you're solving more MCQs, but that is not how in reality the questions will be tested. You just observe, Just compare this case scenario with, the MCQs where you are participating in any Telegram group. Majority cases, I'm telling, they're not that serious. Follow ICI sources 100%. Those of you writing September 25 exam, very simple. For May 25 attempt, MTP1, MTP2 already released by long back. And for September, MTP1, MTP2 were there. Case scenario booklet is there. In this case scenario booklet, how many case studies were there in this? For sure 25, 30 plus will be there. Okay. And MTP1, MTP2, there 15, approximately 7 and 7 questions. MTP 1 and 2 for September, 7 and 7, total 30 questions, and here somewhere around 100 questions. 130 MCQs you're solving, which is more than sufficient. See, in taxation, that too, in income tax especially, what is most important is your application of provision. How in depth you understood the provision and how best you're applying the provision. That is what most important. It's not solving thousands of questions. When new question comes, if you don't understand the provision, gone. So all our students, especially because MCQ questions are there only for our pro students, regular students, nothing but pro is nothing but we call them as regular, nothing but regular students. So this MCQ booklet, through particular this booklet, we are going to understand how different sections are being applied. So this will be enough practice for you. And all our students, whoever have already completed watching the classes, I preferably recommend you to once watch our marathon before solving this. Once just brush up entire concepts, then watch this, because no case study based MCQs, you sometimes you'll have all heads of income together a question. So that's why. Fine, let's begin straight away. Case scenario 1. Okay. Mr. Shashikant, 45 years, is an Indian citizen and a member of crew of a Singapore-bound Indian ship engaged in carriage of passengers in international traffic departing from port on 29th May. For a crew member, how to calculate residential status? Total number of days 365 minus TDC period, we call it as. TDC period means continuous discharge certificate, sign in to sign out. So that entire date, sign in date and sign out date, both will be considered inclusive. Next, now date entered into CDC certificate 29th May, date entered into the signing off, date of signing off 19th December. Very simple, calculate 29, 30, 31, 3 days in May, correct? 30 days in June, 31 days in July, 31 days in August, 30 days October, 31 days October, 30 days November, and December 19, totally 175 days, right? Totally exactly it is coming to 175 days. The gap is 29th May to 19th December. The gap is 175. Just once again, May 3, June 30, July 31, August 31, September 30, October 31, November 30. No. 205. Total days is 205 days. So 205 days. And moreover, 365 days minus 205 is equal to 365 minus 205 is equal to 160 days only he is in India. Yes or no? We will call the stay in India is 160 days. Fine, we'll see. So in the current year he stayed for 160 days. He stayed in India in the last 4 years preceding the year for 400 days, and for a period of 750 in the last 7 years preceding 24-25. He received a salary of 7,20,000 in NRE account maintained with State Bank of India, Chennai branch. He also furnished other income earned by him. Dividend declared by X Limited, a Singapore company. Source is outside, it's a foreign income. Yes or no? Foreign income. Agriculture income from land in Pakistan, it's a foreign income. Yes or no? Rent received from house property in Chennai, gross. What is income actually? 3,60,000 minus 30% is equal to 2,52,000. 2,52,000. See, they have given this other information, okay, to determine residential status. Now, first of all, be clear. Like we have this provision. What is the basic condition? 1. A person is treated as resident if at all the stay in India is 182 days or more in the current year. That is one criteria. Here he stayed for less than 182. Therefore, B1 condition failed. Now let's apply B2. Condition B2 does not apply to an Indian citizen working as a crew member in a foreign bound ship. Condition B2 does not apply. Further, condition B2 can be modified and applied. So, typically speaking, B1, B2, basic residential status category 1 as per our analysis in our book, that is not satisfied. Now then we need to check category 2 residential, special residential status. What is special residential status? If he is a person of Indian origin or Indian citizen, both. Yes or no? Any of them? Okay, they're visiting India. For visitors only that is applicable. Getting it? This provision will not be applicable for a crew member working. So those who are visiting India, for them only that is applicable. Those who are settled outside and visiting India, then 120 days logic and all is applicable. Here we don't have to apply this. Right or not? We don't have to apply for the, because they are not visitors. They are not visitors. Person visiting in India, for that logic only this is applicable. That's not for crew. For a person who is visiting India, for him only that 120 days logic is applicable. Therefore, special residential status concept also gone. Then concept number 3, deemed resident. He is an Indian citizen. Yes or no? And they have not given any information regarding whether he is taxable in other country or not. Therefore, deemed resident logic also does not apply. We'll see now. So accordingly, he is a non-resident. Accordingly, he is a non-resident. Now, for non-resident, which incomes are taxable ultimately? Where source is in India, that is taxable, or receipt must be in India, that is taxable. That's it. Now, what is Mr. Sashikant residential status for 24-25? Non-resident, correct? Yes or no? Now, what would be the total income of Sashikant? Since he is a non-resident, which incomes are taxable? Salary received in NRE account, that's not taxable. NRE account is not. Yes or no? It is treated as foreign income only. Okay. Then dividend received by X limit, dividend received declared by X Singapore company, but the same was received by him in Singapore. Source and received both are outside. Agriculture income, Pakistan, taxable source, but received in India. Therefore, 2.5 lakh is taxable. Rent received in Chennai, its source of income is Chennai. Therefore, 502. Correct? 5,02,000. So the answer is C. Next. Assume for the purpose of answering this question that Mr. Sasikant has transferred his house property in Chennai to his minor married daughter on 1st April 2024. And his wife is a housewife and does not have any income. Okay. The minor married daughter receives rent from the house property. In such a case, what would be his total income if he shifted out of default tax, means optional tax regime? Fantastic question. 2,52,000 income is same. Income from house property is still 2,52,000 only income. But here the house is transferred in Chennai, whatever the Chennai house, to minor married daughter. Deemed ownership under section 27 does not apply for minor married daughter. Yes or no? Deemed owner, when transferred to minor child, deemed owner concept apply, but in that exception minor married daughter. However, 64 subsection 1A clubbing will apply. 64 subsection 1A clubbing will apply. Now when you are clubbing, no, 2,52,000 is minor child income, that will be clubbed in the hands of the father, because no, mother, his wife is a housewife, they said, does not have any income. Therefore, father income only, the minor daughter income will be clubbed. When you are clubbing the income, 1,500 exemption is available. Remember, this 1,500 exemption is available only under optional tax regime, but not available under default tax regime. Therefore, 2,52,000 minus 1,500 exemption, 2,50,500. This is the income clubbed, liable for clubbing. Plus Pakistan related agricultural land income is 2,50,000. So which means 5,500,000 is the answer. 5,500,000. But one more point. Suppose no, here if it is not a minor married daughter, suppose they said minor son. Suppose they said minor son, for example, then deemed ownership concept will apply 27. As per that, transferor is treated as deemed owner. Entire 2,52,000 straight away taxable in the hands of the father himself. 1,500 exemption concept itself will not come under 27. 1,500 exemption, when it will come, where the income of the minor child is clubbed through 64. Then only 1,500 exemption comes, that too under optional tax regime. Yes or no? If at all income of the child is clubbed in the hands of the father based on 27 deemed ownership, 1,500 exemption will not apply. See, I'm giving you one more alternative also. I don't think they have given you. They have not given. Now, Mr. Shashikant would like to minimize his tax liability and consulted you to compute the same for the year. Accordingly, his tax liability would be rounded off. He want to minimize his tax liability. So let us compute in optional tax regime and default tax regime. Okay, I think not this income. This only a temporary question here. Okay, so fourth question point of view, income purpose, it's always 5,02,000. Correct? 5,02,000 under optional tax regime. We'll see first. By the way, what is the age of the Shashikant? 45 years, and remember, is a non-resident. By the way, anyhow, it is a non-resident. Age doesn't matter. So no, age doesn't matter. So 2,50,000 exemption, optional tax regime. First time calculating basic tax and optional tax regime. 2,50,000 into 5% plus 2,000 rupees into 20%, right? Yes or no? So total 12,900. Okay, 12,900 plus 4% cess, because no, since total income is exceeding 5 lakh under optional tax regime, no rebate, plus 4% is equal to 13,416. 13,416 rounded up to 13,420. So one option they gave that. One of the option is that. Now let us compute default tax regime. 5 lakh 2,000, 3 lakhs exempted. Entire 2 lakh 2,000 is taxable at 5%. Correct? Huh? 0 to 3, 0, 3 to 7, 5%, right? Yes or no? And yeah, and since total income is not exceeding, by the way, wait. Rebate is not applicable for non-resident. Yeah, 87A. In fact, here I applied the concept of rebate. But since it is more than 5 lakh, I said rebate is not applicable. No, rebate is not there. No rebate. 87A is only for residents. Here I accidentally told rebate concept also. Of course, I didn't deduct, but I accidentally told no, rebate is not applicable for non-resident. Remember the question. Yes or no? Therefore, 10,100 plus 4%, 10,504, which means nearest round of. The answer is C. 10,504. Wait, don't worry, I will show you. So 5 lakh 2,000, right? This is the total income under optional tax regime. Remember, the SSE is a non-resident. Whenever you are computing tax, keep in mind he is a non-resident. Okay, optional tax regime. First 2.5 lakh 0. Next 2.5 lakh 5%, 12,500. Yes or no? Next 2,000 rupees 20% is equal to 400. Total basic tax is 12,900. Am I right? Yes or no? Now, am I eligible for rebate? No. She is a non-resident. The question of rebate does not arise. Straight away, plus 4% is equal to 12,900 plus 4% is equal to 13,416. Correct? Then under the default tax regime. Okay. So directly first 3 lakh 0. Then remaining 2.02 lakh 5% is equal to 10,100. Total basic tax 10,100. No question of rebate. So plus 4%. Yes or no? 10,100 plus 4%. 10,504. Nearest to 10 rupees, 10,500 rupees. That's it. So the best lowest tax liability comes in default tax regime. So I will recommend him default tax regime. Option number C. Wrong. Again. Wait. If at all, if it is default tax regime. Correct only. Not an issue, because no, the third case is not the basis for us. For us, the basis is first case. Yeah. So in the first case, default tax regime, optional tax regime, income is not different. Suppose no, if the fourth question is asked as a continuation to third question, then income would have been 500, 5 lakh 500. So that we need to be. So 10,500. So option C, you see, non-resident. So he is a non-resident during the year. He is staying only for 160 days. All this easy, no? Then option 2, 505, then 500, then 10,500. That's it. Clear? No, it's all about recollecting the provisions at right time. You read it thoroughly and recollect it. That's why I always tell students to watch lectures in the same order given. What many students do, they just go to the chapter where they think they are not good at. Technically, they're not good at everything. They don't know that. So from the order, in the same order in which I gave, see, very simple. In income tax, if you're doing wrong, multiple times, if at all you're doing wrong in many questions, it's a very clear indication that you're not strong in provisions. When you're not strong in provisions and you've chosen our classes, I request sincerely to watch from day one. Watching the class itself is like 3x of your preparation, 3 times of your preparation. In that level of clarity I give. Marathon itself, you check. Why the first marathon got 1.7, 1.8, 2 lakh views. First marathon of mine. That's actually typically the seriously I did one first marathon, that one a color book based. 2 lakh views I got. Highest almost than many other topmost faculties. The only reason, the kind of clarity. Understood? Next, can I proceed further? Yeah. Case scenario 2. Mr. Suraj, 48 years, furnishes the following particulars for the year 24-25 in respect of his industrial undertaking in SEZ in March 2022. March 2018, he established in March 2018 industrial establishment. Yes or no? Whereas it began operations in 1819. So 1819, that's the first year. 1819, 1920, 2021, 2122, 2220, 23, 23, 24, 24, 25. Right now we are in previous year 24, 25. This is 7th year of operation. And you know, an SSC who is engaged in 10AA, who is eligible for 10AA exemption, first 5 years 100% of the export profit is exempted. Next 5 years 50% of the export profit is exempted. When you are calculating export turnover as a part of total turnover, only that turnover which is realized within 6 months from the end of the financial year, that should be convertible foreign exchange, we should realize. Only that will be considered as part of export turnover computation. Yeah, now you see, company total sales have given 85 lakh. Out of that, export sales are 45, but remember, proceeds were received by 30th September 2025, which means after 31st March, within 6 months it is received, which means this entire 45 lakhs can be considered. Sometimes, no, 40 lakhs only received by 30th September, they will say. Then 40 only we should consider it as export turnover. But in this case, entire 45 lakhs is export. And domestic sales is balance income, obviously. And profit is totally 20 lakh. Export sales includes freight and insurance of 5 lakhs for delivery of goods outside India. A freight and insurance, I think we can include, not an issue. Export turnover, or no? Yeah. So by the way, once again, export sales is 45. It include freight charges. Okay, fine. Freight charges and insurance. While calculating export turnover, we should exclude freight charges. So the turnover is only 40 lakh. Yeah, that's it. So here in our book also it is clearly given. You see, meaning of export turnover. It excludes freight charges, telecommunication, insurance related to delivery for the goods outside India, and foreign exchange expenses for services rendered outside India. Okay, the above shall be excluded from both export turnover and total turnover when calculating the deduction, as long as they relate to delivery of goods outside India. Very clear. Okay, so now, so generally we don't pay attention on these kinds of points when we are reading also, so we discuss in the class, but when you're solving you don't pay much when you're revising. But these kinds of problems, MCQs, they will remind you once again, so it will be a very good thing. So now, which means right now we need to take total sales 80 lakh, export sales we should take 40 lakh. Simple. Okay, now let's calculate the exemption. So how much is the export sale? First of all, let us calculate export profit. Export sale is 40 divided by total sale. Total sale is 80. And what is actual profit of the firm? 20 lakh. Yes or no? 20 lakh. So literally 10 lakhs is the export profit, correct? But they are in the 7th year of operation. So exemption under 10A is restricted to 5 lakh. 50% only they get exemption from 6th year to 10th year. 11th year to 15th year also they'll get 50% exemption up to, provided whatever amount they want to claim exemption, to that extent they need to transfer an amount to special economic zone reinvestment reserve, where that reserve has to be utilized within 3 years from the date of transfer for purchase of new plant and machinery. That's it. See, every time when a question comes, I'm also giving you corresponding little more explanation so that you will recollect. Next. So that's it. So exemption amount is how much? 5 lakhs. 10AA exemption amount is 5 lakhs. Am I right? Next, he received rent of 25,000 per month for a commercial property let out to Mr. Sudhir, a salaried individual. He earned interest on savings bank account 12.5 and interest on post office 5.5. You know, interest on post office is exempted up to 3.5. So balance 2,000 only taxable. Savings interest is 12.5. Total amount taxable under other sources is 14,500. And if it is optional tax regime, 80 TTA, 10,000 deduction is available under chapter 6A. Yes. Then, based on the facts, choose the following. Fine. He received rent of 25,000, right? Under optional tax regime, I will compute 25,000 multiplied by 12 months, 3 lakhs, minus 30% standard deduction. Municipal taxes paid, information not given. Income from house property is 2.1 lakh. Agreed? Yes or no? Huh? 2.1 lakh. 2 lakh 10,000. Yes or no? 2 lakh 10,000. That's it. Now let's solve the questions. Compute the amount of export turnover and total turnover, 40 lakh and 80 lakh respectively. The answer is B, because freight charges and insurance are included. So that's why we will have to exclude it. Next. Compute the amount of deduction available to Suras under so and so 5 lakh. The answer is 5 lakh D. Yes or no? If at all he has shifted out of default tax regime, means he is choosing optional tax regime. We all know that 10AA exemption is available only under optional tax regime. If at all the SSC chooses default tax regime, there is no exemption at all. Yes or no? Next, assume for the purpose of this question only for this question, third question purpose itself, Suraj established SEZ and began manufacturing in 2020. Then this would have been his fifth year. 2020, 21, 21, 22, 22, 23, 23, 24, 24, 25. But it's 24, 25, 100%. A. Yes or no? Yes. Next. Compute the total income of Suraj for the year 24-25 if he has shifted out of default tax regime. Means optional tax regime only is following. Total income is how much? 5 lakhs. Yes or no? Normally. Export this one. By the way, total profit of industrial undertaking 20 lakh. Correct? Minus 10AA exemption 5 lakh. Which means balance total income, balance business income this much. 2,10,000 is house property. 14,500 is other sources income. Yes or no? Remember optional tax regime they are saying. Okay, better we'll list it out here. So what is the amount actually? What is the amount here? 1 minute. Yeah. Yes or no? 14,500. So gross total income. How much more? 17 lakh? 14 lakh, 14,500 this one. Okay. Minus chapter 6A deduction and 80 TTA. The 10,000 is the maximum. Yes or no? So the answer is 17 lakh 14,500. Agreed. 17 lakh 14,500. That's it. Okay. So let us see the answers once. B, BD, AC. B, D. What is this? No deduction since Suraj has not begun manufacturing till. Array, 1 minute. We'll see on this. Don't worry. Okay. And C is correct answer. Key point. Okay. He began manufacturing in April 2020. Regarding this, there is one exception available. You see here, we have discussed this point also actually. I think 31st March 2019, some discussion we began. You see, if approval was granted by March 2020, operations can start by March 2021 or even later. So here I assume what I thought approval would have been granted. He started operations on April 2020 means probably approval would have been granted. Suppose if at all you take this assumption, since the question is silent, there is no approval. See, see, the unit must engage in manufacturing. They must start operations between 617 assessment year to 2021 assessment year. Nothing but 31st March 2019. That is the last date. Yes or no? Okay. Yeah, correct only. Okay. And if approval was granted, no, 20. Financial year 1920. That's why 2020. Year end. Previous year end. Yes or no? So up to 31st March 2020, on or before 31st March 2020, you must begin the operation. However, if approval was granted, then operations can start by another 1 year late, no problem. Here, whether approval is granted or not, I did not take. So by default, what I assume 31st March 2021 time limit is there. Here April 2020 means I assumed that approval was granted. Here approval point is silent. Suppose if you take an assumption that approval was not granted, then no exemption at all, then the deduction will be nil. It depends on the assumption, but since here they have not spoken anything about approval thing, we assume that there is no approval. There is no approval. But you know what? Alternative assumption is also possible for this. Getting it? Examiner, if at all you selected nil in tomorrow in exam, maybe in the suggested answer probably reason, they might take an alternative view. Approval was also granted. But anyhow, I think this interpretation what they gave is logical. We can't assume something which is not given. Okay, regarding approval point, they didn't mention anything specifically. So we assume that there is no approval. Yes or no? So that's moreover a special task. Getting approval is an explicit requirement. Understood? It's not an automatic approval. Fine. So assuming that since operations were started after March 2020, they're not eligible for 10AA exemption. Very good. This is very good observation. Are you clear? That's it. Rest all other correct, right? Next case scenario 3. I hope easy, getting clarity. Yes. Next, Mr. Kishan is engaged in following activities on agricultural land situated in India. Total area of the land is 5 lakhs. So various activities. Activity A, he grows saplings or seedlings in a nursery spreading over 1 acre land. The sale proceeds of which are 5 lakh. Cost of plantation is 1 lakh 40. Basic operations are not performed for growing saplings or seedlings. It doesn't matter. Saplings or seedlings in a nursery. Yes or no? Directly exempted. Correct? See, in our book also it is there. Saplings, seedlings, you see. Where is it? We have given whether income from nursery constitute agriculture income. Yes, it qualifies as agriculture even if primary agriculture operations are not done on the land. Yes or no? Next, so there is no necessity of basic operations for saplings and seedlings in order to qualify for agriculture income definition. Yes or no? Therefore it is exempted. Next, he grows cotton on 3 acres land. 40% of the cotton produced is sold for 40 lakh. Okay, the cultivation cost of which is 2 lakh 25. So 4 lakh minus 2.25 lakh, balance is 1.75 lakh is agriculture income on cotton. Net agriculture income, this is important. This net agriculture income is important for the computing tax where aggregation is applicable. For that reason I computed and kept. The cost of cultivation of balance 60% cotton is 3.37, whose market value is 6 lakh, which is used for producing manufacturing yarn. Yarn is not an agriculture commodity. After incurring manufacturing, yarn is sold for 8 lakh 50. Yarn is a business income. So what is the sale value? 8 lakh 50. What is the further processing income? 1 lakh. Yes or no? And what is the market value of the input raw material used? 6 lakhs. Remember I told you input raw material market value we should take for calculating business income. 8 lakh 50 minus 7 lakh. Totally 1 lakh 50,000 is constituting business income. Further, this agriculture which is used as input, we will consider it as rule number 7, deemed sale value, minus that's cultivation cost is 3,37,500. So 2 lakh 52 or 62,500 is again agriculture income. So total agriculture income directly sold 1.75 lakh. On direct sale of cotton, 40% is directly sold. On that net agriculture income is this 2,62,500 plus 1,75,000 is equal to 4,37,500 is the total agriculture. 1,50,000 is the business income. Clear? Yes or no? Fine. Oh, there's only again here it is there. 5 lakhs also there. Activity A 5 lakhs agriculture income is there. Another 5 lakhs agriculture income is there from nursery. Exempted. I'm only totaling agriculture incomes. Here I'm only totaling agriculture incomes because they might ask you what is the total agriculture income from all the activities. For that reason I'm totaling and keeping it. They may ask, may not ask. Next, activity C, land measuring 1 acre is let out to Mr. Ramesh on a monthly rental of 15,000 which is used by him as below. 50% of the land is used for agriculture and 50 is used for lawn agriculture. Based on the facts of the case scenario, choose the most appropriate. In this 15,000 monthly rental, 1 lakh 80,000, 50%, 90,000 is used for agriculture purpose. Rent from land used for agriculture purpose is also agriculture income. This is also agriculture income. The other 90,000 I will call it as non-agriculture income and taxable under other sources because it comes under renting of vacant land. Renting of vacant land is taxable under income from other sources. That's it. Now we'll see. What is the amount of income arising from activity A that would constitute agriculture income? From activity A, the cost of plantation 1 lakh 40, 5 lakh. So 3 lakh 60 net income. Actually here we 5 lakhs. No, not 5 lakhs. It is 3 lakh 60. Net agriculture income only we should consider. Yes or no? So 3 lakh 60. Agreed. Next, what amount of income from activity B with respect to sale of cotton would constitute agriculture income and or business income in the hands of the Kishan? We already computed cotton related. So how much is the cotton related? Business income is 1 lakh 50. Okay. Agriculture income is no 2 lakh only from activity B. Yeah. No 2 lakh 62 plus 1 lakh 75. 2,62,000. It's okay, fine. So only from activity B, how much is there? You see activity B, 1,75,000. This is agriculture only, plus even remaining 60%. This difference, 2.62 lakh 500. That is also agriculture only. Both put together, 4,37,500. 1,75,000 agriculture income and 2,62,500 business income. I think probably no, they are asking only regarding sale of yarn context. We'll see the question once again. Sale of cotton only. I think this option is wrong. Option is wrong. They gave wrong answer. The actual answer is 4,37,500 because no 1,75,000 worth of direct cotton sale is there. That agriculture income they need to consider. They have given wrong answer. Fine. Whatever is available, C is best option. Next. What amount of income from activity B with respect to sale of yarn constitute agriculture income? Wait. Yes. Perfect. Now see, after looking at third question, now let's once again revisit the second question. Only from sale of cotton. What amount of income from activity with respect to sale of cotton would constitute agriculture? Only from sale of cotton, how much? Cotton is sold, no? 175. Now here, in activity with respect to sale of yarn, what amount of income from activity B with respect to sale of yarn constitute agriculture income and business income? Now we got 2,62,000 and 1,50,000. So the option B, perfect. You see, like they cleverly gave. Our analysis is right only, but just that we thought here total question we thought. Yes, but here they asked separately for a cotton sale and yarn sale. B, observation, very important, careful. So next. What amount of income arising from activity C constitute agriculture income or otherwise? Activity C is what actually? 90,000 only. 90,000 only agriculture income, correct? 90,000 would be agriculture and 90 will be other sources because it's a vacant land, not a farm building. If it is a farm building, use it for house property purpose, then 30% deduction would have been there. So the answer is D. Yes or no? Then compute the gross total income of Kishan for the year, assuming he has no other source of income. Gross total income is what? 90,000 from other sources, correct? Yes or no? Then he has 1,50,000 from 1,50,000 approximately from sale of yarn. Sale of yarn, how much here? We computed actually. 8,50,000, 1,50,000 sale of yarn. Yes or no? So total 1,50,000 plus 90, 2,40,000. Correct? I think there is no other income. Yeah, that's it. Option number A. I hope it should be right. What are they? C, C, B, D. See, I have not seen any answers still, honestly. The first time I'm downloading and then directly doing, because my thought process exactly has to be understood. You should understand how to think. If I already know the answer, I will be thinking like you. I mean, I will be thinking directly how without all the checkpoints. Okay, so that's the reason I'm directly looking and then doing it. Now, what are the answers? C, C, B, D, A. So C. Hey, first option we rectified, no? A. We rectified here. C. Second option A, no? We ticked no already. A. C, A, B. C, A, B, D, A. C, A, B, D. Perfect. And A. Perfect. All our answers are 100% right. Clear? Next. Then case scenario 4. Easy. Nice, no? All the points we are able to recollect. By solving this entire case study, you will recollect every provision. Literally every provision you will see how big problem this is. Salaries question. Oh my god. Literally they're asking a 14 marks question. This is supposed to be an 8 marks question. Supposed to be an 8 marks question. They asked it as a case study, but of course, since they have given 5 questions at 10 marks. Okay, fine. 10 marks means 20 minutes solving time, not an issue. Mr. Rajesh Sharma, aged 54 years, an Indian citizen, is working as assistant manager in ABC India Limited. He is getting a basic salary of 58,000 per month. He is used to travel frequently out of India for his work. He left India from Delhi airport on 5th October and returned to India on 2nd April. But still, 5th October only he left. In 24-25, more than 182 days. He's already resident. Yes or no? And since past year data information is not given, I assume that is ROR also. Is a resident and ordinarily resident. Automatically global income is taxable. Yes or no? And 54 years of age. Okay. Now let us see default tax regime, all that you see. Rajesh has exercised the option to shift out of default tax regime, which means optional tax regime. We should compute income from salary under optional tax regime. Next, now. So now let's directly compute. Okay. In our basic salary, how much it is? 58,000 multiplied by 12. How much it is? 6,96,000. Correct? Got it. Button got pressed. Yeah, 6,96,000. Right. Next. For the previous year 24-25, the following information was given. DA 10% of basic considered for retirement. Remember, DA is for retirement purpose. Yes or no? DA for retirement how much? 69,600, 10% only. Next, bonus 98,000, fully taxable. Yes or no? Bonus 98, 98,000. Okay. Next, medical allowance fully taxable. Medical allowance no exemption at all. Yes or no? Medical allowance how much it is? Sorry, 60,000. Next, all these are considered. Medical reimbursement for his mother amounting to 15,000. Yeah, mother related reimbursement. By the way, government hospital, that information not given, so I assume that it is a private reimbursement, fully taxable. Remember, medical reimbursement is different, medical allowance is different. For RFA, if at all rent free accommodation is there, for salary purpose calculation, taxable portion of allowances only has to consider. Reimbursement is a perquisite. Allowance comes within the definition of salary. Perquisite is different. Perquisite is not considered for the purpose of salary definition for computing valuation for perquisite. Yes or no? So how much is the medical reimbursement? 15,000. Some students know, they're thinking, sir, medical reimbursement up to 15,000 exempted. That was 2018-19 provision, not now. If at all you think that provision is there, you need to update your knowledge. That's was 2018-19 year. Now we are in 24-25 based problems. So medical reimbursement is fully taxable. Medical reimbursement is either exempted for certain things or fully taxable. That's it. There is no slab limit here. Next. Is there any? Yeah, it's okay, fine. He was also transferred a laptop by the company for 15,000 on 31st December. Okay, company gave him a laptop for 15,000 rupees on 31st December. Then the company purchased it. The laptop was acquired by the company on 1st October 2021. 1st October 2021 to 30th September 2022, 30th September 2023, 30th September 2024, 30th September 2025 not yet come. After 3 completed years, company laptop is given to employee at 15,000 rupees. So we'll see working note. Okay, so we'll see. So minus how much it was given for employee, 15,000. We need to calculate perquisite. Now what is the original cost of the laptop? 1 lakh. The company charging depreciation, that company rate is irrelevant. Completed years are 3. Yes or no? Completed years are 3. 1 lakh is the original cost. And remember, laptops and computers, electronic gadgets, directly the depreciation is, perquisite calculation depreciation is 50% on WDV basis. Yes or no? 25,000. Again third year, 12,500. So 12,500. So 12,500 is the value of laptop in the hands of the company, but given to employee at 15,000. Therefore, zero taxability. Negative you can't tax. Zero. So there is no perquisite involved. Yes or no? Zero taxability. So transfer of movable asset. Okay, transfer of movable asset. How much it is? Zero. The taxable amount is zero. Am I right? 50%, right? 50% WDV basis for electronic gadgets and computers. Yeah. Next. He was also reimbursed a salary of house servant 4,000 per month. You know, servant reimbursement 48,000. Correct? Next. Profession tax paid by employer. It's a perquisite first, then we need to reduce it below deduction. Profession tax paid. How much it is? 2,400 we will add. Suppose if it is default tax, we will not reduce below. Okay, but here it is optional tax regime. He shifted out of default tax regime. Yes or no? Shifted out of default tax. Yes. So 2 4 we considered, again 2 4 at last we need to reduce. We need to remember. Okay. 400 equity shares were allotted by company at 250 per share, where fair value is 350. 100 rupees margin multiplied by 400 is equal to 40,000 rupees. Yes or no? So what is it? Sweat equity or ESOP. Okay, 40,000 rupees. Then short term capital gain, that's a gain, that's a capital gain. Okay, that will have to compute separately. Now let's calculate total amount. What is the gross salary? Gross salary 6,96,000 plus 69,600 plus 98,000 plus 60,000 plus 15,000 plus 48,000 plus 2,400 plus 40,000 is equal to 10 lakh. 10,29,000 minus standard deduction 50,000 rupees. Remember, it's an optional tax regime, minus profession tax paid 2,400. Therefore 9,81,400. just check once again. 10 lakh 20, wait, 10 9 lakh 79. Yeah, correct ma, I only did wrong calculation. So 9 lakh 76,600. this is the income from salary under optional tax regime. Correct? Able to understand? Yes. Now again, by the way, short term capital gain on sale of shares, short term capital gain on sale of shares for May 24 listed companies 94,000. 94,000 is 111A gain, which is taxable at 15% tax rate. Sorry. When the sale happened? Oh, May 2024. This was before 23rd July. The sale happened before 23rd July. And if the sale is happened before 23rd July, the tax rate is 15%. With effect from 23rd July, the tax rate is 20%. Just okay, don't worry, we'll see this. Okay, you need to be clear. 111A, where is it? 111A. Okay, fine, here we'll see. You see here 111A, the transfer is before 23rd July, 15%. If the transfer is on or after 23rd July, the tax rate is 20. Very important for computing tax. Here the sale happened in May 2024, before 23rd July 2024. Therefore the capital gain is taxable at 15%. How critical. These are the places where students do mistake. Understood? That's why very intensely you need to watch the income tax whenever you're watching the class. Next, what is Rajesh Sharma's residential status? He's a resident and ordinarily resident. See, actually here no, past year data they have not given. Okay, he used to travel frequently out of India for work, they said. He left India from Delhi and returned on 2nd April. Okay, so but what I assume is every year 180 days if at all he stayed, that's enough. He would have become ROR. So on that logic, I'm taking here one assumption that in the past 7 years is more than 730 days. In the past 10 years is resident for at least 2 years. I'm taking these two assumptions. Therefore, he's an ROR. That's what logically the question is also sounding. Very good. I think here they have given one option. Sorry. Okay. I think better always read all the 4 options. Is a resident but cannot determine resident and ordinary resident, or resident but not ordinary resident from the given. Perfect answer. That's A. Okay. What are, for example, here one question. Frequently, instead of like this, first time went out of India. If at all first time word is used and that time also this point is there, you should not select. That time you should be careful. Frequently is going out nala. I mean, since is going frequently out, we need to be careful. Okay. Yes. What are his taxable perquisites? Only perquisites they are asking. Perquisites, what are they? Servant reimbursement is a perquisite. Medical reimbursement is a perquisite. Bonus and all or allowances, DA is allowance, all that. How much it is? 63,000. How much is the answer? 63. Array, what happened? No. Profession tax paid, reimbursed. That also we need to consider. No? Wait. Hey, what is this? This is what? 40,000? Hey, ESOP, sweat equity. Yeah, that also perquisite only. No? 17 subsection 3 definition. No? 63,000 plus 40,000. How much it is? 1,03,000. Their option. Thank God. You be careful. See how they are asking so cleverly the questions. You see, so on a perquisite value, how much also they are asking means under 17 subsection, these three only will come. These three only will come. You know, profession tax paid is not a perquisite; it's just a reimbursement. So no, medical elements, these are all not taxable. Correct? Actually, 1 minute. Reimbursements also comes within the definition of perquisite. Obligation of you met by employer. See, perquisite definition is what? Facility is a perquisite. Your obligation, if I am meeting, that is also perquisite. Profession tax is your obligation, but I am meeting it. It's a perquisite. Yes, profession tax is not an allowance, right? See, what is a perquisite? Simple definition I'll give you. I even told in the class also, anything which is not an allowance. Allowance means what? Salary, basic, D, all this I'll give you. I don't bother for what purpose you're spending. I don't even ask any proof. Reimbursement means what? Exactly. Or I will pay on your behalf to directly that purpose. They are all perquisites. This is also perquisite. Profession tax is also perquisite. One important concept we learned. This observation we didn't made in the class specifically. Okay, but we know it. So medical reimbursement is a perquisite. Servant related salary paid, perquisite. Profession tax paid, perquisite. And ESOP is also perquisite. All these four are perquisites only, because here there is an actual expenditure incurred. Yes or no? And because of that we are reimbursing or we are bearing it directly. It's a perquisite. Suppose if I give you money and I'm not bothered what you're doing, that's an allowance. Getting it? Yeah. So 105, 400. That's my answer actually. Because that is what my answer is. We'll see. We don't know whether 103 or 105. Even I'm having little confusion. Profession tax paid by employer, is it treated as perquisite or not? I'm also confused, but my strong logic is profession tax paid is an employee obligation, company is bearing. It's a perquisite definition. Next, what is the income chargeable under that salary? 976,600. We already computed, right? So no, 976,600. Next, total tax. See the answer. Capital gains, if at all you miss, you will be getting a wrong answer. Now, by the way, here the SSC is optional tax regime, correct? So, wait. Now, 9,76,000 is income from salary. Capital gain income, how much ma? 90,000. Correct? Short term capital gain, how much it is? 94,000. 94,000. Is there any agriculture income anywhere? Additional information like that? They have given nothing. Okay? Nothing. So total income is what? Anyhow, even when we total also, we anyhow splitting only. 94,000 special incomes taxable under 111A, that too taxable at 15% because the transfer happened before 23rd July 2024. And balance 9,76,000 is income taxable at normal rates. And SSC is choosing optional tax regime. Yes or no? Up to 5 lakhs it is 12,500 plus 4,76,000. Balance income is taxable at 20%. 95,200. So total basic tax. So 1,07,700. Correct? Here 94,000 into 15%. 14,100. So total basic tax. Yeah, 1,21,800 plus directly 4%. 1,26,672. That's it. Nothing but 1,26,670 rounded off. Correct? 1,26,670. They rounded off to nearest 100. That logic we can take. 1,26,800 is what the nearest answer. But oh, how much we have taken? Correct. 600 into 20%, you added 120. Automatically it will come to this one. Yeah. I think 976 600. Sorry. Here 976 600 man. Okay. Into 20% is equal to 95,320. Correct? So 12,500 plus 95,320 plus 14,100, yes or no, plus 4% is equal to 1,26,796 rounded off to 1,26,800. Correct? We should be very careful. Okay, so option number A. Then any other question? Oh, one more question also there. What would be the total tax liability if at all he does not exercise option of shifting of default tax? We should kill them. Yes or no? If at all he does not exercise, means default tax. Again, I should compute income. Now, so again we should compute default tax regime income. So actual is 9,76,600 plus profession tax deduction they won't get. That's what I'm adding back. I'm arriving. Okay. Then is there any other adjustment pertaining to regime? That's it. Profession tax paid only the adjustment. Correct? No. 75,000 flat deduction no under default tax regime. So which means I should reduce extra 25,000. So no, see, this should become 75, which means 25 I should reduce from this. This no deduction. So I will add back. So what is the salary income now? 9,76,600 plus 25. Sorry, 9,76,600 plus 2,400 minus 25,000 is equal to 9,54,000. Correct? Now let us compute the tax. 9,54,000 optional, sorry, default tax regime up to 327 5%, nothing but 20,000. 7 to 10. Okay, 7 to 10 means here 2,54,000 only there into 10%, 25,400. Total taxes 45,400. Correct? Then capital gains tax is how much? Same only, 14,100. So what is the total tax? 45,400 plus 14,100 is equal to 59,500 plus 4% is equal to 61,880. That's it. Fantastic, no question? So ACAA, ACAAD, ACAA, thank God, D. Perfect. All the questions we computed correctly. Easy or not? How many we solved? Actually 4 case studies, almost 50 minutes it crossed. Okay, but see how quickly we are able to solve just because we are having tremendous command on the provisions. No, but sometimes we are little hurrying up. Let's not do that. Let's be careful at every point here on. Okay, we should not even go backward one step also. We should not go back. So let us be more accurate from here on. Okay, that's it. We'll take small break and then continue in the next session. Yes, case scenario 5. So Hardik, 45 years, is appointed as Senior Executive Officer in Sky India Limited, Mumbai on 1st February 2024 in a scale of 35,000, 3,560. Like starting salary is 35,000. 1st February 2024 he was appointed. Remember 23-24 years appointed. 24-25 means 1st April 2024 to 31st March 2025. This is the year for which we are doing. And 3,500 indicates for every one completed year 3,500 increment will be there. Understood? Now for example 1st April 2025, right, up to 31st January 2026, sorry, 24 to 25. Yes or no? For these 10 months 35,000 is his salary multiplied by 10 months, 3,50,000. Whereas for February and March 38,500 salary for 2 months. Yes or no? Yes or no? Now 38 to 76, 77,000, right? So total 4,27,000 is the basic salary. Correct? Just once you check out, 38,500 into 2 is equal to 77,000 plus 3,50,000 is equal to, yes, perfect. So 1st February 2024 means last year. Now the year is 24-25. So up to 31st January 2025 means 1st February 2025, 1 year completes for him. So up to the 10 months, first 10 months of this year, 35,000 salary will be there. Last 2 months will be 38,500 salary will be there. So you need to be careful. He is paid DNS elements, which is 40% of salary. By the way, this is called pay scale. Starting salary will be 35,000, every year 3,500 until it reaches 65,000. That's what the meaning. Okay, pay scale we call it as. Now he is paid DA 40% of the salary. Fine, let me directly conclude. Let me directly start. Basic salary, how much it is? 4,27,000. Then DA 40%, right? 4,27,000 into 40%. 1,70,800. Next, he is given forming part of retirement. Just I was about to think. Okay, retirement benefits. Next, He is given unfurnished accommodation on 1st October 2024. The company is paying a lease of 5,000. It's a furnished, unfurnished, whatever it is, leased accommodation. Company taken on lease and then paying this. By the way, the company is Sky India Limited. They didn't say anything government or non-government, so it's a non-government company. Fine. But remember, accommodation valuation you must always do at last. Even in the class I told, rent-free accommodation valuation, working note 1, we will do at last. Next. He has been provided a car of the above 1.6 liter capacity which is used by him for private purpose only. The actual cost of the car is 8 lakhs. The monthly expenditure of the car is 5,000 which is fully met by the company only. The car is owned by the employer. Fully private purpose. It's coming under use of movable asset. 8 lakh into 10% per annum is equal to 80,000 for car usage plus 5,000 rupees is the monthly expenditure. So approximately 12 months, 60,000. The total perquisite towards car is 1,40,000. This is perquisite valuation. And did the employee fully met by employer? So employee did not pay single rupee in return. So total 1,40,000 will be perquisite. Yes or no? So 1,40,000. Remember, this is a perquisite. This is a perquisite, not an allowance. Yes or no? Next. He pays lump sum premium of 1,20,000 towards health insurance for self and his wife 43 years for 48 months. On 1st October 2024, he paid for 48 months by account to pay check. He also contributed 1,50,000. Now, when multiple year premium policies were there, 80D, it talks about 80D provision, total premium paid divided by number of previous years involved. For example, now here this is 80D deduction. Okay, 80D deduction. So I think 80D I'll calculate as a working note 2. Okay, working note 2, how much is paying? 48,000 divided by many students to 4 years. Wrong. How much it is paid for? Oh, 1,20,000. Sorry, 1,20,000 he paid. 1,20,000 he paid. Many students, what they will do, they will divide it with 4 years. That's wrong. That's not how you should divide. Divided by relevant previous years involved. Now he paid on 1st October 24, right? Okay, now this policy is valid for 48 months. Means 30th September 2028. 25, 26, 27, 28. So now how many years involved in this? 24, 25 involved, 25, 26 involved, 26, 27 involved, 27, 28 involved, 28, 29 involved. The number of years involved is 5. I'm not talking about number of years policy valid. I am talking about the policy spread in how many years? 5 years it was spread in. Are you getting it? It is coming part of 5 previous years. It is coming. Yes or no? 24 October comes under 24, 25. 28 September comes under 28, 29. In between years also policy is in existence. So the policy is in existence overall in 5 years it was in existence. I'm not saying it is existence for 5 years. It is existing in 5 years it is existing. Yes or no? Now 1,20,000 divided by 5. Now for this I clearly mentioned in our book also. See 80D. 80D. Yeah, you see in this, see here. Yeah, 1 divided by, you see here, 80D. If lump sum premium paid to keep health insurance policy for more than 1 year, the deduction is allowed at appropriate fraction for each year. 1 divided by total number of previous years. The year in which lump sum premium is paid plus the subsequent years during which the policy is remaining in force. 1 divided by number of years. That's it. It's not 1 divided by policy duration 4. No, not that. That's not how it is calculated. So 1,20,000 divided by 5 is equal to, yeah, 24,000 is the deduction under 80D for this particular year. And remember, now here the SSE is 43 years. Yes or no? Maximum deduction for the SSE category and his wife together in this year is only 25. Huh? Oh, no, his age is, it's given 45. Okay, 45. Both of them are normal citizens. Therefore, maximum premium deduction is 25,000 only. And anyhow, the premium amount here comes to 24 only. So not an issue. Yes. All this discussion unnecessary. He wants to pay tax and default tax regime. But in the MCQ below, they might be asking optional tax regime also. It is better for us to compute and keep. Okay, 80D for this year, 80D for this year 24,000, 80C 1,50,000 public provident fund, correct? That's it. Next, all the information we considered. Now finally RFA, furnished accommodation valuation, we need to now working note 1, accommodation valuation, RFA calculation, rent free accommodation, yes or no, lease accommodation 10% of salary or lease amount whichever is lower. 10% of salary. Salary means basic plus DA for retirement, any commission plus bonus plus taxable portion of allowances. This is the definition. Basic 4,27,000. DA how much it is? 1,70,800. 1,70,800. Correct? Commission 0. Bonus they have not given. Taxable portion of allowances nothing is there. So total salary is what? Total salary is 5,97,800. Now lease amount paid monthly how much? Lease amount paid monthly how much? 5,000 per month into 12 months. By the way, this is salary. 10% means 59,780. 12 months lease amount. By the way, no. Here the accommodation is provided in October, 6 months soon. Fantastic. We did wrong here. We should take only 6 months salary from October onwards. October to January, how much is salary? 35,000 multiplied by October, November, December, January 4. 38,500 multiplied by 2. What is October month to March month salary? 35,000 into 4, 1,40,000 plus this one is approximately 77,000. 2,17,000 plus 40% DA. For that period only you should consider. Some students what they do, since 1st October is there, 4,27,000 by 2 they will put. No. Because here October to March salary composition is different. April to September salary is 35 only every month, whereas October to March it is not monthly 35. In between increment is there. You have to be careful. For the relevant period only you should take the details. Yes or no? So 2,17,000 plus 40% is equal to 3,03,800, and there is no allowances information in this question at all. Therefore this itself is salary. Now perquisite is 10% of salary. Yes or no? Salary is equal to 30,380, and lease rental 5,000 they are paying for 6 months. 30,000 whichever is lower. 30,000 is the perquisite value. RFA value is how much? 30,000. By the way, did the company recover anything from the employee? No. That's it. That information is not given. Correct? See how complicated this question is. Okay, it's not that easy. That RFA calculation many will miss. For example, employee was given RFA for May, June, July. You should take salary information of May, June, July only. If employee was given accommodation from October to March, you should take salary corresponding from October to March only. Very, very important. I told this as on a relevant period salary only you should take. Next, now gross salary how much? Gross salary how much? 7,08,000 minus optional tax regime. So flat 75,000 deduction. Sorry, default tax regime. Default tax regime SSC chosen. Therefore income from salary how much? 7,60,000. How much ma? 6,92,800. And since it's a default tax regime, no chapter 6A deductions. Directly this itself is the total income. Correct? Now let's look at the answer. What would be the value of the rent free accommodation? 30,000. Correct? Next. What amount of health insurance premium paid during the year? If at all we did not calculate like that. For example, no, if at all 4,27,000 basic salary plus 40% divided by 2 if you put 2,98,900 will come into 10%, 29,890 will come answer. If at all you do by mistake, if you forget that fact, by 2 if you put 6 months. So this is answer, right answer. Next. What amount of health insurance premium paid during the year can be claimed as deduction while computed to if at all he exercise shifting out? 24,000. Yes or no? Next, what would be the perquisite value of the car chargeable to tax in the hands of Hardik? 140. Yes or no? Next, would you advise Hardik to exercise option of shifting out of default tax regime? Oh, now we need to compute tax here. Okay, we need to compute tax here. So fine, 6,92,000, right? Yes or no? 6,92,000. So under default tax regime, I will compute tax up to 3 lakhs, no tax. Yes or no? 3,92,800 multiplied by 5%. 19,640 plus no rebate. I mean, sorry. He's a resident. Total income is not exceeding 7 lakh. Therefore, up to 25,000 rebate available. Therefore, the tax amount is 0. Read. Now we'll see optional tax regime also we'll try to compute. In optional tax regime, first income we will compute 6,92,800. But in optional tax regime, no, you will get 50,000 only deduction. So you need to add back 25,000. 6,92,800 plus 25,000 is equal to 7,17,800. Correct? Minus chapter 6 deduction you will get right 1,50,000. Correct? Minus 80 also you will get right 24. Therefore, 1,50,000 minus 24,000. How much it is? 5,43,800. Pakka tax will come. Rebate also will not come because in optional tax regime 5 lakhs is only threshold for rebate. Pakka tax will come. Some amount will be there. Nilla some amount. Nil. Therefore, default tax regime is the best answer. Yes or no? So what will be the answer? Should exercise option of shifting out. Yeah, should exercise option of shifting out of the default tax regime and pays tax under. No, not shifting out. Should not exercise. He should not exercise option of shifting out since as per default tax limit is nil. Easy. Fantastic. So no, that RFA for relevant period only you should consider. Yes. Therefore, so DCD, right? Perfect. Yes or no? That's it. Next case scenario 6. Okay, just 2 minutes. Yes, next case scenario 6. Ananya Gupta, a citizen of India, lives with her family in New York since the year 2000. She visited India from 21st March to 20th September 2024. In this year, 1st April to 20th September 2024, exactly 181 days that is. 29th September will be 182nd day, I guess. Yeah, once again you see, April 30, May 31, June 30, July 31, August 31, September 28, 181 only. So no, September 28 only she is in India to take care of her ailing mother in the last 4 years. So she visited India only up to 20 September. Then after she is not there, means 182 days. Okay. In the last 4 years, she has been visiting India for 100 days every year to be with her mother. She owns an apartment at New York which is used for her residence. By the way, remember she is a visiting Indian citizen. Special residential status concept we can apply. 182 days not logic not satisfied. Basic condition to 60 days logic we can't apply. But since he is an Indian citizen or a person of Indian origin visiting India, 120 days logic we can apply. 120 days or more during the year? Yes. Plus every year 100 days is coming? Yes. Means last 4 years 365 days or more? Yes. Plus third condition, special resident status. If Indian source income is exceeding 15 lakh, therefore she will be a resident but not ordinary resident. So be careful. Now, okay. So fine. 120 days logic satisfied, 365 days logic satisfied, 15 lakh income logic alone we should find out. Fine, we'll see. The expected rent of the house is 32,000 per annum. The value of 1 USD may be taken at 75. There is actually, New York house. That's not an Indian source income. Municipal taxes paid is in New York. So whether this will be taxable or not, residential status will decide. Yes or no? Moreover, she can only become R&O. R-O concept not at all possible. Yes or no? Therefore, R-O concept is not at all possible. Either she become R&O or non-resident. Any of these two. So this foreign income will not be taxable at all for her. Because, yes, because, municipal taxes are paid there, rent amount is there only, everything is there only. Yes or no? By the way, here, he owns an apartment at New York which is used as residence, self-occupied. Self-occupied. Even if it is self-occupied, source is outside. There is no receipt also here. So the concept of taxation will not apply. Okay, fine. Next. She took ownership and possession of her house in New Delhi on 25th March 2024 for self-occupation while she is in India. The municipal valuation is 4,20,000 and fair rent is 4,50,000. She paid property tax of 22,000 to Municipal Corporation of Delhi on 21st March. Means within the year she paid. Amma, within 24-25, within the year only she paid. She had taken a loan of 16 lakhs, 10% per annum from IDBI Bank on 1st April for constructing this house, and the construction got completed on 20th March 2024. Means PCPA is PCPA ends on 21st March 2023. Loan was borrowed on 1st April 2020. Yes or no? Yes. No amount of loan has been repaid to the principal so far, means full principal is outstanding. The house is vacant for rest of the year, October to March. Like, what is she doing? Okay, fine. She's visiting up to September, right? Then after she's renting her, no, it's vacant. Either it is self-occupied or unoccupied. Throughout the year, she's not getting any benefit. So NAV is equal to 0 benefit can be taken. Yes or no? Throughout the year, she is not renting it. NAV is equal to 0 benefit can be taken. And like this, she can take benefit for 2 properties. US property also her own apartment. She is using for residence. NAV there 0, here also 0. No problem at all. Yes or no? And SSC can claim 2 properties. Oh, there is another house is there here. He had a house property in Mumbai. One is New Delhi property, one is US property. Third house is Mumbai, which she has sold on 28th March. In respect of this house, she received arrears of rent. This amount has not been charged to tax. Okay, she sold last year itself this house. But this year, 4th February 2025, she received arrears. 3 lakh minus 30% is equal to 2 lakh 10,000 is the house property income. That's it. Yes or no? By the way, wants to exercise option of shifting out. Oh, optional tax regime. Optional tax regime means for self-occupied property, you can claim 24 deduction. Whereas this property, since then source of income is outside, this is not at all liable for tax. And moreover, nowhere there's an indication she does not have any other source of income in India. So Indian source only 2 lakh 10. Since it is less than 50 lakh. Special residential status also not satisfied. Therefore, non-resident. Yes, exactly. She is a non-resident. I told you she might become RNOR. Okay. First case, so she is a non-resident. For a non-resident, only Indian income is taxable or receipt in India must be taxable. Only these two. If a source is outside, not at all taxable. Yes or no? Now let's compute. Based on the facts given in the scenario, choose the appropriate answer. Now we'll compute. So now house property for New Delhi, yes or no? NAV is equal to 0 minus interest on loan. This is working note 1. Okay. Now interest on loan, PCP period 1st April 2022, 31st March 23, which is exactly 3 years. Yes or no? What is the outstanding loan? What is the outstanding loan actually? 16 lakhs. She had taken 16 lakhs loan, 10%. 16 lakhs into 10% into 3 years. Correct? 4,80,000. This she can claim in 5 installments deduction. How much? 96,000 per year for 23-24 first year, 24-25. So we are in the second year actually right now. Okay, so 96,000. Then and further remember, this entire 16 lakhs is still outstanding even in this year also. This current year interest will be there, which is 1,60,000. Total interest is how much? 2,40,000. Yeah, 2,56,000 is total interest. But remember, this property maximum deduction is 2 lakhs. For a self-occupied property, maximum deduction where NAV is equal to 0 is 2 lakhs. Yes or no? By the way, remember, she is optional tax regime. 2 lakhs. And she has an arrears of rent received, which is 2,10,000. Net income is just 10,000. Array Indian source of income is just 10,000. 120 days or more is there, 365 days or more is there. Indian income is less than 15 lakh. Therefore, she is a non-resident. And for a non-resident, only this 10,000 is taxable. Agreed? What would be the residential status? Non-resident. Non-resident. We decided, yes or no? Next. Ms. Ananya Gupta can claim benefit of nil value under 23(2) in respect of her Delhi house alone or New York house, since it is more beneficial? No. Both Delhi house and New York house, since benefit of NAV is available in respect of 2 properties. So no, both she can claim NAV is equal to 0, not an issue. Are you getting it? Now here some students might get it out. Sir, the one property is outside India, that is not at all liable for tax, That is not at all liable for tax, Yeah, it is not liable for tax at all. But how many properties you can claim NAV is equal to 0? Whether that is taxable property or non-taxable property, it doesn't matter. You can claim NAV is equal to 0 for that and this. That's it. For 2 houses. There is already self-occupied, NAV is equal to 0 probably. Yes or no? But that is not taxable at all here. Next. Yeah. What is the income chargeable under the head income? Yeah, 10,000. You see, Like many students will confuse. What 10,000? Surprise. No, they'll set off. They forget to set off. Assuming that for the purpose of this question alone, Ananya Gupta has let out her flat in New York during the 6 months when she is in India for a sum of $6,000 per dollar per month. Okay, such rent was received in bank account in New York and then remitted to India through approved channel. What would be the income under house property chargeable tax in India? 10,000 only. Why? She is a non-resident. That income is moreover received in New York only. It is not received in India to get taxed. Therefore, 10,000 only. Very good. Fantastic question. So the answer D, non-resident or Delhi house. I was thinking actually. I was thinking this answer. Why? Because no, New York house is not at all accessible no in India. So New York house is not at all accessible for tax. You will ignore it. You will ignore it. Technically, yeah, that logic we can take. Actually, that's correct logic. I was thinking actually because no, the New York property is outside India. She is a non-resident. That is not at all liable for Indian income tax at all. Obviously, it won't come within the purview of income tax logic at all. Therefore, we can take the consideration that her Delhi house, because New York property is not at all subject to tax. So, is it let out self-occupied? It doesn't matter. But suppose if it is self-occupied there and not at all liable for tax. In India, she has one more self-occupied property. Are you getting it? Now that is self-occupied, this is self-occupied, that is self-occupied. Any two houses only she can show SOP. That I will show LOP. In the abroad, I will not claim that SOP. I will not show it as SOP, only Indian properties. So I think here I can make a rule like this. When the SSC is a non-resident, when they have a house property outside India, whether it is self-occupied, let out, or that and all, doesn't matter, ignore it. Only property situated in India, NA is equal to 0 logic, that to two houses you can claim. I think we can conclude like this. When the SSC is a non-resident or RNOR, foreign properties are not at all liable for tax, whether they are let out or self-occupied, doesn't matter. Then NA is equal to 0, we can take for two properties, right? Indian properties we can interpret. Best. That on that logic it is given. We'll see the answer below, what they have given. Since Mr. Nanya Gupta is a non-resident, income which is accrued or deemed to be accrued in India would only be taxable. Accordingly, her apartment at New York would not fall within the scope of total income. We actually considered this. We actually understood this. But the point is, NA is equal to 0, we can claim. No. Because accessibility itself will not come. Income Tax Act itself is not applicable. Where is the question of NA is equal to 0? That logic is actually correct. Very good learning. Yes or no? Very good learning. Because sometimes we might think this is safest option. We feel this is safe option and we selected. Actually, the logic is correct. That New York property is not at all liable for tax. That's it. So this is correct answer. Clear? Because since the property is situated outside India, then the income is not deemed to accrue or arise in India. When an income is deemed to accrue or arise in India, when the property is situated in India, only for Indian properties, NA is equal to 0 for two properties we can claim. That too, no benefit is coming from that. It is not at all rented. Then only. Next, then 10,000, option A. That also we calculated correctly. Here, in fact, we applied that logic and then calculated. Yes or no? Even if the New York property is rented, it doesn't matter because that property itself is not accessible. We correctly applied the logic. We chosen wrongly here for a safer approach. We thought this is safer answer. No, but actually this is correct answer. Fantastic question. This is fantastic question. We obviously opt for D. Somewhere in the back of our mind, whether they will be thinking this logic or not will be doubtful. That's why. So A is correct answer. Clear? That's it. One important learning. See, this is something only when you're solving case scenarios and MCQs you will have this kind of learning. If at all you didn't solve this, you will not get this much of clarity. Even for a faculty like us also. Getting it? Next. Case scenario 7. Ram Builders and Developers is the sole proprietorship concern of Mr. Ram. Okay. Is the sole proprietorship concern of Mr. Ram. Okay. He's the sole proprietor. The main business of the concern is construction, development and sale of residential and commercial units. The developers developed a project named Luxuria Heaven which had both residential and commercial units with its own funds. It obtained a certificate of completion for the said project with effect from 31st March 2024. Ram sold majority of its residential units and the commercial units in financial year 24-25. Okay. However, around 30 units and 15 commercial units were held by him as a stock in trade. You remember, completion certificate when it was obtained, 31st March in that year. 31st March only na, means end of the year also 31st March only. From there 2 years. From there 2 years. These properties will not be liable for house property head of income. After 2 years, they will be treated as deemed let out properties. They will be accessible for house property. If they are actually let out, rental income. Otherwise, you will treat them as deemed let out properties and tax it under house property. Remember this. The provision is 23 subsection 5. 23 subsection 5, stock in trade. For 2 years relaxation is there. Next. Okay. During this period, there was a slump, means real estate, means decline. In order to earn some income from these units, Ram incidentally let out some of these units held as stock in trade. Mistake he did. He started renting. You know, when you did not rent only, they will be considered stock in trade for 2 years and not at all accessible. But if at all you rented them, it will come under house property purview. Yes or no? The details of units constructed, sold and held as stock in trade is given below. Fantastic. Residential unit, total 100, sold 70, units held as stock in trade 30, units let out only 10, units vacant throughout the year 20. So this I am not worried. Units lent during let out, the only this 10 I'll consider 10,000 per month, actual rent per month in respect of let out units. Yes or no? And then commercial units 5 we rented out 18,000 per month. Correct? We'll see, we'll show you the provision also. Out of the residential units sold units, okay, 5 residential units were sold to his friend Mr. Gaurav, who is also a real estate developer, on 15th February for 20 lakh each. The stamp duty value on the date was 23 lakh each. Fantastic. 43 CA section, 50C corresponding section in PGBP. Okay, we'll see, wait, we'll tell you. However, the agreement of sale was entered into on 1st November, on which date stamp duty value was 22 lakhs and Ram received 1 lakh by advance by account pay check. Therefore, stamp duty value for this purpose is 22 lakhs. 22 lakh. And is 22 lakh more than or equal to 10% of 20 lakh? Yes. Yes or no? You see, 43 CA. 43 CA. I showed this. Okay, it actually exceeds only. Is stamp duty value exceeding 110%, then stamp duty. But here you see, this is very accurate value. Here you see, it's only more than. SDV how much? 22. Actual consideration 20. 20 into 110%, 22. Both are equal, not exceeding. Therefore, actual consideration 20 lakhs only will be treated as consideration for PGBP purpose. Yes or no? PGBP purpose. Fantastic question it is. Yes or no? Fantastic. Like till date we have not solved this kind of, you know, pin dot like dot question. This is fine. We'll see. Next, based on the facts of the scenario, appropriate while computing total income from the income from residential commercial unit let out will be taxed under income from house property. They are taxable under house property. Yes or no? Now you see, income from let out of residential, house property, commercial. No, it doesn't differentiate. House property head of income doesn't differentiate the purpose for which property is used by tenant. Yes or no? Then what would be the tax treatment for vacant residential and commercials held on 31st March 2025? They will be nothing, no tax treatment. Vacant units is treated as stock in trade and can never be deemed to be let out at any point of time, not even at any point of time. That is also wrong. The annual value of both vacant and commercial units would be nil for this year. Correct. Hence, no income is chargeable for these units under for this year. Is correct. C is correct. Actually, this is deemed and never be deemed. These wordings are wrong. Okay, but this is more accurate. Yes or no? So the annual value will be nil. I will show you 23 subsection 5. Okay. Completion certificate. Yes. Now in this charging section itself, there itself we will use. You see here, property held as stock in trade. Annual value is nil. Means they are liable for house property only, but we will treat annual value nil for 2 years from the end of the year in which completion certificate is obtained, provided if the property is not rented. Suppose if it is property is rented, nil value will not apply. Automatically let out value we will compute. Yes or no? Superb question this is actually. What would be the full value of consideration in respect of sale of units to Gaurav for the purpose of computing PGBP? 22 lakhs only. 20 lakh only. For Gaurav, 5 flats were sold, so 1 crore. How many to Gaurav we sold? 5 units were sold to Gaurav, and 20 lakhs is what we consider. Therefore, 1 crore is the value, correct? 1 crore, option number A. Why? Stamp duty value 22 lakhs will apply here, but that 22 lakhs is not exceeding 110% of the consideration. It is equal, not exceeding. Since it is not exceeding, therefore, actual consideration we will take. So edge point this is. Assume that 1 lakh was paid in cash by Gaurav to Ram. Oh, if at all 1 lakh was paid by cash, stamp duty value on agreement date will not apply. Stamp duty value on registration date will apply. Stamp duty value on registration date is how much? 23 lakh. Appa. Since 23 lakh is more than 110% of consideration, then for 5 flats 23 we will take 115. Yes or no? 115. So I hope every one of you are able to understand. Okay, instead of account payee, what would be the income chargeable under 56 subsection 2 in the hands of the Gaurav? Fine. For Ram, who is the seller, 115 lakh is consideration. Gaurav, who is the buyer, for the buyer, remember Gaurav is also involved in fantastic question here. The fantastic question. Gaurav is also a real estate developer. For him, the house property purchased is is not a capital asset. Is not a capital asset. 56 subsection to gift provision attract when for the recipient the gift received is a capital asset. If the gift received is a capital asset in the hands of the recipient only, 56 subsection to other sources will apply. Now in this case, for Gaurav, under 56 how much is taxable? Nil. Not even that. Sorry, not this nil. This nil. Nil. Since 56 is not applicable in this case. Answer is T. Such a fantastic question. Case number 7. Yes or no? Case number 7 is fantastic. Solid question. You see, income from house property. Our answer is right. Okay. The annual value for vacant and will be nil. Option C. Right. We did correctly this. Next. Option A. 1 crore correct. Nil. Yes, it is not applicable. Clear? Such a logical question. This question is such a logical question. Like very beautiful question it is. Like question number, case number 7. Because on this on all these points we never had a practical question in our book. ICA book also nowhere it is there. Fantastic question this is given. Clear? That's it. Next. Case number 8. Case scenario 8. Just 1 minute. Yeah, next. Case scenario 8. For assessment year 25-26, Mr. Sonu submits the following information. Building in Chennai, building at Kochi. Okay. So here rent received is there in both the cases. Therefore both are let out properties. Okay. Now municipal taxes paid by tenant Ramu for building at Chennai and paid by Sonu for building at Kochi. For Chennai property tenant paid, so I will not consider this. And this I will consider. Sonu only paid, owner only paid. This I will consider. Repairs is irrelevant information because repairs and all flat 30% deduction. Land revenue paid, irrelevant point because all this insurance ignore. Yes or no? Next. And by the way, what are the Kochi? Okay, fine. Interest on borrowed loan for payment of municipal interest on loan borrowed for payment of municipal tax of house property, that is not allowed. Interest on loan is given as deduction only when you borrow for construction, purchase, repair, renovation, whatever it is. House property related purpose. Nature, let out for business. For what purpose the property is used by tenant doesn't matter. Completion of construction 1st April 1996. This is 2008. 1st April 1996 means maximum deduction for a let out self-occupied. No, that point is irrelevant. This date is irrelevant. This is relevant when for self-occupied property NAV is equal to 0. That time only 1/4/1999 is relevant in order to decide whether 30,000 limit applicable or 2 lakhs limit applicable for interest deduction. Understood? Sony is constructing one more building in Mumbai during the year. Okay. Raju, who is a film director, took on rent of that building under construction in Mumbai at 5,000 per month for his film shooting. Took on that building under construction. Okay. The construction of the said building would be completed by April 2025. Okay. Mr. Sonu is a real estate developer and letting out properties is not business of Sonu. Oh, he's a real estate developer and he's renting it. So it doesn't matter. Under construction property he's renting. Under construction property, if he's renting, will house property head of income apply? That is doubtful for me also, because there is no clarification on that. You know, in our book or ICA book, nobody's clarification is there. We'll see. We'll take a call here. So, by the way, he's a real estate developer and letting out property is not his business. Oh, that's okay. That's okay. The construction of the cell building would be completed by 2025. So, one more building in Mumbai. I think regarding this only tax treatment they will ask, because the information is not clear regarding computation. Okay, fine. Fine. So first let us see the questions and accordingly decide the answer without much stressing about it. Which of the buildings income is chargeable to tax under that income from house property for Sonu? All the three buildings. All the three buildings. Real estate property also is giving, no? Yes or no? Real estate properties also is giving. Because, but it is under construction. That was only my doubt. That was under construction. That was only my doubt. So, because on that there is no clarification anywhere to best of my knowledge. I'll also see. Wait. So let me take this option D for the time being. Okay. Next. Which of the following payment or expenditure is allowed as deduction while computing income from house property? Municipal taxes, land revenue, insurance paid. Only municipal taxes. Only municipal taxes paid by Mr. Sonu is allowed as deduction. Yes or no? Next. Next. Under which head of income the amount received by Raju would be taxable? Raju is under which head of income the Raju income is taxable? Raju is what? A film director took on rent. Mr. Raju, a film director, okay, took on rent a building under construction in Mumbai. Okay, for his film shooting. The construction of the said building would be completed by 2025. Mr. Sonu is a real estate developer and letting out. Okay, actually, Sonu is constructing one more building at Mumbai during the year. Okay. Raju, film director, took on rent the same building, a different building, the building under construction, same building. The construction of the said building would be completed by 2025. Sony is real estate developer and developing. Okay. So what are they asking here? Under which head of income the amount received by Raju would be? What Raju is receiving? Sorry. From Raju would be taxable. I will assume house property, because whether it is under construction or during construction, after construction, I'll leave it. You are receiving from house property, rental income, straight away taxable. Yeah, on that logic, all three houses are liable for house property. I can take that, because no, see, construction completion is only a requirement to know 2 years period calculation purpose. At the end of the day, if the property is under construction, it's property, and you are getting rent from that. Automatically, whether you are in business or not doesn't matter. It will be taxable under house property always. As on for real estate people also. Yeah, same logic we can apply. We can take that call. Yes, house property. What is the amount chargeable to tax under house property in the hands of Sonu for the year 24-25? We'll see, because no, from Raju also is getting rent. For how many months he is getting rent, we don't know. Yes or no? So what are the properties? Chennai property, Mumbai property, Delhi. Yes or no? Now we'll see. Delhi property, first one. Okay. Chennai, Kochi and Mumbai. Chennai, Kochi and Mumbai. Yes or no? Chennai, Kochi and Mumbai. Okay. Now, okay, here itself I'll write Chennai, Kochi and Mumbai. So Chennai property, first step number 1, expected rent. Municipal value or fair rent, whichever is higher, restricted to standard. Therefore 35,000. Yes or no? 35,000 is expected rent. Actual rent 38. Since whichever is higher, 38,000. Gross annual value is 38,000 minus municipal taxes paid. Municipal taxes for Chennai is paid by tenant. 38,000 minus 30% deduction is equal to, for Chennai property it is 26,600. Agreed. Next, Kochi property 80,000 or 70,000, 80,000 or 82, whichever is higher, but restricted to expected rent 70. Rent received is 68. Vacancy point is not there. Again, whichever is higher, gross annual value 70. Municipal taxes paid 4,000. Therefore 66,000 minus 30%, 46,200. 200, correct? 26,600 plus 46,200. How much it is? 72,800. Not only this, he also has another property, 5,000 per month multiplied by 12 months, I assume, minus 30% deduction, 42,000. 42,000 from Mumbai property plus 72,800 is equal to 1,14,800 is the income from house property. Agreed. Now let us see that option. Thank God it is there. See, now we did wrong. Our analysis is correct to that extent, but actually, then where it is taxable? Under construction property. This answer is correct. Only municipal tax is paid. Under construction property, income is taxable under other sources. This, I think the call has been taken like that. Then automatically here 70 to 800 only will come. Only one interpretation we did wrong. See, but see, for this, no, under construction property where it is taxable, nowhere a clarification is given. I will see whether is there any pending case law on this. Under construction property taxability under income tax. Under income tax, I'll see. Wait. Sale of under construction property. Yeah, there is a clear, not a sale, ma. We want to holding period. Yes, I know, I understood. Rent received from under construction property only, but I want to know where exactly the rules are. Yes, see here. A minute. Yeah, under construction property often appeals to factors like low price. However, it is important to understand income tax. Okay, for a home loan, no key implication. Mainly two streams. Section 24. Individuals can claim deduction for interest paid, while Section 80 pre-construction refers to. They only spoke from interest deductions. Post construction only the property is liable for tax. Technically, even when we are discussing in the class also, we discuss this point only when the property come into existence, only when the completion certificate is there, for that period only expected rent is calculated. Remember, we discussed it. I think I even mentioned that in the book also, gross annual value, that, yeah, you see, expected rent is always for true. Completion certificate is criteria to consider number of months properties in existence. I specifically told this point in the class also, but then since this case comes, I have to take one call, so I took house property call. But they are saying other sources, which case study or any high court judgment, or because there is no clarification on this under construction. But one logic here we can establish for this answer. Under construction property, completion certificate not yet came. Since completion certificate is not there, house property head of income is not applicable. If house property head of income is not applicable, can I apply PGBP? That is a rental income from under construction property, not even a stock in trade. So we can straightaway treat it as income from other source. So on that logic, they applied income from other sources. If it is income from other sources, this computation will not apply. Income from other sources, direct 60,000 is taxable. Direct 60 is taxable. 30% reduction also will not come. So house property income would be only 72,800. Yes or no? So both buildings, Chennai and Kochi, that is the right answer, because under construction property, house property head of income will not apply. Therefore, for that income from other sources, therefore option A, and other sources income would be 60,000. Correct? Other sources income would be 60. Fantastic question. Question number 8 also. Case number 8 also fantastic question. Some of you might think, sir, why are you doing wrong, sir? It's not wrong, man. It's only interpretation. Okay, it's only an interpretation which I have taken, and I've showed you entire logic here. See, like I don't see the questions before and come. I want to practice and I want to think exactly like student based on the knowledge whatever I gave in the class. So for that reason, okay, but it's a new learning. It's a new learning. I will add clarification videos for this in the main class also if possible, because that will be very good, so that at the time of conceptual learning itself we will understand. Case scenario 8, fantastic question. So the lesson learned here is under construction property, the income from that is accessible directly under other sources. That property will not be considered for house property purpose. Obviously logical, in house property we have given a point clearly. House property expected and calculation everything will be based on completion certificate. So if completion certificate is not there, that property will not come within the house property purview at all. If at all completion certificate is there, for 2 years stock in trade exemption annual value nil is applicable, provided it is not rented. Say case scenario 7, case scenario 8, both are fantastic. Next. Now understood logic? Yes. Next, case scenario 9, again house property question. 1 minute, we'll take a gap and then continue. Yeah, let's continue. Case scenario 9. Case scenario 9. The entire issue came in case scenario 8 is under construction property. We'll learn a new point. Mr. Ganesha, a salaried person, has 3 houses, one in Thane, Maharashtra, second in Jaipur, and third in Madhya Pradesh, Ratlam. Details were given. Thane, 3 BHK flat purchased in 2001 for 90 lakhs. Afterwards, interior work done in 2006 of 15 lakhs. Mr. Ganesha took a loan of 16 lakhs. 65 lakhs for purchase of this flat in 2000 and settled full loan in 2021. Okay, what are they asking? They will say, I think capital gain question probably. No, they gave below information. Fine. Okay. Loan is fully cleared in 2021 itself, so which means there is no interest on loan for that property. Jaipur, purchased in 2019 for 62 lakhs and interior work done in September 2020 for 10 lakh. Loan taken for purchase of this house is 15 lakh in 2019. Okay. As per interest certificate, he paid 12 lakh 500 and 43 towards principal and interest. Okay. So 43,000 is interest. Okay, for during the current period, and he has taken a loan in June 2019. Purchased only property. So therefore, by this time property is ready. There is no PCPI. There is no pre-construction period interest. Ratlam, purchased in 2021. Actually, for purchased property, PCPI is not there. Logic is not correct. PCPI interest might be there even for purchased property also. Purchased in 2021 for 70 lakhs. Stamp duty value 65. For acquiring this house, he took a loan of 40 lakhs from Canara. The loan was sanctioned on 1st October 2021. He pays EMI 38,100. As per interest certificate for the year, he paid 60,900 and 3,93,000 towards interest and principal and interest. This is interest. Let us assume in all these cases PCPI is not there because they have not given enough information. Okay, so that's it. So now for this zero interest. Okay, right. Now municipal taxes for all the houses given. Municipal value they have given per month. Fair rent, all that is given. Fine. Other details. He has sold Jaipur house on 1st January 2025. Means 24-25 Jaipur house, 10 months only house property income we should compute. At what price it is sold for? 90 lakhs. And invested 15 lakh in RECL bonds issued by this one. So 54 EC exemption they are asking directly. Capital gains question they are asking. Mr. Ganesh is working in Vindur Exports Company and self-occupied Thane flat. He earned a salary of 22,50,000 for the year 24-25. It's like a typical total income question. Oh, still question is there. He has no other income from any other source. By the way, he sold house when? One more complication. January 2025. Jaipur house is purchased in 2009. If a house property is purchased before 23rd July 2024 and sold on or after 23rd July 2024, and if it is a long-term option scheme, at the time of tax computation, you have an option scheme. You remember option scheme? Sale is after 23rd July 2024. Option scheme is applicable. Fine. See, he has no other income. He has given Ratlam house on rent to Pratap on monthly rent of 8,500. Further, he has given Jaipur house. By the way, he sold which house? Jaipur house only. Thane house is self-occupied. So out of 3 houses, Ratlam is let out, Jaipur also let out. So Jaipur house is let on rent for period April 24 to June to Madura Mohoto on monthly rent of 7 and vacant for the remaining period. It doesn't matter. Expected rent we will compute for 10 months. Actual rent we will compute for April to June 3 months. Yes or no? And there is no vacancy out of the 10 months period. There is no whichever is higher logic, expected rent or actual rent, whichever is higher logic only will apply. Ganesh wants to exercise the option to shift out of default tax regime, which means option is optional tax regime. Cost inflation index number for 1920 289, 2021 301, 2425 363. Based on the facts of the case, choose the most appropriate answer. You know what? For capital gain computation purpose, if a house property sold on or after 23rd July, if at all you are selling on or after 23rd July, computation of capital gain, no indexation at all. Right away index, we will take only cost, balance gain. But when you are computing tax, that time we will recompute capital gain with indexation. We already computed capital gain without indexation and then check it. That's the logic. Yes or no? All complications are there in this question. Now, what would be the net annual value of each house of the property? Thane is nil, obviously. Now we can't compute like this. Okay, we will see here. Net annual value they are asking, ma. Net annual value. Okay. Now Jaipur house I will see first. Jaipur house. Okay. First expected rent for 10 months I will calculate na. So no, Jaipur house I will calculate for 10 months. Now for 10 months Jaipur house, you see Jaipur house, municipal value or fair rent, whichever is higher, fair rent. Since standard rent is not there, 7,000. 7,000 into expected rent is 70. Actual rent, April to June only Jaipur house is rented. 3 months only it is rented. 7,100, you see. 7,100, yes or no? Only for 3 months. 22,300, sorry, 21,300. But whichever is higher, because there is no vacancy, remaining period. You are owner only for 10 months. So you should consider only for 10 months. Out of 10 months, 3 months rented, remaining 7 months. Vacant, sorry, wait. Vacant period, ma. Vacancy is there. Vacancy is there. Sorry. It is not like self-occupied. Vacancy is there. Property is vacant. Now. Wait. This is actual rent received, right? I will, for comparison sake, if at all those 7 months also, if at all for those 7 months, July, August, September, October, November, December, months only. When he sold property, oh, sorry, it was 1st January. 9 months only your owner. Your owner for 9 months only. Yeah. 63,000. Yes or no? 9 sevens. Yes or no? And here also 7,102. That is correct only. 21,300 is actual rent received. Suppose no, if vacancy is not there, what is the actual? 21,300 plus vacancy period rent. 9 3s. 9 6. 7,100 into 6 months. If those 6 months property is not vacant, yeah, 7,100 into 6 months. How much it is vacancy period rent? 42,600 plus 21,300. Oh, if vacancy is not there, 63,900 I am getting. But because of vacancy, my actual rent is lower than expected rent. If vacancy is not there, it would have been higher. Right now it is lower only because of vacancy. Therefore, 23 subsection 1 clause C will apply. Yes or no? As per that, gross annual value is equal to 21,300. Yes. Yeah. It's not whichever is higher. Because of vacancy, this amount is lower. You see in our book, it is clearly given. Expected rent, you see, determine actual rent, gross annual value. Actual rent in our example 21,300. This is approximately for 9 months. Some amount 63. Is step 2 lower than step 1? Yes. Okay. And property remained vacant? Yes. Then actual rent received 21. Vacancy period rent 42. Total approximately 63,600. Now if actual rent received without vacancy is higher than expected rent, if so, gross annual will be actual rent received. That logic. Here actual rent received is lower only because vacancy in our question. Vacancy, if it is not there, actual rent is higher. So vacancy is the reason. Kindly give me excuse. So they will give excuse. I told this logic. So gross annual value 21,300 minus municipal taxes paid. Municipal taxes paid 8,090. for April to December month. 30. No, you don't proportionate as it is 8090. Okay. Net annual value you're saying. 8090. So what is the net annual value? 13,210. This is Jaipur net annual value. Now we need to calculate Ratlam. So or no? This question comes in exam. That's it. Gone. The house on rent 24-25 to Pratap on a monthly rent of 8,500. Now throughout the year there is no point regarding vacancy, all that. Yes or no? So Ratnam house. Ratlam. So expected rent. First I will calculate. Expected rent. Municipal value, fair rent, whichever is higher, but restricted to standard rent. 7,300. 7,300 into 12 months. Because Ratlam house, by the way, is there fully year. Ratlam house is December 2021. So in 2025 you are full year owner. 7,300 into 12 is equal to 87,600. Okay, fine. This is next actual rent. Step 1 this is. Okay. Step 2. Step 2 is what Ratnam house is rented for how much price here? 85. 8,500 into 12 months. How much it is? 1,02,000. Whichever is higher. Gross annual value 1,02,000 minus municipal taxes paid. Minus municipal taxes paid 6,909. Net annual value 95,091. So 13,210, 95,091, and first Thane house is nil. Nil. Correct. 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 Option number A. No. This entire analysis put together, all 4 or 5 questions were there, no? Next. What would be the income or loss under income from house property? Now they are asking total house property income. We need to consider further. Now we already computed NAV. Thane, Jaipur, Ratlam. NAV is already computed 0, 13,210, and here 95,091. 95,091 minus 30% deduction. Yes or no? This is nothing. 13,210, 393. This one 95,091, 28,527. That's okay. Interest on loan, they themselves gave certificate. Or no, interest on loan certificate is given. Now here, interest amount, how much he paid for Jaipur house, interest certificate 43,500. So no, here interest is fully repaid for Thane loan. Jaipur interest is how much? 3,96,300. Remember, this is a let out property, so no limit. 3 lakh. Sorry. 3,96,300. Correct? What is the net income from house property? 0. So 13,210 minus 3,963 minus 43,500 is equal to 34,253. Now here 95,091 minus 28,527 minus 3,96,300 is equal to 3,29,736. Total 34,253. 3,63,989. Correct? Now they are asking what actually income from house property. 3,63,989 loss. Yes. How much amount will be carry forwarded as loss from house property for subsequent years? By the way, here optional tax regime. So no, remember, even if it is default tax regime, you can carry forward whatever the loss, because these losses are from let out properties. Self-occupied property loss itself is impossible. For loss let out property, you can carry forward. In ICA book, they have given wrong answer. In carry forward provision, I told that's a wrong answer. In ICA book, it was wrong. Anyhow, here it is optional tax regime, so we don't have to worry. We can carry forward entire 3,63,989. Correct? We can carry forward because it is optional tax regime. But as per ICA book, optional tax regime, okay, no problem. But default tax regime, you can't carry forward. By the way, wait. There is capital gain computation, right? Is there any capital gain computation? Wait, we cannot directly compute. No, this question we cannot answer at this moment. Why? House property loss is there, capital gains income is there. We can set off up to 2 lakhs, we can set off if at all capital gain is there. After set off, then we can carry forward. Okay, we'll see. No, we don't know, capital gain should be more than 2 lakhs then. This third question we can't do it right now, be careful. Okay, what would be the amount of capital gain chargeable? Okay, they're asking another question. Okay, capital gain, how much is chargeable? Which house is sold? Jaipur house, right? Jaipur house is sold, correct? Huh? How much is sold for? 90 lakhs. Stamp duty value information not given, so full value of consideration is 90. Now this Jaipur flat was purchased by him in 62 lakhs. Interior work, improvement cost is 10 lakh. So total cost is acquisition, cost of acquisition 62, improvement cost 10. And remember, sir, indexation, no indexation. The property sold after 23rd July. Sir, but indexation, with indexation, without indexation, that concept is there now. What about that? That is at the time of tax computation, not at the time of capital gain computation. At the time of capital gain computation, don't apply indexation. I even told that. You see this. I have given that box itself clearly. Computation of capital gain. You see, transfer of any long-term capital asset on or 23rd July, they are not eligible. However, resident individual and issue on transfer of being land or building which is acquired by them before 23rd July, yes or no? But transfer on or after, then pay tax on capital gain without indexation at 12.5, with indexation 20. However, the SSC chooses option where tax amount is lower. For income computation, compute without indexation meant with capital gain. For tax computation, option will be checked. Clearly given the question. Every point clearly given. Next. So 90 minus 62 minus this one, 90 minus 62 means totally 72. 18 lakhs is the capital gains income, short term capital gain. You can set off house property loss up to 2 lakhs. Balance 1 lakh 63 only you can carry forward. Therefore, the carry forward of loss will be 1 lakh 63 989. How depth it is, and it's a long term capital gain. Obviously, it's a long term capital gain. Automatically 18 lakhs. Yes or no? No, not even that. Not even. They are asking taxable enhance. They have invested no 54 EC. Wait. They are not asking gross capital gain. Suppose they ask gross capital gain before exemption, 18 lakhs is correct. Then they invested 15 lakhs in REC bonds on 10th August. 10th August is after 6 months. Yeah. 54 EC time limit is what? 6 months. 1st January to 6 months means 30th June. He invested on 10th August. 54 EC exemption not applicable. Therefore, gross capital gain itself is net capital gain. B. How many provisions are testing you see? How much you should remember? Then what would be the gross total income? So 18 lakhs as it is taxable, no? Gross to 18 lakhs and house property income? House property loss only, na? House property is loss, right? Salary. Yeah, that's why. Salary income is also there. Okay. He earned a salary of 20 to 50. He earned a salary this set. This is not income from salary. Earned salary means gross salary. Fine, we'll see. Okay. Now let us compute here itself. Earned salary is 22 lakh 50,000 350 minus 50,000 standard deduction is equal to 22 lakh 350 plus capital gains 18 lakh, yes or no, minus 2 lakhs. House property set off is there, na? So 22 lakh 350 plus 16 lakhs only you should consider, correct? 38 lakh 350. Answer is there. 38 lakh 350. Correct? See how many provisions you should remember. Tough question. This is very good question. Yeah, this answer nil. 1395 correct. Option D 3 lakh 63 loss. Total loss computation correct. Carry forward 163 correct. Long term capital gain 18 because exemption is not available. That is also correct. 38 lakh correct. Everything we did correct. Easy. Next. Case scenario 10. We'll take 5 minutes gap and then continue. The next question, case scenario 10. Case scenario 10. Lux Enterprise, a proprietorship concern of Lucifer, whatever, a resident individual in Maharashtra, engaged in the business of printing and publishing. The following are the details of assets of the business. Depreciation calculation, probably all the date of purchase, date of put to use. Office building superstructure constructed on leased land, 30th December. Okay, so less than 180 days. Yes or no? Next up, BMW M4 convertible car. So this was put to use, which means in this year it is fully being used. Yes or no? So 100% depreciation. Yes or no? I mean, in the sense, full depreciation. That's what I mean. By the way, car is eligible for what rate of depreciation? 15%. 15%. Correct? Yes. Machineries used in printing and publishing process. Machineries used in printing and publishing process. Of course, they are eligible for 15% depreciation. And this building is eligible for 10% depreciation. WDV of the plant and machinery depreciable at 15% on 1/4/2024 is 1,45,000. I think this is additional, probably. I feel this is a different machinery. I guess so. This is purchased during the year. Okay, this is purchased during the year, but actually no. Car is also part of this WDV 15% block only. Basically, because WDV of the plant and machinery block, I assume this is included already in this. I'm assuming car is already included in this, or maybe let us do one thing. This value is a separate value, because they didn't mention that block. They mentioned plant and machinery separately, so I don't think it's a block value. If at all they mean block, car would have been already part of this block. I would have ignored this. Correct? Yes. Based on the facts of the scenario above, choose the most appropriate answer to the following. Assuming all the aforementioned assets are purchased through account paycheck. Account paycheck more than 10,000, yeah, you can capitalize. What would be the amount of depreciation on plant and machinery, which is at 15%? Okay, 15%. 1 crore 45 lakh. 1 crore 45 lakh into 15%. 21 lakh 75. Plus even car is also eligible for this one, 94 lakh 80,000 into 15%. Sorry, because that is original cost. You need to derive WDV value for now. Yes or no? 94 80 lakh minus 15%. Remember, this is for 1920 minus 15% for 2021 minus 15% for 21-22 minus 15% for 22-23 minus 15% for 22-23-24. Now 15%. 63 lakh, sorry, 6,30,940. Okay, 6 lakh. Wait, it's better to put it on paper. What is the car value? 94 lakh 80,000. Yes or no? Minus, this is purchased in 1920 year. Let's see once, because on car, if a car is purchased during 1920 year, depreciation rate might be different. Wait, let me check it once. Yes, yeah, cars purchased between 23rd August 2019 to 31st March 2020, the rate of depreciation is 30%, which means that's a different block. Yeah, perfect. What is it? 23rd August onwards. Here in this case, the car was purchased 23rd August only. So this is eligible for 30% depreciation. Therefore, be careful. That's why I remember 2019-20. That year, this incentive was given. Okay, 30% depreciation. If at all any motor vehicle was purchased, you see, generally car, it is eligible for 15% only. Always cars are eligible for 15. But in this year, if at all purchased 35, generally buses, lorries and all 30. But in the same year, if at all they purchase 45. So they were testing extreme this thing also. So which means this is different block, this is different block, this is different block, right? So now cars, okay, 30%, right? For 1920, more than 180 days. Yes or no? So 30% is how much? 94 lakh 80,000 into 30% is equal to 28 lakh 44,000. Correct? So net value again 9480. 66 lakh 36,000. Yes or no? Again, this is for 2021. 66,36,000, 66,36,000 minus 30%. Okay, this is again 1,4,2001. How much? 46,45,200 WDV minus 30%. So I'll continuation. 1,4,2022 WDV 32,51,640. Correct? Minus 30%. 1,4,2023 WDV value 22,76,148 minus 30%. WDV on 1,4,2024 15,93,330. Finally, for this year 30%. For this year it is how much? On this 30%. Correct? How much it is? 4,77,991. This is the answer for the current year. Okay, this is for 30% block. Understand? But the question is asking for what? First question 15% block related. 15% block means this one. Okay, 1 crore 45 1 crore 45 multiplied by 15% plus this is new missionary 15th October, half only eligible. Date of put to use is after 4th October, half. So 9,12,500 into 15% into 1 by 2. So what is the total? 1 crore 45 lakhs into 15%. Then 9,12,500 into 15% divided by 2. So 22,43,000. 22, 43, 437. What happened? By the way, printing and publishing, do we have any incentive? Printing and publishing 40%. Just a minute. That is for computer printers. Wait, printing and publishing business, additional depreciation is eligible. Yes. Printing and distribution is treated as manufacturing activity and it is eligible for additional depreciation. 10% extra you will get. I'll show you in our book. Where is additional depreciation concept? We have seen this. Yeah, here it is. Here it is. C. SSA in manufacturing. Business of printing and publishing also manufacture. They are also eligible for additional depreciation. So in the first year additional depreciation they get, right? See, like so minor point, yes or no? Very minor point. So plus 91,250 extra add. 91,250 add 10%. 23, 34, 687. That's it. Thank God option is not matching you. If at all answer would have been matching before additional depreciation, no, we would have selected that. Be careful. Additional that's why I always tell when we are doing EVO classes, always follow the process. So that if you follow steps, as per the book what I told, you see that step will come, additional depreciation. Then you will obviously think, is SSA engaged in manufacture? But generally, till now printing services, publishing services point we know. But we never solved any question on that. So it didn't strike us. Printing and publishing is a manufacturing activity. Remember that. That's it. Next. Very good, no? What will be the WDV of the plant and machinery on 1/4/2025? Very simple. First of all, opening value 1,45,000, 1 crore 45. Correct? So additions 9,12,500. Total 1,45,000 plus 9,12,500 is equal to 1,54,000, 12,500 minus depreciation total 23,34,688. Correct? Closing WDV. That itself is opening WDV for 1st April. Yes or no? Okay. 1,54,000, 12,000, 1,54, 1 crore 54, 12,500 minus 23, 34, 688. 13,07,7812. Okay. That's it. Now here I want to give one more question. Suppose what if in the exam is not 1/4, they said 31st March 2025. What is the WDV as on 31st March 2025? If they mention like 31st March 2025 WDV and nothing is mentioned, that means before depreciation value, this value will come. Suppose if they specifically say 31st March WDV after depreciation how much, then this value will come. Be careful. I told you WDV on 31st March means it's not after depreciation. By default, it is before. Specifically, if they say after only, then you will consider. But since here they said 1/4, automatically after depreciation, logically. Next. What would be WDV of office building superstructure constructed on lease land for 1/4/2025? Oh, lease land. Building how much here actually? Total building 1 crore 85 lakh minus 5% only, right? 1 crore 85 lakhs minus 5%. 1 crore 75,000. That's it. The answer is C. That's it. So C. BCC. BCC. That's it. Very good question, right? Next. If you observe case scenarios, how they were arranged is, first they arranged with tax computation residential. Then we saw salary schedule. Then we saw house property. Now PGBP. Then capital gains might come. Already capital gains related, slightly only it came here, but predominantly there it was tested was house property. Now case number 11. So mostly now what we are solving are PGBP questions only. That's it. Just 2 minutes. Yeah, next. Case number 11. Mr. X has set up manufacturing unit in Chittoor, Andhra Pradesh on 1st April 2023. During the year 23-24 and 24-25, Mr. X has purchased the following assets. 7th June. Actually, last year data and current year data both were given. Okay. This is purchased in current year. These were purchased in last year. This last year machinery data is important for balance additional depreciation to be claimed in current year. Yes or no? Yeah. Fine. Office furniture, this is 10% depreciation, this is 15% logic, this is 15%, this is 15%. WTV on opening, we don't know. Okay, we'll see. He has paid professional fees of 35,000 each to Mr. A and Mr. B and Mr. C respectively on 10th September 2024 and credited in the books of accounts to discuss some legal matters. He just paid and C respectively on 10th December and also credited in the books of accounts on the same day to discuss the legal matters related to issue. They paid what is this? I think TDS issue might be 30% disallowance, that question more probably. The net profit computed as per chapter 4D, nothing but business is 10 point. So P&L 10 crore 20 lakh, the business is okay. Now based on the facts scenario, give the answer. What would be the amount of depreciation in respect of plant and machinery? Y allowable as deduction while computing income under head PGBP for the depreciation in respect of plant and machinery Y. Machinery Y was purchased last year. Yes or no? So first we need to calculate last year 5 lakh, no, that one. Okay, only for that, assuming that is the only machinery in the block, let's calculate. Minus that year, no, 7.5% normal depreciation, correct? 5 lakhs into 7.5%, 37,500 plus additional depreciation 10% of the original cost, correct? So closing WTV will be 4 lakh 12,500. Yes or no? Now in this year, you will get normal depreciation 15%. 4,12,000 into 500 into 15% is equal to 61,875. Right answer? No. Additional depreciation balance 10%. Balance 10%, additional depreciation 50. The answer is 1,11,875. Many will forget this additional depreciation. Next. What will be the total amount of depreciation for the year 24-25 allowable as deduction while computing? Appa, again complicated. So by the way, thank God, machinery way we computed total depreciation. Now we need to still compute. By the way, they're asking total depreciation, yeah, not just a plant and machinery related, total depreciation. Yes or no? Now here it is 7th June 2023. Therefore, full additional depreciation that time itself they would have claimed. Yes or no? Now machinery X. Yes or no? Machinery X 14,75,340. 14,75,340 last year minus 15% and 20%. Yes or no? 14,75,340 okay into 15%. 2,21,301 and 14,75,340 into 14,75,340 into 20%. 2,95,068. Yes or no? So balance 14,75,340 minus 221,301 minus 295,068 is equal to 9,58,971. This is 1/4/2024 opening value. On this year only 15% you will get. Only 50, no more additional. Yes or no? 1,43,845. This is machinery X related. Y related we already computed. Yes or no? Next, Y related we already computed. X done, Y done. Now Z. This year only it was purchased, and 15th May, same day put to use they gave. So which means additional normal both they will get. So Z 8 lakh into 15% is equal to 1 lakh 20, correct? And further into 20% further 1 lakh 60. Total depreciation 2 lakh 80,000 on machinery Z. Then office equipment is there. Furniture 7 lakh 65 400, just when it was used, by the way, when it was put to use 25th July. So full 10% you can claim, yes or no? So 10% means 765 400, 76 540. Now total depreciation X plus Y plus Z plus furniture. X how much? Just to be computed 1,43,845 plus Y how much? We already computed the previous question. Y depreciation how much? Y 1,11,875 in this year, correct? 1,11,875 plus Z we computed now 2,80,000, correct? Plus machinery 76,540, total 1,43,845 plus 1,1,875 plus 2,80,000 plus 76,540 is equal to 6,12,260. 6,12,260. What happened? Hey, wait. Are they asking normal only, additional? Total amount of depreciation. Plant and machinery Z. X purchased the following assets: manufacturing X, Y, Z. Net profit we got. This is correct. What they did not add, minus 1 lakh 60,000 you reduce. 4 lakh 52 it is getting. No, it is matching. Are we correctly? Did we compute correct? Just 1 second, we'll check. Okay. X machinery X, what is the value? 14 lakh 75 340. 15% value correct na? 14 lakh 75 340 into 15%, 221 301. Okay. Machinery X is purchased last year. Full depreciation additional also claimed in the last year, correct? They are asking depreciation of last year, current year, by the way. Previous year 24-25, correct only. Okay, fine, we'll see. So now 14 lakh 75 340 minus 221 301 minus 295 068. So 958 971 into 15% for the current year, 1 lakh 43 845. That is correct. Machinery Y already computed. Z 8 lakhs into 15%. Machinery Z. Plant and machinery 8 lakhs. Okay, correct only. So and again 20% additional depreciation 1 lakh 60. Total 2 lakh 80. And this one 76 540. Furniture, correct? Furniture 76,540. Hey, wait. 23rd July 23 ma. Return on value we should compute na. See the date 76,540. See 7,65,400 minus 10%. Again 10%. This is last year depreciation. Current year depreciation is 68,886. Now you will get. Yes or no? 68,000. We are actually, we observed that point. We missed. 1,43,845 plus 111,875 plus 2,80,000 plus 68,886. 604 606. That's it. 604. Perfect. The answer is D. Oh my god. Mr. X wanted to know from you whether tax is required to be deducted on professional fee paid to A, B, C respectively. If the tax has to be deducted, then what would be the rate and amount of tax to be deducted? What would be the rate? Now tell me, 35,000 each we paid, A, B, C. So on all 35,000 we should deduct. Yes or no? 35,000, everything is liable, 10%, 3,500 into 3. 10,500 we need to deduct TDS, correct? We'll see. Yes, TDS amounting to 10,500 at 10% has to be deducted. Yes or no? Yes, TDS amounting to, no, not 7.5. Directly the answer is D, because 194J. Yes or no? 10% legal fee. So the answers are P, D, D, B, D, D. That's it. Easy. Next. Very good. 100% we did accurately. Yes or no? Next. This is regarding partnership form, which is fantastic question. Case number 12. ABC & Co is a partnership firm engaged in business of sale of footwear. The partnership firm consists of 3 partners, A, B, C. A and B are working partners, C is sleeping partner. So A and B remuneration paid to them is only eligible for deduction. The firm is liable for tax audit under 44AB. It has a book profit of 11,50,000. So they themselves get book profit information. Okay. Book profit they gave, but they gave interest on capital different amount. So we need to adjust book profit to this extent. Okay, fine. Following payments were made. What are they? No, remuneration to A and B. Okay, remuneration to C, interest on capital. Remember, book profit is derived after reducing interest on capital. So first add back. Okay. Now add back income of the firm before interest and remuneration. Book profit is before remuneration, but after interest. So book profit is how much now? Actually 11,50,000. 11,50,000. Add back, interest paid. Actually, no. Revised book profit we can just add back and calculate by 7.5%. Add back 7.5 because no 12% is eligible. Okay, 7.5% is also reduced from book profit. Therefore, 7.5 only I'll add back to arrive book profit as per 40B. Or I have one more option. Entire 18,500 I'll add 18,500 per annum each. For 2 partners. 37,000 I will add back. Then for interest and capital to see 10,540, that also I'll add back 10,540. So revised. So this is income of the firm before deduction. This one. So 11,50,000 plus 37,000 plus 10,540 is equal to 11,97,540. Correct? Minus interest on capital. Now interest on capital. 18,500 per annum is equal to 19.5%. Therefore 12% how much? 11,384 to each partner into 2. Both of them put together 22,769. 22,770 interest on A and B. For C 10,540 per annum it is. Yes or no? By 17 into 12 is equal to 7,440. Correct? Therefore book profit revised 11,97,540 minus 22,770 minus 7,440 is equal to 11,67,330. Yes or no? Book profit. Now these are the brought forwarded losses that we will see later. Okay, 11,067,330. Now by the way, firm is paying remuneration to see not at all eligible. Remaining part of remuneration, how much is eligible depends upon first 6 lakhs. 90% is equal to 5.4 lakh. Yes or no? On the first 6 lakhs or 3 lakhs, whichever is higher, 5.4 lakh. On the balance amount, 5,11,330 into 60%, approximately 3 lakh is coming. Okay, 3,03,000. Total 8.5 lakh almost coming. Eligibility. But for MCQ, okay, I think they may ask this also. Eligible remuneration also they may ask. Better will calculate accurate amounts. Okay, yeah, into 60% is equal to 5,11,330 into 60% is equal to 3,06,798. So total amount eligible is equal to 8,46,798. This is the total eligible remuneration that is partners maximum can take. But actually what they have taken 32,000 per month into two partners into 12 months. 7,68,000 they take. 7,68,000 only they take, both the working partners put together. Eligible deduction is 7,68,000. Now 7,68,000 I will reduce deduction. 7,68,000 I will reduce. Correct? What is the income of the firm? 11,67,330. 3,99,330. That is the remuneration. I mean, that is the income of the firm. Fine. Fine. Income of the firm, and they have brought forward losses. We'll set off and see. Why? You know, brought forward losses, brought forward depreciation. First, I will set off losses. Yes or no? So, income of the firm is already 3,99,330. So, I will set off all the three. Yes or no? So 26,000 old loss I will set off first, then that next loss I will set off, then the latest loss 105,670 I will set off. All put together 209 only. 209,670 only. So the income of the firm is 399,330 minus 209,670 is equal to 1,89,660. Now here after solving all this, I am having one doubt. Now here case study they gave, no. They said it has a book profit 11,50,000, right? This is, are they mean to say book profit after reducing interest and capital but not remuneration, or is it after reducing everything? That I'm not sure. Okay, but book profit by definition is what? After reducing interest but before reducing remuneration. But here they gave interest like this na, so I assumed that they reduced full interest. So what I did, I added back full and then reduced 12% and calculated book profit, then calculated eligible, then identified working partner remuneration actual, whichever is lower I reduced, then calculated the income of the firm. Logically only we did. Next, now remember this is 1,89,660. Now still income is there, I can still claim unabsorbed depreciation deduction. Yes or no? 17,600 plus 29,860 plus 54,180. 1,06,000, 1,01,640. 1,01,640 unabsorbed depreciation. Now balance income will be 189,660. One of the toughest question. This is income under PGBP finally. One of the toughest question, technically speaking. It's not that easy, tricky. So book profit, that's why in income tax when I'm saying this, all this book profit, that's why my provision, the way I drafted itself is like this. When I'm explaining, first calculate profit before allowing interest remuneration paid, but after considering all deduction, unabsorbed depreciation and disallowances. Wait, unabsorbed depreciation is there. Wait, let me consider that. I have a doubt here. That's the reason, because unabsorbed depreciation is considered as current year depreciation. But in the order of set off, no, when we are doing set off, no, first we will give set off priority to business loss. Then we will give priority to unabsorbed depreciation. So on that logic, I am not considering it. So then interest on capital you reduce, then this one. Then remuneration to working partner, then income of the firm. So that's how we computed. Understood? We'll see. Fine, we'll see. All this we did. What is the amount of interest that is allowable as deduction in the hands of the firm? We calculated already interest allowable. How much is allowed? 37,000 plus 10,540. How much it is? 37,000 plus 10,540. Total interest is 47,540. You see, option number C. We calculated. Yes or no? Next. What amount of remuneration not allowable as deduction in the hands of the partner? What is not allowable is nil. Yes or no? Nil. Because no, as per our calculation, book profit remuneration not allowed, nil. Yes or no? Disallowed. Entire remuneration is allowed. Allowed. That's why there is no disallowed, because they are asking not allowable. What is the due date for filing return of income? Now see, they are liable for audit. Yes or no? They are liable for audit. When they are liable for audit, the due date for IT return is 31st October. For A and C. Oh, sorry, just a minute. Yeah, now what is the due date? Sorry, question number 12, continuation, case scenario 12. There was a small interruption in the connection, so the video got stopped suddenly. Yeah, what is the due date for filing for A and C? When the firm is liable for audit, automatically the due date for all of their partners also stands extended. All of them, the due date will be extended. Yes, so automatically for both of them 31st October only. Yes or no? You can go to return of income chapter. Okay, 139. So in this so almost you can come to the last pages. 139, and see. So 139.1, SS is subject to liable for audit 31st October. Partners of the firm which is subject to audit 31st October. So automatically for both of them it is 31st October. But you see here for Mr. C 31st. To confuse you, C does not have any remuneration. To confuse you, the answer is C. Yes or no? Next, what would be the income under the head PGBP? We calculated that also. I don't know whether ours is right or not. 88,020 we got. 88,020 we got. Capital loss is not at all eligible for adjustment. Capital gain, loss under the head capital gains is set off only with capital gains. No? Yes or no? So first one, D. How much interest is allowed? 3210. It is 47,540. No? See here, one minute. Here the answer, income under the head PGBP in the hands of the firm, they have not given. Okay, we'll see what answer they gave. 1,72,330. Book profit 11,50,000. Allowable remuneration 768. And brought forward losses 209. Book profit 11,50,000. For us, how much we got? We got 11,67,330. Book profit. Hey, sorry, correct on. This is added back. No, this is deduction. No, you're in flow. Just see this. Sorry, 11,50,000 book profit. We added back this. Interest deduction is not this. Interest deduction is this. No, 22,770 plus. We calculated correctly, but when we are figuring 3210, correct only. 3210. Correct only. I think those who are following online, they would have read correct answer probably, because we did wrong. Those who are watching that, they would have done correct. 3210. That's correct only. This is disallowed. This is allowed. We already did that only. You see here, we added back. Now interest on capital allowed. Yes. Next. Now accordingly 11,67,330. Correct? That is the balance book profit. Now 310. And here it is second option B. Second option A. We'll see this now. So book profit, you remember I told book profit. Remember I told one doubt initially. Here no, they freezed this right book profit. They took one assumption that this is right book profit. What analysis we did? This would have been debited already and calculated like this. Correct? And what we did, we added back these two items, then reduced freshly. Yes or no? We added back actual interest paid and then reduced. So they did not do that. But this is actually unfair. Okay, it has a book profit of 11,50,000 means what I assume you would have considered actual interest. I don't know that this is computed as per act. You should have told this. Here it has a book profit 11,50,000 bracket computed as per 40B. They must have told. They didn't tell that. So what assumption we took when we are solving 11,50,000 is not as per income tax law. So what we did, they would have reduced the actual interest. So we added back actual interest and we reduced eligible interest. Actually our analysis is absolutely right. Correct? But assuming that they assumed the analysis called 11,50,000 is or not. Since they mentioned the word book profit keyword only, since the legal term only they used, we assume that there is right book profit. Now if it is 11,50,000 right book profit, automatically 11,50,000 right book profit, 5,40,330, 8,70. Yes or no? They paid 768. Remuneration disallowed. This answer is wrong. Because, okay, wait. Working partner C also remuneration paid, no? That is what disallowed. We only see what we computed. Array work normal partner this much pay, this much is eligible working. That one this much. Correct only. What they're asking is correct only. Like what is the question they're asking? What amount of remuneration not allowed in the hands of the firm? Whatever amount paid to C. What amount is paid to C? 10,000. The entire 1,20,000 is disallowed. We did not consider C at all because he's a non-working partner. Yes. Yeah, that is disallowed. Working partner whatever paid is allowed. So tricky, no? Actually, yeah. Then third question, both of them C. Then finally, income of the firm 1 lakh is to be added, no? Correct, na? So 11,50,000 is the book profit minus 7,68,000. Correct, huh? So what is the income of the firm? 11,50,000 minus 7,68,000 eligible remuneration. 3,82,000 is the income of the firm minus business losses minus unabsorbed depreciation. Okay, now unabsorbed depreciation and all that, like what we need to do. Unabsorbed depreciation, how much it is? Okay, fine, let us directly see the answer, not an issue. Okay, brought forward business was 2,09,670. Therefore the balance one is 1,70,330. Now here 1,70,330. See, actually here in our book also I told one point. Very good lesson actually. This is very good issue. I will show you. Very good issue. So book profit. You see, book profit computation, I told one point. I thought originally book profit is calculated as per normal term. We didn't know that actually income tax book profit itself 11,50,000 which they gave. See, what we thought, this itself is 11,50,000 they gave. What we assumed that this interest of the, we assumed that this is not a computed book profit, this is a normal book profit. So what we thought, we added back all the interest and we even thought depreciation is not adjusted in that. We thought depreciation is not adjusted in that. Yes or no? Actual definition of book profit is what? First calculate profit before allowing interest and remuneration, but after reducing all deductions, unabsorbed depreciation, disallowances. Therefore, in the given question, they have not given any treatment for unabsorbed depreciation because 11,50,000 itself is book profit. Minus 7,60,000 remuneration minus business loss adjustment. Balance is the income of the firm. You understood? So, in the given case, actually, you see, book profit means what? First calculate profit of the firm, but after considering deductions and unabsorbed depreciation, then you will get, first you calculate this, which means income of the firm you calculate after all deductions, even after unabsorbed depreciation, even after disallowances, everything. Then you reduce interest at 12%. Then what you get is book profit. That book profit itself they said 11,50,000 minus remuneration to partner 7,68,000 minus business losses set off. That's it. Minus business losses set off. So 1,70,330. That's how the answer has come. Understood? So technically here, if at all they have given an answer called book profit computed as per law, this entire discussion would have not come. Yes or no? And one more point you remember here. At many places what they say, unabsorbed depreciation and business loss, if it is there, we have a flexibility. Yes or no? Unabsorbed depreciation we can claim later. Business loss first we will set off. Now here book profit computation, first what are they doing? Unabsorbed depreciation they are claiming. Are you clear? This is like a small inconsistent. Are you getting it? Because why they are claiming like this? First calculate income of the firm under all sections 30 to 37. Unabsorbed depreciation reduction comes under 32. On that logic, unabsorbed depreciation has to be first claimed in order to compute book profit. That's the logic. Okay, this unabsorbed depreciation point in our material when it came also, I told I will discuss this later in set off and carry forward chapter in UO batch also. But that time also, since we don't have a practical question, we couldn't discuss. This is the best thing. Okay, case study number 12. Now once again, let me summarize everything. In the given question, they have given book profit. Okay, what we did, what happened, that analysis and all I spoke in the last 10 minutes, and before video 10 minutes, 15 minutes. 11,50,000 is deemed to be computed book profit. Now this book profit is deemed to be after all deductions under PGBP, even after adjusting unabsorbed depreciation, even after adjusting amounts, all that interest amount, all that. From this you need to calculate eligible remuneration to working partner. First 6 lakhs 90% or 3 lakhs, whichever is higher. Then balance book profit 60%. So eligible book profit, eligible remuneration is coming somewhere around 8 lakh plus. Now the actual remuneration paid to working partner is only 7 lakh 68. So 7 lakh 68 is the deduction. Then after that you have income of the firm current year. Then you have brought forward business losses which you can set off. Then you got income of the firm. That's it. Just one small assumption which we took wrongly has made entire this. And one more thing, what we thought was this is a normal book profit which does not include unabsorbed depreciation adjustment. Okay, and one more thing what we also thought is unabsorbed depreciation adjustment we can do later at last. Yes or no? But under 40B, for the purpose of assessment of firms, unabsorbed depreciation first has to be adjusted at first to arrive book profit. So in the given question, if it is a partnership firm related income tax work, income tax computation, unabsorbed depreciation is given, business loss is given. Sometimes they'll give you profit of the firm before interest, before remuneration, normal profit. They won't give book profit. Adjust unabsorbed depreciation also to arrive book profit. Yes or no? To arrive book profit. Then interest at 12%, unabsorbed depreciation, all that adjust to arrive book profit. Then you calculate eligible remuneration, which is against a set off and carry forward what they say. In set off and carry forward what they say, order of set off, I will show you. See this, see, you know, like I will challenge here one point. Oh, this only the discussion is there. Okay, not this. Order of set off. What is the order of set off? They say first current year depreciation, then current year capital expenditure on scientific research, then brought forward loss, then unabsorbed. This is the order which is suggested. In this order if I go, that computation is wrong. Correct? See, nobody will give you this. I bet you watch some other case study scenario of the same question, they will not give you all this. They will just mug up and then show you. But this inconsistency is there, right? Who will answer that? Because 40B section, you go 40B. You go 40B section. Let's see and get a clarity on this. Okay, 40B. Fantastic question. Actually, this is, we are learning actually the true subject and the mistakes within the subject. This is one more mistake actually speaking. 40B, 40 subsection B. Here it is there. In case of any firm accessible. Yes or no? Yeah, who is a working partner? Book profit remuneration, big profit, explanation 1. Yeah, explanation 3. For the purpose of this clause, book profit means net profit as shown in the previous year relevant as shown in the P&L account, computed as per chapter 4D, increased by remuneration paid to all the partners. Okay, now, so as per PGBP you compute income. Okay, now when I'm computing income as per PGBP, when I have a business loss, all that, so no business loss and all, chapter 4D only you should apply. Here they didn't apply set off and carry forward. Set off and carry forward comes under chapter 6 or chapter 7 as per income tax law. Chapter 5 set off and carry forward comes under chapter 5 discussion. Getting it? Since only chapter 4D as per that you should compute. Now 32. You know, in 32, no, brought forward depreciation is treated as current year depreciation. There's a meaning. It is treated as current year depreciation, yes or no? But again, if you go set off and carry forward, unabsorbed depreciation if at all is there, in the next year when you are setting off, first give priority to business loss, then unabsorbed. Here they did contra. Only for firms this issue is there. For others we don't have to worry. Because for firms, no, book profit is the basis for remuneration deduction. After remuneration only actual PGBP income of the firm will come. 32 subsection 2 is the one which is talking about unabsorbed depreciation. You see where in the assessment of the SSE full effect cannot be given owing to being no profits. The allowance, yes or no? Then subject to provisions of 72 subsection 2 and 73 subsection 3, subject to 72, subject to 73, indirectly means what? First you set off that 72 and 73. The allowance or part thereof with effect will not be given, as the case may be, shall be added to the amount of elements of depreciation for the following year and deemed to be part of that allowance, or if there is no such allowance for that year, be deemed to be elements of that previous year, and so on in the succeeding years. Forever it will go on. Subject to 72, 73 they said. If at all I have a brought forward business, I should not do this actually. Yes or no? If I have a brought forward businesses, I should not first claim depreciation. If I don't have brought forward business loss, no, then unabsorbed depreciation alone is there, then I can claim it as directly. That's it. Fine, I don't know if at all any of you who do not understand this much level, leave it. It's okay, no problem. Very simple. When you are computing income of the firm, first compute PGBP income of the firm before interest, before remuneration, after reducing depreciation, unabsorbed depreciations. Okay, all other deductions, then interest at 12%, then you will get book profit, and that book profit itself is given in the case study number 12 straight away. Someone new point, no? Yes, actually this one is not wrong. What we did is not wrong, because we just confused. In our book it is wrong, clearly we wrote, and because that book profit, and here also it's just a clerical thing. We didn't do any conceptual mistake. Technically it's out of hurriness. Okay, because remuneration paid to see non-working partner not allowed. Not allowed means which is not allowed, that only asked. Okay, next we forgot to consider that. Next, case number 13. But actually doing this kind of mistake analysis concept is actually what we did in this is not at all a mistake, technically speaking. Okay, that remuneration to see working partner interest, that we out of hurry we took disallowance part. Okay, fine. But the book profit analysis, what we did is actually logically correct, because very logically correct. What we did is, because we considered set off and carry forward order, we considered everything. Okay, here they did another assumption. Okay, but when you're following exam, follow whatever I say pattern only, don't follow our pattern. That's it. No super 20, super 30, super 40 questions will give this kind of clarity. This is ultimate clarity you will get on the subject. Next. Yeah, case study 12 is completed. Case study 13, next session. Yeah, let's continue the next case study, that is 13th one. Mr. Narendra Sharma, aged 54 years, an Indian citizen carrying on retail business in Dubai. He frequently visits India for business purpose. Okay, he's mainly visitor. He's a visitor. Details of his visits in India are as below. So they gave about past information. Okay, in 1920 year. So no, up to 31st March you can say 1920. So approximately he stayed for more than 90 days. Okay, we'll see. Again he came to India on 22-23 year. So no, again here approximately he stayed for October, November, December, Jan 10 days, September 9 days, somewhere around 110 days. Again came to India on 27th December 23 and left on 20th February 2024, somewhere like Jan 27th and February 20. So less than 60 days. Okay, less than 60 days. This is, I think, yeah, less than 60 days. Okay, fine, we'll see. Depending on question, we'll compute. Afterwards, he decided to shift permanently in India and closed his business in Dubai. So he came to India on 27th November 2024. So approximately 120 days plus he stayed here. Okay, and joined an Indian company, Cosmos Heritage India Limited, at registered office in Mumbai from 1st December 2024. Yes or no? So which means his salary income will be for 4 months only. Next, from December 2024, he has taken a flat on rent for 60,000 per month from Mr. Sarthak, an Indian resident, and Sarthak has provided his PAN number to Narendra Sharma. More than 50,000 rent they are paying. 194 IB. TDS has to be deducted. Yes or no? Since per month rent is exceeding more than 50,000, for all the months rent put together, at the month end, I mean in the year end, you need to deduct TDS. Yes or no? At 5%. That too, remember the 5% is up to 30th September. From 1st October it is 2%. Okay, fine, we'll see. We'll see that. So 2% here it is, deduction. Following details of his salary income earned in India. Basic salary, some 2,75,000. Cost of living allowance. Cost of living allowance is nothing but DNS allowance. DA actual meaning. DNS allowance actual meaning is what? For living, increased cost of living, they are giving it. And forming is part of retirement, which is 1,20,000. HRA 1,37,000 per month. Other allowances 1,56,000 per month. For the period from April 24 to November, his business income arising in Dubai is 26 lakh and his turnover for that year is 95 lakh. Okay, last year, preceding year turnover they gave. This is last year, preceding year turnover, and this is current year turnover, technically speaking. He is not liable to pay any tax in Dubai. This information is relevant. This information is relevant for 194 IB applicability. Okay, because 194 IB is applicable when 194 I do not apply. 194 I is applicable if the previous year turnover is exceeding 1 crore. If previous year turnover is exceeding 1 crore, 194 I will be applicable for the individual doing business in this year. So for this year, IB is applicable now. Next, he is active in equity share trading after coming to India. Following are the details of his portfolio. Okay. So purchase. Various companies he purchased on various things. Quantity, price, and brokerage, how much he paid. So no, brokerage is calculated on purchase price, obviously. Then again there is a sale. Oh my god, so many sales were there. This is very challenging question, technically speaking. This is very challenging question. Okay, we need to take FIFO order. For cost of acquisition computation, FIFO. Okay, suppose I bought 1000 shares at 100 rupees. Again I bought 1000 shares at 150 rupees. Later I sold 1500 shares, for example, at some 250 rupees. 1000 shares cost is 100, another 500 shares cost 150. Like that you need to take. Okay, FIFO basis you need to. Next, Rainbow Limited declared an interim dividend of 200% on 28th February. The record date was 31st January 2025. Record date. He wants to exercise the option to shift out of default tax regime under 115. So optional tax regime he is choosing. Next, now let's directly see one by one question and then figure out what are the answers. What is the residential status of Mr. Narendra for the previous year 24-25? Now we have to calculate the residential status. In current year, how many days he stayed for? In current year, how many days he stayed? Remember, basic condition 2 will not apply for a visitor, but he came India for permanent settlement. Therefore, basic condition 2, 60 days or more, 365 days or more logic we can apply. So no. Now look at in the current year, how many days he stayed? So 182, no doubt. I mean, sorry, not that. Sorry, that is not current year. Current year is about 1st December when he came here, 27th November. Yes or no? First of all, January 31 days, February 28 days, and March 31, December 31, and November 4 days, 27th onwards. Total in the current year 125 days he stayed. Correct? 125 days he stayed. And in the last 4 years, how many days he stayed in India? Last 4 years. Okay. So last 4 years, how many days he stayed? For example, in 2019 to 20, that visit will calculate. First of all, December 29 days. Yes or no? January 31, February 2020 is a leap year, 29 days, and March 31 days, and April 26 days. Almost 146 days he stayed. Next, again came to India 9th September and September 9 onwards, 28, October 31, November 30, December 31, January 10 days, which is 130. Okay. Next, again came to India on 27th December 2023 and left India. No, December 4 days. Yes or no? December 4 days and Jan 31, February 20. So which is 55. So by the way, preceding 4 years or what, that we need to first calculate, Because no, preceding 4 years only we should take information. You cannot take entire 146 also. Just a minute. Preceding 4 years means we are doing 24 25, 23 24, 22 23, 21 22, 20 21. Amma, we cannot take this entire 146. 19 20 we cannot take. Be careful. This should be considered as only 120 days. Yes or no? Sorry, 26 days. 120 days we should remove. Only April month 26 days we should consider. 26 days is stayed. 130 plus 26 plus 55. 211 days is stayed. 211 days is stayed. Current year 60 days or more he stayed, but last year less than 365 days. Since last year less than 365 days, directly I can classify him as non-resident. Yeah. Where is deemed resident concept? Deemed resident, when it will come? When he is not liable for? Wait a minute. He is having Indian income and having Dubai. Okay, they have given clearly. He is not liable to pay any tax in Dubai. Okay, fine. Yes. He is not liable to pay any tax in Mumbai. Dubai. 1 point. Sorry. They have given clearly the information. Moreover, per month salary, basic salary 2.75 lakh. Okay, 275. Just DNS elements 120 plus other allowances 156 is into multiplied by 4 months. He got more than 15 lakhs income. Indian sources income is more than 15 lakhs, and he's a non, and basically is a non-resident as per first category. Special residential status we can't apply here because he's not a visitor. He came for permanent settlement. Indian citizen, deemed resident, whether he's staying in India or not staying in India, we don't bother. Deemed resident provision is applicable if at all a person is an Indian citizen and not liable for tax in any other country. Yes or no? Then he is deemed to be a resident provided his Indian sources income is exceeding 15 lakh. Here it is exceeding. He is a deemed resident. Deemed resident is what? Resident but not ordinarily resident. Deemed resident is RNOR. Since that option is not given directly, I will go for deemed resident. Option number D. Easy question. Okay. Not easy because no. Here if at all we take 146, 120 days if you take, even then 365 not touching. So no confusion. People won't confuse. Not an issue. Okay. Next. Which of the following statement is correct in respect of dividend paid by Rainbow? Yes or no? Dividend is getting right. Dividend. Rainbow Limited declared dividend on 28th. So 31st. Yes or no? Yeah. Which of the following statement? Dividend is taxable, but since dividend is less than 10, no TDS. TDS point they're asking. Okay. Rainbow Limited is a public company. Next, dividend received from Rainbow is taxable in the hands of Narendra. Tax of 525 is required to be deducted at source. How much is the dividend, by the way, that we need to see? No. As on 28th May, how many shares he is having? So he purchased 50 shares. Okay. Rainbow. Then again he purchased only Rainbow. So Rainbow shares he didn't sell at all. Even 3rd January he purchased, which means as on record date, how many shares is having? You see here 50 plus 385 plus 465. Oh, I highlighted. Oh, sorry. 50. This one. Yeah, 200 and 100. Yeah. I'm sorry. 350 shares is having. What is the face value? All the shares are 10 rupees each. Yes or no? So 3,500 multiplied by 200%, which is 7,000. Yes or no? So the dividend related TDS 194 section. TDS on dividend is at 194. What is the rate of dividend? TDS 10%. Okay, just we'll see once. You see the provision 194 dividend, TDS on dividend. What is the rate of dividend? 10%. When you should deduct? If the dividend is exceeding 5,000 per financial year. Yes or no? Dividend is exceeding. And by the way, exemption is not there if at all shares are owned by so and so person. So here the person is liable for TDS. So 7,000 into 10% means what? 700. Obviously the answer will be, dividend received is taxable in the hands of Narendra and TDS of 700 has to be deducted. Yes or no? Thank God they didn't ask capital gains. Okay, sale is there, no? What shall be the TDS liability of Narendra for rent paid to Mr. Sardak? For him, 194 IB section is applicable. And remember, as per IB, he is paying how much rent actually? 60,000 per month only he is paying rent. You see? Yes or no? From which date? December onwards. 60,000 into 4 months only he is paying rent. Multiplied by 2%. 4,800 under 194 IB we need to deduct. Yes or no? That too in which month you need to deduct? March month directly. Narendra is liable to deduct under 194 IB 4,800 in the month of March 2025. I will once again show you that provision as well. So IB, yeah, here itself we can go IA. IB I have given it last. 194 IA. Yeah, you see IB where turnover is not exceeding 1 crore for them only. Yes or no? Any resident. 5% is the rate of TDS until 30th September. 2% is from 1st October onwards. Getting it? Then amount of rent exceeding 50,000 per month or part thereof, obviously. Then TDS has to be deducted either at the time of credit or payment of rent of the last month or last month of the tenancy. That's it. Correct? Next. So the answer is C. Next. What would be the income chargeable to tax in the hands of the salary? His optional tax regime, remember? Let's calculate. HRA is there. HRA exemption we need to calculate. Okay, fine, we'll see. We'll calculate, not an issue. So now he is getting salary, right? From which date he joined the company? From 1st, okay? From 1st December. So basic, how much is the basic salary? 2,75,000 into 675 multiplied by 4 months. 11,02,700, correct? 11,02,700. Next, DNS allowance 1,20,000, 1,20,200 multiplied by 4 months. 4,80,800. Yes or no? 4,80,800. HRA we will put working note 1. And other allowances since name is not given, I assume they are fully taxable. 1,56,000 into 4 months. 6,24,000. 6,24,000. Yes or no? Now this is the gross salary. Okay, now working note 1, HRA working note I will be doing. Okay, HRA received how much for 4 months? 1,37,838 into 4 months. We received 5,51,000. 5,51,352. This is HRA exemption. Yes or no? Now 3 of the least of the 3. First criteria. Okay, 50%. By the way, he's staying where? He's staying in Delhi. No, where is it? Indian company in Mumbai. So Delhi, Mumbai, Kolkata, Chennai. 50% of the salary. Yes or no? Salary means what? Basic plus DA for retirement plus commission. Commission is not there. So these two only we should take. 11,02,700 plus 4,80,800 plus commission is 0. 15,85,000. Sorry. Yeah. 15,83,500. Yes or no? Into 50%. First criteria. 7,91,750. Second criteria. Rent paid minus 10% of salary. Rent paid for 4 months is equal to 2,40,000 minus 10% of salary means 1,58,000. 8,350. Correct? Correct? Yeah. So is equal to 81,650. Third criteria, HRA received, which is 60,000 per month. So sorry. HRA received is almost 5,51,352. Least is 81. So which means taxable HRA 5,51,352 minus exempted HRA 81,650. Taxable HRA 4,69,702. Correct? So the taxable HRA 4,69,702. Now total it 11,02,700 plus 4,80,800 plus HRA taxable 469,702 plus other allowances 6,24. Is there any other amount? Nothing. Yeah, 26,77,202 minus standard deduction. Optional tax regime 50,000. 26,27,200 nearest 10 rupees. Yes or no? 26,27,200. 26,27,200. That's it. Exact answer. Clear? That's it. The answer deemed resident is correct. Option D 700, that is also correct. Yes or no? 194 IB, that is correct. 226, 27, 202. Perfect. Yes or no? Yes. Next. They didn't ask capital gains. If at all they ask FIFO method, but we still told FIFO. FIFO method you need to compute capital gains because very simple. Suppose I purchased 3-4 occasions at 3 different dates. I purchased shares. Now I sold half of the shares. Which shares I sold? Logic, I should always think like I purchased oldest shares first. That's what I assume. So oldest shares cost of acquisition. Some students, what they do is different purchases, different dates, different rates. They average it and then take cost of acquisition. Never. FIFO rate you should order. FIFO order you should go. Clear? That's it. It's 2 minutes. Next, case scenario 14. Akshaya Biyani celebrated 26th birthday on 15th May 2024. Okay, and arranged a grand party at Radisson Blu Hotel. On this occasion, he invited his friends, blood relatives and distant relatives to attend the party. The ceremony was very grand and the feast was also very spectacular. All the arrangements and decorations were absolutely wonderful. At the end of the party, Akshaya was awarded by gifts and flower bouquets as info. Okay, mother, type of gift, income from other sources. Okay, 122 carat gold chain. Gold is a capital asset as per other sources capital asset definition also. He purchased on the same day for 37,822. So this is the market value they gave. For movable assets, no, we consider market value, movable property. Father, he gave bracelet 56,000. Remember, mother is a relative, father is a relative, wife is a relative, sister is a relative, father's brother or sister of the either of the parents, relative. They are also relative only. Yes or no? Brother or sister of the either of the parents. Yes or no? Closest cousin, mothers, sisters, sons or daughters, cousins, they are not relative. And they gave car. Car is not a capital asset. So no gift taxation. Friends and other relatives and distant relatives, cash is considered since aggregate value is exceeding 50,000. Therefore, endpoint 1.51 lakh is taxable. So entire gift amount taxable is 1.51 lakh. In the remaining all other cases, it doesn't matter. You don't have to read because they are relative. Yes or no? What is the relative definition in other sources? Spouse is a relative. Yes or no? Like who are the relatives? Spouse is a relative. Mother or father is a relative. Brother or sister is a relative. Brother or sister of either of the parents is a relative. Yes or no? And any lineal ascendant and lineal descendant, they are relative. Yes or no? Of the, the person. And spouse, lineal ascendant and lineal descendant are also relative. Spouses of all of the above. Yes or no? Then Akshaya desires to set up a manufacturing unit with his friend in partnership on 1st December. For making this investment, he sold following jewelry which has received on 26th birthday celebration as gift. Mother's gifted gold chain 42,150. Cost of acquisition is cost to previous owner. Capital gains 49 subsection 1. Gift is received, which is a non-taxable source. If it is a non-taxable source gift, the cost of acquisition is cost to previous owner directly. So full value of consideration 42,150 minus cost of acquisition. Mother purchased it for 37,832. Yes or no? And this is short-term capital gain 42,150 minus 37,822. How much is that? 4,328. By the way, here I just want to give you one more alternative here. Not alternative, I just want to alert you. She purchased on the same day this set. Suppose if the mother said she got it from her grandmother. Yes or no? Who purchased it so and so year and now gifted it. Period of holding will be considered from the date of purchase of grandmother. And it would have become a long term. Yes or no? And tax rate will affect. The rate of tax will affect. Yes or no? Indexation will not come. Why? The sale is happened on 1st December. Sale is happened on 1st December, which is after 23rd July. So rate of capital gains on long term is 12.5. But here it's a short term. It's a short term and this is a normal short term gain, not 111 gain. So this is taxable at normal rates only. Yes or no? Yes. Next. And father's gold bracelet 60,180. 60,180 we sold. For this, no, at what price he purchased we need information. Father also purchased on the Same day, 56,075. That's a short-term capital gain. 56,075. How much it is? 4105. This is short-term capital gain. Father's brother gifted gold chain for 20,600. Now this I will calculate. 20,600 minus cost to previous owner. You know, father's brother, he purchased on same. He also purchased on the same day. Thank God, no much complication. 18,000. Yes. So short term capital gain is 2,400. So these three are the capital gains. Correct? Father 4105, mother 43. And all of them are taxable at normal rates of tax. Next. His wife gave him 1 lakh as a gift so that he could invest sufficient money in the unit clubbing provision. If at all, 64 subsection 1 clause 2. So no, not clause 2, clause 4. Okay. If at all, spouse has given any gift which is invested by me in a business, on the starting day of the business itself, if that amount is there, or on the 1st April of the relevant previous year, if the amount is there, for that year, whatever profit is there, capital proportion, we will apply clubbing. Fine, we'll see. Remember, so he started business on 1st December, and wife also gave on the same day. By the way, here there is a point here. He gave him, his wife gave 1 lakh, right? He invested in partnership firm. If it is a sole proprietary firm, different. Partnership firm, this logic is not applicable. For partnership firm, this logic will not apply. We'll see that. Okay. On 1st December, he invested 6 lakhs, including the amount received on the sale of the above gifts and amount received from base, and his friend invested 4 lakhs in the firm. So this guy invested 6 lakhs and a friend 4 lakhs. Total investment in the firm is 10 lakh. Okay. On 1st February, his wife gave again 1 lakh as gift to invest such money in the firm. And apart from that, he invested 50,000 more from his individual savings. Okay, so 1.5 lakh he again introduced as a capital contribution. But since it is not on the 1st April, no clubbing will not apply for that year profit. Yes or no? On this day, his friend also invested 1 lakh. So total 2.5 lakh capital added again. Okay, next. Since the firm is a manufacturing unit, at initial stage, the firm requires sufficient funds. So Akshaya sold his wife's gifted gold rings. Yes or no? Akshaya, Mr. Akshaya, okay. Gold rings for 40,250 each on 31st March. He deployed the funds as partners capital in the firm. Again here you see wife's money. Yes or no? How many rings each? He said wife's gifted gold rings for 40,250 each on 31st March and deployed the funds in the capital on 1st April. So wife's money once again added on 1st April 2025. For 25-26, if the firm is making profit, out of that profit some clubbing will apply, share of profit. Fine, we'll see. Based on the facts of the case, yes, that's why I'll tell you. For partnership firm, no, generally clubbing will not apply. I'll just once open our book. Okay, I'll just see here. Generally here, sole proprietary concern only we think of this option. Okay, look at it. For capital contribution, interest earned will be clubbed. Okay, interest earned will also be clubbed. Actually, you can calculate total business investment in partnership firm. Also, share of profit you can calculate how much is subject to clubbing. Yeah, wait a minute. Simple point. In a partnership firm, share of profit is exempted. Yeah, that's the reason I tell this point is always applicable for proprietary concern. Why I tell this point is applicable for proprietary concern? Because in a partnership firm, profits are okay, clubbing you apply, but it's exempted. No, there's no point. That is the reason this formula we don't have to apply for a partnership firm. Okay, so thank God it is saved us. Yes, 10 subsection 2A, share of profit received by a partner from firm is exempted. Yes or no? Only interest on capital is subject to clubbing, if at all that capital is out of gifted asset. That's it. Correct? Huh? So in such a case, on February 1st, wife gave again 1 lakh. No, for 2 months interest on capital will be there, na? That interest also will be subject to clubbing in the hands of the wife, because wife is the transferor. And we'll see. What is the amount of capital gain taxable in the hands of Akshaya for the previous year 24-25? We already computed 4105 plus 2400 plus 4328. How much is that? 10,833. Correct? Just a minute. Yeah, 10,833. Where is it? Yes, short term capital gain. Yes or no? Are you clear? Next. What is the gift amount not considered as income? Oh, not considered as income they are asking. What is the gift amount not considered as income? You know what? Here is a gift. Here is a gift. His wife gave him 1 lakh so that he could invest money. This is gift, one gift, which is also exempted. Again, on first wife gave him again 1 more lakh as gift. This is also gift, which is exempt. People know, many students do best of my knowledge, they will only total these values and identify. But here below, wife gave him 1 lakh as gift so that he invest. Again she gave additional money, yes or no? Additional money 1 lakh. Okay, and on this day friend also invested. That's it. Hey, wait, again, since the firm is a manufacturer, the firm requires sufficient funds, so his wife gifted 40,250 each on March. That they didn't mention, but we assume that is only one ring. The firm requires sufficient funds, so Akshaya sold his wife's gifted gold rings for 40,250 each on, and he deployed as capital on 1st April. When he kept as capital, leave it, but gift is received on 31st March only, but it is exempted only. I assume that 40,250 only, one ring only, I assume. Okay, is there anywhere information that number of rings? Wait, correct, wait a minute. Wife, a type of gift 4 rings, she purchased these rings on 15th May and fair market value. Okay, what actually here he did? Oh, sorry, sold gifts. Hey, sold gifts na, obviously this is also liable for capital gain computation, no? Yeah, it's not about gift received, it's about sale of gifts, we forgot. So 40,250 multiplied by 4. Amma, we missed 1,61,000. Yes or no? Minus cost of acquisition, cost to previous one. Akshaya, what is the cost for Akshaya? 4 gifts. She purchased these rings on 15th May for 35,500 each. Yes or no? Fair market value on 15th May is fair market value and gift date is this much. Gift day fair market value not important. Cost to the previous one 35,500 is important. 35,500 into 4, how much ma? 1,42,000. We need to consider this. This is also liable for capital gains. No, 1,61,000 minus 1,42,000 is equal to 19,000. Yes or no? Wait, one more thing. When the wife was purchased 15th May 2023 and he sold when these gifts 31st March, 15th May 23 to 31st March, less than 24 months. Since the transfer date is after 23rd July, 24 months logic I apply. Suppose if the sale date is before 23rd July, 36 months logic I apply for gold. Yes or no? Have to be very careful. So this is also a short-term capital gain. Though add it, not 10,833. Be careful. Yeah, it's how much? 29,833. Correct? All gift of gold, whatever he received, he sold. So cost to previous one logic we applied. What is the gift amount not considered as capital gain? That is easy. Here 1 lakh is there. Here 1 lakh is there. 2 lakhs plus. For gift computation, no, market value only we will take. So mother gift how much? 37,822 market value. Father gift how much? 56,075 market value. 4 gold rings she purchased, right? Market value is 37,429. This one you should take. Market value for gift computation purpose into 4 rings, 1,49,000. So until now 4,43,000 plus sister gave a painting 45,000 market value. Father's brother gave a 1 gold ring 18,200 market value, 506 until now. Yes or no? Closest cousin, that is taxable. This is this is not at all liable. This is taxable. Non-taxable gift is 506,813. Yes or no? Gifted asset value is 5,06,813. Is there any other gift here? That's it. 5,06,813. What happened? They are asking non-taxable gift only. No. What is the gift amount not considered as income? Actually, they did not take this 2 lakhs. They did wrong answer. Yes, it has to be. He gave him 1 lakh as gift so that you could invest that money. On first, he gave 1 lakh as gift. This they didn't consider in the option. Are they asking any property? No, they are asking normal question only. Yes or no? No, total gift not taxable. How much they are asking? Actually, it is 506. 3,06,813 is in the form of gold. All that is not taxable. Cash gift 2 lakhs he received no from wife. That is also gift on, total non-taxable gift is 506, but that option itself they didn't give. So based on that, these two information, this point, he gave him 1 lakh gift, here this 1 lakh gift, this is not considered by them, which is, it is to be considered, which means this answer is technically wrong. But you see, I told many students will ignore that. Paper setter himself ignored. Understood? So they considered only that. Fine, we'll see. Okay, we'll see what is the correct answer. We'll see B. Am I right? Next, what is the gift amount taxable? 1,51,000 we already saw. So no, there is no other gift which is taxable. If any amount taxable in the hands of Akshaya's wife in respect of sale of jewelry by Mr. Akshaya, if yes, what will be the taxable amount in her hands? If is any amount taxable in the hands of Akshaya's wife, okay, in respect of sale of jewelry by Mr. Akshaya, if yes, what shall be the taxable amount in the hands for previous year 24-25? Yeah, 4 gold rings is sold, right? Income on transport asset, correct? Income on transport asset is subject to clubbing, but any profit on sale of asset which is gifted by me, no, that profit is taxable in the hands of transferee only. Cost to previous one, we take all that, right? That is taxable in her hands only. So technically, asset transfer gift may not be taxable in the hands of the transferor. Just a minute. Okay, now see, we have 64 subsection 1 clause 4. What is this section says? Income out of transport asset is subject to clubbing in the hands of the transferor. Income out of transport asset means what? Income generated by that asset or income out of profit on sale of that asset. Anything it can be. I gave a gift, from that some income is there. That is subject to clubbing in the transferor hands. But first to know, before we apply clubbing, we compute income in the hands of transferee only first. First compute the income and then we will apply clubbing. Now, Akshaya, husband, what is the capital gain he got? 19,000, short-term capital gain. This entire 19,000 short-term capital gain is actually, okay, we compute in the hands of Akshaya. Capital gains we computed, but since this is a gifted one, it is again going back and clubbed in the hands of wife, transferor. 19,000. Right? Option number C. That's it. We'll see all the answers. First one we got 29,833. What they actually got is 10,333. 10,833. They did not consider. Wait. Wow, fantastic question this is actually. Yes, why? Because they are asking in the hands of Akshaya how much is taxable. This 19 is taxable for wife? No. Wow, fantastic. Exactly. This observation is very important because we applied this logic here. The income, capital gains or income on transport asset is not taxable in the hands of the that time owner. It is taxable in the hands of the transferor. So 19,000 is taxable for wife, not husband. Yes or no? Very important. Yes, that's correct answer. Because we did that analysis here. We applied the same logic and taxed here. We missed that point in the above. Yes. We see capital gains computation is in the hands of husband only. But taxability will be in the hands of wife because she's a transferor. Yes or no? Clubbing provision will apply accordingly. Though computation is in my hands, clubbing will be done with hers. That's it. So fantastic, no? And the next one, 306. What is this? Second option, amount not taxable. Array, they added everything here. Literally. Actually, no. Car is not at all a gift. Fine. See what they did, what is total? 2 lakhs also considered. What is the answer we considered? 506? 506, 813. Correct? 506, 813. 813. Now what? Gift from mother is not taxable. Father is not taxable. From wife not taxable. Gift from sister, 45 also not taxable. Everything we considered, right? Even this also we considered. This 4 lakh 10 we did not consider. Remember? Wait, let me tell. 4 lakhs we didn't consider. That is also non-taxable gift only, na? Yes or no? Wait, I'll tell you. So 506,813 plus 4,10,000 which is 9,16,813. Total gift received is 9,16,000, which is not taxable, they are saying. What we did, we considered only capital asset items which are not taxable. This is not at all capital asset, no. Car is not at all capital asset. Gift provision itself will not apply. So there is no question of non-taxable gift. See, what is non-taxable gift, Gift received from exempted sources. That is non-taxable gift, technically speaking. Yes or no? Something which is not at all a gift. As per other sources, car is not at all a gift. Technically, logically, they should not consider 4.1 lakh. Our answer 506 is right. Literal our answer 506 is right. But I think they have interpreted in a liberal sense. In a liberal sense, they interpret what is a total gift received which was not taxed. In that logic, this 4,10,000 is also not taxable. But what we conclude, this is not about taxability. 4,10,000 does not come in taxation purview itself. So that also they interpreted it as not taxable and added, so total amount came 916. That is why we practice MCQ. Now we did know. This logic will apply in exam, simple. Non-taxable gift means, remember now here one important lesson. Non-taxable gift means not only exempted gifts. Also add something which is not at all taxed because it is not a capital asset. That is also a non-taxable gift, that's it. Again, no, I'll tell you. In exam, the person who is setting this paper might consider, hey, this is not at all a capital asset. First of all, this don't come in the gift purview itself. He will ignore and say 506 answer they'll put. That is also there. That risk is there. That what is not, see, they should have asked what is taxable, which is right way. They should not ask what is not considered as income. Okay, why? What is the gift amount not considered as income? Yes or no? How much is not considered as income? So accordingly, this 4,10,000 is also not considered as income. So accordingly, they added. Okay, fine. So very good. This one is case study number 14. Fantastic. What are the other case studies that we figured out initially? 7, 8, 9, 11, 12, 14. These are the case studies were fantastic. Yes or no? 14 also take a note. 14 also take a note. We will make a YouTube video for the students to alert them these case studies. Okay, that's it. We will not put any video there because case studies, MCQ scenarios is purely for our regular students, pro students. That's it. Next. Fantastic, no? Yeah. This answer is right. This answer is right. That's it. They're supposed to ask. See, we computed correctly. This is only an interpretation mistake. This is that too a subjective. This subjective matter. This second option is subjective matter. First option, we did we missed to apply clubbing provision logic. Yes or no? Because in the hands of transferor we compute, but the amount will be subject to club in the hands of the transferee only. Even in the class I did not mention this point. In the class also we compute 49.1 gift loyal, that we forgot to link clubbing point. I'll add a clarification video there. This is a new learning which is very good, because this is kind we didn't test. The income on transferred asset we club, I know. Capital gains on transferred asset we don't. That's actually logically correct only. That is also income only. No, that is also income, forming part of income. So income is subject to clubbing in the hands of transfer only. So but we explicitly did not discuss that. That's it. MCQs is, that is why case scenario booklet is fantastic. I'm telling you, top 30 questions, top 50 questions, top 100 questions does not pay any impact. This is what the real question bank is like. This is a fantastic question. All the questions are. That's it. Yeah. Next. Okay. Next case scenario, small only. But so much depth is there, no? We'll see in whose hands income is received. Okay. Clubbing provisions only. Business loss would be included in the hands of Rajesh. What is total income? What is the total? Okay, fine. Not an issue. Okay. Simple question only. We'll solve and then take a break. Mr. Rajesh gifted 15 lakh to his wife Ravi on birthday 23rd February 2024. This is in the last year. February 24 means last year. Because for all our exams, for May 25, September 25, Jan 26, financial year is 24-25. Ravi lent 6 lakhs out of gifted amount to Karuna on 1st April for 6 months, on which she received interest of 30,000. 30,000 is taxable in the hands of Rajesh. The said amount of 30,000 was invested in shares of listed company on 18th October, which was sold for 66,000 on 25th March. Yes or no? Securities transaction tax paid on purchase and sale of shares. This is short-term capital gain, 111A. How much is 66 minus 30? Total 36. So this 36 is a gifted, no? Yes or no? The said sum 30,000 was invested. Okay. This is accretion. This is taxable in the hands of Ravi only. This is accretion to the asset. Yes or no? Income on the income she invested. So it is not income on transferred asset. It is an income on income of out of the transfer. So this is not subject to clubbing. Okay. Huh? This 36 will not be clubbed. This 36 will be taxable in the hands of Ravi. The balance amount of gift, see, balance amount means what? Out of 15 lakhs, 6 lakhs. So balance amount means 9 lakhs. This is 9 lakhs. Yes or no? 9 lakhs. Now, balance 9 lakhs was invested in 1st April 2024 as capital by Ravi in her new business. Oh, gifted asset is invested in the business, that too on the first day. So which means in that year, if the business generated any profit, out of that profit, opening gift amount divided by opening total capital into profit of that year, that much amount is subject to clubbing in the hands of the transferor. She suffered a loss of 22,000 in the business. Income is subject to clubbing means loss is also subject to clubbing. Okay. Ravi is working with a private company. Oh, total capital itself is 9 lakhs only. In her new business, she suffered a loss. Is there any other amount she invested out of her own capital in that business? Nothing is even information. So which means entire 22,000 loss is subject to clubbing in the hands of Rajesh. Yes or no? We'll see for other any capital. Further, he is getting salary of how much? Yeah, 62,000 per month. And she paid 3,500 for tuition fee for her daughter Ria, studying in St. Thomas School. 80C deduction. Yes or no? By the way, here both of them want to pay tax on a DETR. So chapter 6 is irrelevant. Yes or no? Fine. And chapter 6 irrelevant, salary income is there, automatically 75,000 standard deduction. Rajesh is working with MNC on a monthly salary of 64. Let us use yellow color for entire salary. Okay. Rajesh is working with MNC on a monthly salary 64. He has gifted 1,25,000 to Ria on 13th birthday. The amount is deposited as 2 years term deposit SBI in her name, on which interest of 11,500 earned during the year. Again, that 11,500 is also subject to clubbing in the hands of Rajesh. Both of them are exercising default tax regime. Okay, very good. Okay. In whose hands in the interest income received from Karuna and interest income on FD, son would be included, Ria. In the both interest income will be included in the hands of Rajesh only. Yes or no? Karuna, out of 6 lakh gifted to Karuna. Okay, fine. Out of gifted assets only, both are. Okay. Next, is there any other income? Income in the hands of Ravi? No. Rajesh, and interest for 2 years will be included in the hands of Ravi. No. Both 2 years term depositors, both are included in the hands of Rajesh. Yes or no? That's it. In whose hands loss from business and capital gains would be included in assessment year 25-26? Just 1 minute. Yeah, Rajesh, na? Correct on, on which interest is earned here. Okay, as 2 years fixed deposit. Interest income from Karuna to be included in the hands of Rajesh, and interest for 2 years deposit is included in Ravia. No. By the way, MNC, he gifted 1,25,000 to Ria. The amount is deposited. Okay, fine. It's out of gifted asset. So Rajesh only. Both are included in the hands of Rajesh. Correct only. Next. In whose hands loss from business and capital gain would be included? Assume that capital invested in the business was entirely out of funds. Total capital is out of funds only. So loss from business is included with Rajesh. Capital gains also, right? Capital gain, no. Capital gain is not subject to clubbing, we saw. Yes or no? Capital gain, both loss would be included. No. Loss from business is included in Rajesh. Capital gain is included in Ravi. That is correct. Yes or no? Business loss will subject to club. Capital gains, no, this is out of accretion of income. That is for her only. What would be the total income of Mrs. Ravi? Okay, we'll compute here itself Ravi income. Both of them we have to compute. Rajesh and Ravi. Rajesh and Ravi. Okay, for Rajesh, income from salary, how much ma? Rajesh, no, income from salary 64,000 per month into 7,68,000 minus 75,000. There is no information on allowances, all that, right? 6,93,000. This is income from salary. PGBP, there is a loss. How much it is? 22,000 loss. But we can't apply set of the year. Amma, whatever it is, business loss cannot be set off with salaries. Therefore, the gross total income will be 6,93,000 only. Wait, clubbing incomes are there. Yes or no? Clubbing income. If clubbing income is there, this business loss can be set off with clubbing income. No, other sources incomes. No, we'll see that. Okay. Now she has received interest. No, 6 months, 30,000 interest she received, right? Yes or no? This 30,000 is subject to clubbing under IFOS. IFOS 64 subsection 1 clause 4. 30,000 is subject to clubbing. Next, is there any other income subject to clubbing? Wait, I'm seeing. Yeah. Tuition fee. FD interest 11,500. That is also subject to clubbing. Yes or no? 11,500. IF, interest on FD. Is there any other amount subject to clubbing? Rajesh, we wrote you. Then that's it. Correct, right? That's it. Is there any other income that is subject to clubbing? No. That's it. So total. This business loss I can set off with other sources. I don't have any restriction. So 6,93,000 minus 22,000 plus 30,000 plus 11,500. So the answer is 7,12,500 for Rajesh. We'll see here 7,12,500. Oh my god. Rajesh. What is the income of Rajesh? What happened? 7,12,500. Yeah, correct on, Is there any other income given? Just a minute. Just a minute. You see here. Here it's Ria, no, gifted amount. We are thinking Ria wife. No. Yeah, Ria is a daughter. Children income is subject to clubbing in the hands of parents whose total income is higher. That we need to check. No. We actually missed the names. Okay, Ria means I thought I didn't observe the 13th year. Right now I observed the 13th birthday, which means daughter she is. Yes or no? Did they say anyway that daughter she is? Yeah, indirectly they gave a clue. Daughter studying. Yeah, Ria is a daughter. Okay, very good. Great. Okay. So 13th birthday. So 2-year term deposit. That's why every word in the question has to be carefully read. Every word has to be interpreted. Don't take it granted. Because when I'm reading, I just moved away. I didn't even observe this. Yes or no? He gifted 125 to, I thought wife. Yeah, no. That 11,500 is taxable in the hands of parents whose total income is higher. Fine, we'll see. Now mother income we need to compute. So Ria income we can't club right now. Okay. Now accordingly our answer also will be both interest income. Okay, this is fine. Interest received from Karuna, interest on FD. Oh, Ria. So Ria interest income is there. So the answer has to be seen separately. So the first question, the answer we need to see separately. Yes or no? Wait. So first question, the answer is not over. Whereas this is correct. Second one, point B is correct. Now Ria income also we should compute. Then accordingly we will get the answer. So Ria income. Ravi income. Ravi. And what is her salary income? Ravi. See, that's simple. That's minor point. We interpreted wife without even looking at Ria name. See, actually we need to daughter Ria daughter gift. Amma. We have to be very careful. From next question, literal every word will interpret and then we cross verify. Yeah, next. She paid 3. Okay, fine. Now Ria income we need to compute, right? What is Ria getting? 62,000. Sorry. What Ravi is getting? Wife is getting how much? 62,000 per month. Okay, 62,000 per month into 12 months is equal to 7,44,000. Okay. Next. Okay, is there any other income? A capital gains is there for Ravi. 36,000 capital gain is there. Yes or no? Yeah, 36,000 is there, right? Yes or no? Yeah, short term capital gain 36,000. Correct? Now you apply other clubbing provisions. You can apply other clubbing provisions, no problem. We did not deduct. Yeah, of course, I'll. So short term capital gain. Ravi, income from salary, how much? 6 lakh 69,000. Okay. And short term capital gain, triple 1A, how much? 36,000. Therefore, total income is how much? Is there any other income that is taxable in the hands of Ravi? Nothing. Nothing is taxable. How much it is total? 7 lakh 1,000. Now here let us clubbing. 693,000 minus 22,000 plus 30,000. Appa, 7 lakh 1,000. So income of mother is higher. Therefore, 11,500 is taxable here. Mother income minus minor income 1,500 exemption 10 subsection 32. What about this? DTR. Yes or no? So it will not. So automatically Ravi income will be totally 7 lakh 16,500 and this income is 701. Fantastic question, no? Now here we'll see. So interest income from Karuna to be included in the hands of Rajesh. Interest on 2 year will be in the hands of Ravi. Correct? Yes or no? Yeah, T. This is correct. Now Ravi income is 7,16,500. Rajesh income is 7,01,000. That's it. So answers are D, C, A, C. D, C, A, C. D. Correct only. They gave D. C, D. See, they gave the wrong numbering. So actually D only correct. Okay. D. Option D. Yeah, that's it. So fantastic questions, no? Yes, 15th question also exceptional. Fantastic question that is. Many students will not observe this level of detailing. Okay, that's it. Okay, we'll take a break and get back. So let's continue case number 16. Okay. Ms. Heatel transferred to his husband Hemant a residential property worth 45 lakhs located in Nagpur without consideration. Between relatives transfer exempted. The expected rent of such property is 5 lakhs. Municipal tax of 5,000 paid by Ms. Heatel for this property during the year. Okay, 24-25. Ms. Heatel has 3 residential properties in Mumbai. By the way, Heatel transferred to his husband Hemant a residential property worth 45. Heatel is treated as deemed owner. 27 section deemed ownership. Okay. Ms. Heatel has 3 properties in Mumbai. The expected rent from 3 properties situated in Mumbai is 10 lakhs, 11 lakhs, 12 lakhs respectively. He purchased properties out of her own funds. Municipal taxes are respectively they have given. Okay, we'll see that information later. The same, however, not been paid this year in respect of 3 this is due. Municipal taxes is due. Oh my god, need to be careful again. Everyone. Fine. Municipal taxes due and not paid during the year. Sometimes in exam, no, they will not give this sentence. They will not give, and they said here due only. We assume sometimes as paid. Thank God here they gave this point, so we are able to figure it out immediately. Sometimes they'll not give this. Every word, be careful, check points. Whenever you're reducing or whenever you're adding, whenever you're considering amount, you please consider what are all the conditions and see in the given question condition satisfied or not. That's the best way. Next, the expected rent is lesser than standard rent in case of all aforesaid. Okay, so expected rent is decent only. Ms. Heatel does not have any other income from other source. Okay. Next, there is another one. Heatel's father, aged 58, had capital gains of 5 crore from sale of house property. He reinvested the proceeds from sale in another residential house 4.9 and the remaining proceeds he deposited in savings bank. So 54 exemption. Yes or no? 54 exemption. And remember, when the capital gain is more than 2 crore, you can only invest in one property, and luckily he invested only in one house 4.98. You will get exemption up to 10 crore limit is there, 10 crore or investment whichever is lower. 4.9, 2 lakhs only is taxable. Yes or no? He paid 1 lakh 50 towards LIC premium, ATC. He has no other source. Grandfather is aged 81 and has interest income of 6 lakhs on FD. He has no other income for the year 24-25. He has to fly to USA for his treatment of cancer on 31st July, and his return of income is not filed before flying to USA. His return of income is not filed before before flying to USA. His due date is 31st July only. So no, yeah. Non-filing of return will be attracting penalty, all that. Based on the facts, give. What is the amount liable to be taxed in the hands of Mr. Heatel for income from house property for the assessment year? So one house, okay, he gifted no Nagpur house and three houses in Mumbai. So let's identify. Expected rent is 5 lakhs. When nothing is given, it is per annum we assume. So no, what is the expected rent of all the four properties? Remember, whether they are let out or rented or they have not given. Okay, so self-occupied, that also they have not given. Nothing is given, so we assume that all are deemed let out properties. Let us take an assumption. Okay, fine. So 10 lakh plus 11 lakh plus 12 lakh, okay, 33 lakh plus of course 5 lakhs gifted house, okay, minus 30%, 26.6 lakh. Okay, next. So that is the income from house property, but actually no, 4 houses she has indirectly, nothing but. She has totally 4 houses, nothing but. Oh, since let out information is not given, only expected information is given. Expected rent, since they are deemed let out, we assume they are basically self-occupied. For any two self-occupied properties, we can take NAV 0. Which properties we will take here? Here shortcut you can apply. High expected and 2 properties are there. For both of it, you can claim NAV 0. Yes or no? For remaining 2, we take GAV. Yes or no? Shall we do that assumption? Because let out information is not given, I assume that all are self-occupied. Since all are self-occupied, interest on loan information, that and all is not there. You don't have to apply options and all. Top 2 properties with highest expected rent, they you take it as NAV 0. Easy? Yes or no? Now look at. So 2 properties NAV is equal to 0. Now Nagpur property and house 1 in Mumbai. For that alone, 10 lakhs, 5 lakhs. Yes or no? This is 5 lakh, this is 10 lakh. Whereas for Nagpur property, she paid municipal taxes. 5,000 paid. Yes or no? Minus NAV 4 lakh 95,000. Here nothing is paid, 10 lakh. Minus 30%. So 14 lakh 95,000 minus 30%. So 10 lakh 46,500 is income from house property. Assuming 2 houses are self-occupied. Because why we took this assumption? Because let out property, actual rent information is not given. Expected rent information only given, actual rent information not given. I assume that they are self-occupied. Is there anywhere indication that they are self-occupied anywhere else? No, they have not given any indication. So that's an assumption. Yes or no? How much is the answer we got? The answer is B. So good that we computed correctly. Here, many students might not understand this logic. Since actual rent information not given for 4 properties, all the 4 we assume that it is self-occupied, and 2 properties NAV is equal to 0 we can claim. Which 2 properties? Those 2 properties in this example with higher expected rent. Normally what we should do? We should calculate income from house property using 4 options. Not 4. 4 options. 4 houses are there, 4 options. Long process. If at all interest on and everything is given, but luckily nothing is there. So based on expected rent, we took a decision. What would be the tax liability of Ms. Heatel for the assessment year 25-26? Compute in the manner that so that her tax liability is minimum. Oh yo, we need to compute in both the ways. We just now computed income from house property already. Is there any other income that is there? Is there any other income? Heatel's father income details were given. Grandfather income is given. Miss Heatel income is given. Correct? That's it. There is no other income for her. Only 10,46,500 only is there. Yes or no? I'll compute. Yes or no? Under optional tax regime, 10,46,500. Okay. 1,12,500 plus 46,500 into 30%. Yes or no? 13,950. Why 1,12,500 up to 10 lakh? The tax, basic tax is this much. So plus 3%. 1,30,243. Yes or no? 3%. Sorry, 4%. No. 3 rate was 3. 1,12,500 plus 13,950 plus 4%. 1,31,508. Okay. That's it. Next. Whereas same income 10,46,000. because interest on deduction and all is not there, the same income will be income under default tax regime also. Okay, up to 30, 0 to 7, 20,000, up to 7 to 3 to 7 into 5%, yeah, correct, 7 to 10, 3 lakhs into 10%, 30,000, and 46,500 into 15%, right? So total 56,975 plus 4%, correct? 59,254. That's it. The answer is B, because lowest amount is this one. Yes or no? This is highest amount, 1,31,000. Yes or no? Answer is B. Is Heatel's father required to furnish his return of income in India? Yes, he has to. Yes or no? Heatel's father, before claiming 54 exemption, his total income is more than basic exemption limit. Therefore, he must file return of income. Yes or no? Yes, he is required to furnish return of income on or before 31st July, 30th September, 31st October, no, 31st July. Let us see once, is there any PGBP income for him? That's it, no PGBP income. That's it. Next, all are B only. His grandfather required to pay advance tax during the, if at all he shifted out of default tax regime, optional tax regime is going. Advance tax does he has to pay? Because no, he has income how much? 6 lakh. Okay, he has no other income. And remember, a senior citizen who does not have PGBP income, advance tax provision does not apply. Yes or no? So he don't have to pay advance tax. No, he's not required to pay advance tax. Not required, since he's a senior citizen and he's not having any income under PGBP. Perfect. BBBC. B, B, B and C. That's it. Okay. Next, case scenario 17. Entire income tax revised no in this, except PGBP few provisions. Almost capital gains everything was revised. Oh, now I think PGBP is coming now. Receipts one provision he brought. Oh my God, set up and carry forward. Next, Ms. Chanchal, aged 45, provides the following data of her gross receipts for the year 23-24 and 24-25. Okay, it's actually 23-24. Okay, he is in the agency business along with providing services as tarot card reader. Okay, agency business along with providing services as tarot card reader. What is it? Tarot card reader. I'll see once in Google. Tarot card reading. What is it? Okay, it is something like kind of past, present, future, astrology kind of. The process typically brings drawing, interpreting cards to uncover meaning. Tarot card reading is there, similar to the tarot card reading. Okay. Okay, fine. Okay, she's in astrology. That is not a notified profession. Okay, notified. That's other than notified profession. Is generally engaged in cash payments and cash receipts. Oh, majorly in cash receipts and cash payment. Total gross receipts, profession they have given, business they have given. So business they have given the current year and last year. So no, fine, we'll see. He paid an amount of 12 lakhs to a contractor for polishing her old furniture in her self-occupied residential house property on 12th April 2024. Further, on 5th June, she has taken services from interior designer for the same residential house. Personal property. TDS section will not apply. 194C will not apply. But there is another section called 194M. It is applicable even if it is personal in nature. But the threshold limit is 50 lakh. 50 lakh in a year. So since it is less than 50 lakh, 194M also will not apply. And last year 1 crore exceeds business receipts. So automatically they are liable for all the sections of TDS. There is no exemption. There are 6 section combinations 194A, 194C, H, I, J, R. These 6 sections will apply to an individual and HUF only if their business receipts in the previous year is exceeding 1 crore. Or professional income, professional receipts are exceeding 50 lakh. But here, last year business is more than 1 crore. So there is no relaxation in any of the TDS section. 194C, everything is applicable. But 194C does not apply for personal purposes. Even for personal purpose, 194M is applicable. But 194M is applicable only when the threshold limit is 50 lakh. 50. That's it. Next, on 28th May 2024, he sold one commercial property of 50 lakh. The stamp duty value on the date of registration is 58 lakh. The value adopted for stamp duty was 54 lakh on the date of agreement. Part payment by account pay check was received on the date of agreement. It was purchased for 40 lakh on 28th June 2022. Okay, we'll see. We'll come back. Capital gains computation, if it is there, we'll come back. Brought forward long-term loss, we can set up only against long-term capital gain. Okay, from unlisted shares, 5 lakh 50. Potential incurred a loss of 70 lakh while trading in agriculture commodity derivatives. No CTT was paid. Okay, so commodity derivatives is not treated as a speculation. Yes or no? Agriculture commodity derivatives, they are not treated as speculation. I will show you. Speculation. You see here. In this, transactions not deemed as speculation. Commodity transaction tax requirement do not apply for agriculture commodity, and commodity derivatives is not a speculation. They are not deemed to be speculation. Yes or no? She was trading in commodity, no CTT, so there is no need. Yes or no? Okay, generally what is speculation eligible? Something which is liable for CTT, then only that is commodity derivative, then only that is exempted from speculation. Sir, I am trading in agriculture, sir, CTT itself does not apply. Then what about it? Since CTT itself does not apply, agriculture commodity is also called as commodity derivative, that is also excluded from speculation definition. Next, Ms. Chenchal has opted out of default tax regime under 115 BAC for, okay, so which means optional tax regime. Appa. Now, first, is Ms. Chenchal liable to tax audit under income tax for this year 24-25? Since current year turnover is not exceeding 1 crore and also receipts are not exceeding 50 lakh, therefore no need to go for tax audit, because first criteria, clause A, clause B, in both the cases, if you see, she does not liable for tax audit. No, as gross receipt from business or profession are below threshold limits. B. Yes or no? With respect to payment made to contractor and to interior during this year, she contended various persons. They have following views. She is required to deduct TDS, not required to deduct at source, neither under 194C nor under, no, not 194J. She is not required to deduct TDS under 194M. First of all, no, for her 194C is applicable. Technically 194C is applicable. 194M does not apply. Yes, correct. I told, yes, correct. I'll tell you, 194M is applicable. Actually, when I'm telling you previously, 194M we should not check. 194M is applicable to whom, you know? If previous year business turnover is less than 1 crore, for them 194M is applicable. Turnover. Actually, what we interpreted now is 194C will not apply because for personal. 194M is applicable for personal. That's what we thought. Yes or no? Actually, yeah, we can apply 194M for personal also. Getting it? 1 minute. Let me once open the 194M directly and then show you. You will understand better. 194M. See, you should recollect the provisions in such a strong way. So, payment by individuals who are not covered under 194C. Yes or no? And payments made for personal. This category you will be covered. Which means our analysis is right only. Since you made for personal purpose, 194M is straight away applicable. Okay? Fine. Since she is not required to deduct TDS under 194M, since payment to each individual does not exceed 50 lakh. Yeah, correct. Correct. And one more thing, actually no. He paid for interior decorator, no. Both are for personal purposes. Further, okay, she has taken renowned interior designer for the same residential house, 2 lakh 50. Actually, third answer is also correct only. Third answer is also correct only. Because no. Wait a minute. Okay. I'm sorry. Which views are correct? Yeah, thank God. Yeah, these are only. Yes, correct. So which is our analysis is right. Yeah. So 3 and 4 views are correct. Is required to deduct, that's wrong. No, that's wrong. Yeah, option number A. Abba, thank God you observed it. Otherwise, you'll be stucking there only. You see, always options will be A, B, C, D. If you see some numbers, na, that is not an option. Be careful. Okay. Yeah. So C, 3 is correct. You don't have to, because personal purpose 94C, 94J will not apply. And moreover, 94M is applicable here. But since threshold is not exceeding 50 lakhs, you don't have to. What is the amount and nature of capital gain chargeable to tax in the hands of Chenchal? Now we need to compute capital gain. What's the sold commercial property? Okay, stamp duty value on the date of registration is 58. On the date of agreement, 54. Part payment was received on the date of agreement. So automatically 54 is applicable. Yes or no? Now 54 is not more than 110% of consideration. Therefore, actual consideration only FEC. 54 lakh is not more than 110%. Therefore, actual consideration itself is FVC. Yes or no? Therefore, full value of consideration is 54. Is there any brokerage information? No. By the way, when she sold the property? 28th May she sold. 28th May she sold. Before 23rd July she sold. Before 23rd July, if at all she sold the property, you will compute capital gains by taking indexation facility. If at all it's a long-term capital asset. And for removable property, criteria is 24 months always. Before amendment, after amendments, it's 24 months only. When she originally purchased this, 2022, it's a short-term capital asset. The short-term straight away, no question of indexation. Minus 40 lakhs. So index numbers and all they gave just to confuse you. Yes or no? So 28th June she purchased, and May month, within 24 months, less than 24 months, it's a short-term. Therefore, 14 lakhs is a short-term capital loss. Sorry, short-term capital gain. And the brought forward long-term capital loss, we can't set off. Long-term capital loss can be set off only with long-term capital gain. Yes or no? Therefore, 14 lakhs is short-term capital gain. You see, we applied here the concept of period of holding. We applied the logic of 23rd July. And what is the tax rate they may ask you, for example, here? This is a short-term capital gain. I mean, immovable property, normal rates of tax. Normal rates of tax. This is taxable at normal rates. What is the amount of losses which can be carried forward, assuming that business income is 45 lakh and income from profession is 25 lakh for the previous year, 24-25? What are the, does she have any loss in the previous year in the business? There is no loss. Yes or no? You don't have any loss. Only long-term capital loss is there. Yes or no? Which will be carried forwarded again. Okay, wait. Non-speculation loss. Commodity derivative, she has a non-speculation loss. Yes or no? Long-term capital loss untouchable. You just have to carry forward again. This particular 70 lakh loss, since it's a current year loss, correct? This commodity is current year, during the year only. Since it's a current year loss, I can set off against first PGBB and then I can set off against other sources. I'm sorry, profession. 45 plus 70 and 70 lakhs loss is there. Set off business income is 0. Therefore, only capital gain loss is only to be carried forwarded. Yes or no? So capital loss is how much already? Capital loss is how much already? Pending capital loss 5,50,000. That 5,50,000 will be carried forward as per 74. 74 section 3 deals with capital loss carry forward 5,50,000. 70 lakhs PGBP non-speculation loss 73. We set off with the business income and profession income. No loss is required. No. 550 and 54 7 lakh. No. The answer is A. Very careful. So the answer. No, both are within threshold. B. Option correct. Correct? 3 and 4. Correct. Option B 10 lakhs and short-term capital gain. Hey, correct on, 50 lakhs only we interpreted, no? Why we took 54? We interpreted, no? 50. We thought 50 only. Then why we took 54 amount? 54 is not exceeding. I think the student would have, whoever is watching would have figured out already that I accidentally took 10 only. That is 10 only. Again. So it's actually 10. We interpreted correctly. 50 only we should take full value minus 40. But when we are taking for cost now, we accidentally 54. Yeah. The answer is B. Correct only. B is correct only. Our analysis is correct. Yes or no? Since not exceeding, numbers were. Yes. and this is 5,50,000 under only 74. That's correct. Till now probably we would have made 4 or 5 mistakes just because of carelessness, purely because of carelessness. When we are taking the amount also, we should recollect the amount once again. Next. This is also very good question. Technically this is a sound question. Yes, note it down. 17th case scenario. Okay, exceptional. How many were there till now? 8. Okay, that's it. You just message me on Telegram. Okay, what are the case study numbers? Carefully, exceptional. So that's it. I will make a YouTube video for others so that they will definitely solve this. In every case scenario is extraordinary, technically speaking, but these are something very like jolting. Yeah, they give a jolt. Next, case scenario 18. Mr. Abhishek Seth, aged 42 years, is working as a CEO of Soil Limited. He provides you the following information for preparing and filing his income tax return for 31st March 2025. Okay, 42 normal citizen, all that. By the way, is he opting default tax regime or what? Any information? Opt out of default tax regime, so optional tax regime. Salary, allowances, perquisites all put together 1 crore 35. Dividend from PQR Limited, remember this is gross salary minus 50,000 standard deduction. Next, dividend declared received in July 5,90,000 gross. Okay, gross only they gave. Interest income savings bank 24,530, that is also gross only. Nothing is mentioned, we assume it is gross. Long term capital gain on transfer residential house in 15th 1,73,540. Remember the transfer date is on 15th December. When this house was purchased, that information is not given, but since they said it's a long term capital gain, since they said long term capital gain, house is purchased before, index information is not given. So index actually question is incomplete. If at all they're asking tax liability, the question is incomplete. Why? We have to know this is without indexation. On this 12.5% tax rate I'll apply, and with indexation capital gain is how much we don't know. Understood? If at all tax amount they're asking, since absence of information is there, we proceed with 12.5% if at all tax question is there. Short term capital gain on transfer of listed equity shares, STT paid board transfer and acquisition on 22nd June 73 lakh. Wow, 73 lakh short term capital. I think when I see this all this total, I think such as question they might be asking. We'll see. He also furnishes the following details of investments or payments made by him 24-25. 3-year post office time deposit. Remember it's a time deposit, and what is the age? 42. So no problem. IFOS. Contribution to PPF 80C. Tuition fee for 3 children per annum per children. Total is 60,000. For all the 3 you can claim. Tuition fee you can claim for children only. I think it is only for 2 children. Okay, we'll see once. Tuition fee. Interest on education loan is there, right? 80E. There you don't have any limit. There you don't have any limit. Tuition fees for 2 children only. Yeah, up to 2 children. Specifically highlighted. So no. Whereas under 80E, no, education loan, interest on education loan, any number of children. There is no limit on them. Okay. Consistency in entire income tax law. So 3 children, only 2 children you will claim deduction. Correct? So only 40,000 you will get deduction. Subscription to NHAI bonds redeemable after 5 years. This is also 80C. But remember, total of 80C, 35 is there, 40 is there, 75 plus 2 lakhs, 275 restricted to 1.5 lakh. Further, his son, Dhaval, aged 15, has also earned the following income. Income from quiz competition, since it's a skill and talent, not subject to clubbing. Income from FD, 9.5, subject to clubbing, 1500 exemption is. Okay, and here mother income is not given, right? Assume the tax has been deducted on time, everything Abhishek has opted to. Okay, mother income is not given anywhere. Therefore, it is subject to clubbing in the hands of the father under income from other source. Correct? Fine. Now we'll see the question. What is the quantum of income of Dhaval which is to be clubbed with Abhishek, if any, assuming his income is greater than spouse? Okay, now how much is subject to clubbing they're asking? Okay, 8,000 after 1500 exemption, clubbing income will be 8,000. So no, quantum of income which is to be clubbed At the time of clubbing, after exemption, we should club. Yes or no? Option number B. Next. What is the gross total income of Abhishek for the SS? This we need to compute. What is the amount of deduction allowable under ATC? Amount of deduction allowable under ATC to Abhishek. We'll see. Wait. We are getting 1,50,000. No answer. So no. Contribution to PPF 35. Tuition fee in Bharat Senior School 40. Okay. 75. Subscription to NHA bonds after 5 years on 16th March. We'll see NHA bonds. What is this? There, no? NHAI. This is RECL. Actually, I think ATC does not have this. Thought it is ATC because no, ATC generally we don't remember. Generally we don't remember that list. Basically we don't remember. Yes or no? We assume that anything is ATC only if it is approved. Oh my God, if this is tested like this, it will be very unfair. Huh? No, but actually this is good. Here, is there any National Highway Authority of India bonds? Contribution. Government employee, contribution to Provident Fund, Sukanya Samriddhi Scheme, National Savings Certificate, we know. Mutual funds, we know. Deposit scheme notified such as public sector authorities. What is this here? He purchased subscription to NHA redeemable bonds. Okay. Okay. So payment towards tuition fee, payment towards purchase or construction of residential, subscription dividends or debentures of eligible issue, units of mutual funds, investment in 5 years. Okay, senior citizen. There is no that list. NHA bonds is not covered. Too unfair. Too unfair. NHA bonds is not covered. Therefore, how much is eligible? 75,000 only deduction is eligible for. It's good actually. You know, sometimes in ATC, how we remember every one of us, including we as a faculty, this is what the technique every one of us follow. We remember only if it is something approved, automatically it comes under ATC. That's how we also remember. NHA bond subscription 5 years. Of course, we never seen this. 5 years bonds, what we have seen? National saving, senior citizen saving scheme. Time deposit with post office. Time deposit with banks. 5 years, these 3 places we see. Yes or no? And principal repayment for house. 5 years lock-in period is there. Correct? In these cases, only 5 years logic. So that's it. NHA renewable bonds is not eligible under ATC. Okay. But remember, NHA redeemable bonds, no. If at all you purchase, no, they are eligible for 54 EC. REC NHA bonds. There it will come. But here 54 EC income is not there. Hey, it is there. Oh my God. Yeah, correct. You see here. Long-term capital gain on sale of residential house. 54 EC section, long-term capital gain, residential house we sold. Yes or no? And subscription to national, highway. This is 54 EC point they gave, not ATC purpose. Sorry. Yeah. It's a 54 EC purpose. The balance taxable long-term capital gain will be 0 because it is invested within 6 months from the date of transfer. When the house was transferred, 15th December, and within 6 months he invested in bonds. This is 54 EC exemption. So which means, yeah, correct. Yes or no? Yes. What shall be tax liability? Oh my God. Yeah, at the time of tax liability, I told you. Indexation with indexation, they have not given. But anyhow, directly the capital gain is coming 0 long term because he invested in 54 EC. Since the capital gain is coming 0, the tax on capital gain is 0. We don't have to check alternative tax amount. Indexation, capital gain, how much there, how much tax liability, because no, why do we compute with indexation tax, without indexation tax to know where the tax is low? Here capital gain tax is 0, so we don't have to bother about indexation. That's it. Yeah, now we'll see. Fantastic question. No, this is also, we'll note it down. 18. So by the way, we'll compute the total income. 1 crore 35 lakhs, correct? 1 crore 35 lakhs minus 50,000. Am I right? 1 crore 34 lakh 50,000. This is income from salary. Tax amount they are asking means total income question only they are asking indirectly. Dividend declared, IFOS. Interest on savings. IFOS dividend. How much is the dividend? 5,90,000. Interest on FD. Savings, savings deposit, or which deposit? Savings bank. Ayyo, 80 TTA is there. 80 TTA, we need to remember that. Yes or no? That is savings. So how much it is? 24,730. So we need to take 80 TTA also. 530. 530. Okay, long time capital gain 0. Why? Because they invested in 54 EAC bonds. So therefore 0. Short term capital gain on sale of listed shares. STT paid both at the time of transfer and acquisition 73 lakhs. How much it is? 73 lakh. Then he also furnished time deposits. 3-year post office time deposits. Hey, by the way, that's investment, no? He furnished the following investments or payments. Okay, fine. By the way, Sun income 8,000. Clubbing 64 1 year clubbing effect 8,000 net income. Once again, let me check. Is there anything that I missed? 1 lakh 1 crore 35 considered. Dividend 5 lakh 90 considered. Interest income on savings bank considered. Long term capital gain we treated. Short term capital gain we added now. Investment 75,000 we reduce. I mean we need to reduce now for totaling it. Yes or no? Now, what is the gross total income? 1 crore 1 crore 34 lakh 50,000 plus 73 lakh plus 5 lakh 90,000 plus 24 530 plus 8,000. How much check? 73 590 24 530 8,000. Therefore 2 crore 13 lakh 72 530. Correct? 2 crore 13 lakh 72,530 minus 80C. Just now we calculated 75,000. Correct? 80 TTA 10,000. Yes or no? What is the total income? Minus 75,000 minus 10,000 is equal to 2 crore 12 lakh 87,530. Yes or no? Now if you see, the total income is exceeding 2 crore because of this 111A and dividend income. Otherwise it is less than 2 crore. But because of these two increasing 2 crore, therefore surcharge rate on the entire surcharge rate on normal tax, normal income is also 15%. On the special income also 15%. Correct? Now we'll compute tax. Now what is it? 2 crore 12 lakh? 12 lakh 87,530. Special income 73 lakh. So no, this is taxable at 20%. By the way, once we'll see short-term capital gain when he got. Be careful. 22nd June he got, before 23rd July. Before 23rd July, 111A tax rate is 15%. Yes or no? Every time, whenever a condition take a tax rate, whenever that condition amendment, if you remember, you need to. It's really complicated. Correct? Minus 73 lakh. 1 crore 39 lakh 87,530. But you see how sharp our brain became now after solving all this at slab rates. So no, so slab rates means what? 1,12,500 plus 10 lakhs remove. You need to remove from this 10 lakhs. 1 crore 25 balance income into 30%. 38 lakh 96,259. Now 73 lakhs into 15%. 10 lakh 95,000. Some students might misunderstand. 38 lakhs, how did it came, sir? On this first 10 lakh income tax is 1 lakh 12. Balance income 1 lakh 27 87 530 multiplied by 30%. That's it. Okay. Now what is the total tax? 1,12,500 plus 389 625. 38 lakh 96,259. Okay. 40 lakh 8,759. Okay, this is same only. On this add 15% surcharge, here also 15% surcharge. Correct? 40 lakh 8759 multiplied by 15%. 6 lakh 1,313. Correct? No, 6 lakh surcharge amount only. Okay. 46 lakh. Here 10 lakh 95,000 plus 15%. Total it. 46 lakh 10,072 plus 58. Okay, that is how much? 58 lakh 69,332 plus 4% cess. 4,094. Appa. Okay, thank God. We'll pray and see whether the answer is right or not. 61 lakh 4,000 we got. Appa, thank God option is there. The answer is B. Okay. Yeah. Yes. So option B 8,000 correct. Option A, what is this we considered here, computed here? What is the asking option? Oh, gross total income they asked. No, we computed already. Where is our gross total income? Yeah, 21372 530. Yes or no? 75,000. Option C. Option D 75. Option B. Appa, thank God everything is correct. That NHI bonds also we are really misinterpreted. That's it. Technically, it's linked to long-term capital gain. We don't have to think also here in this case. But we because we forgot the fact that long-term capital gain is there. If at all we remember that long-term capital gain, long-term residential house, we would have easily collected 54 easy. But we forgot that point. That's why when we finally calculate it's 54 easy, then we go back and check whether long-term is there. Then it's a residential house. So which means when you are solving, you have to remember the entire question till the last minute. This is a very big question. This itself can be given as a theory question. I mean, total income problem. Or no, this itself can be given as a 12 marks theory question. Easily 12 to 15 marks they can ask. Because tax computation is there, right? Fantastic, no? Note it down. 18. Note it down. Yeah. Just 2 minutes, okay? Many what they do, they solve problems once on their own. And they will figure out what is the right answer. And they only give you that thought process directly. I only focus on content, whether I remember or not. I never solve problem on a prior. I never. 99.99% of the cases, I want very extreme rare cases I'll solve, unless it's a very new provision for the first time game, like how it was applied. For that reason only I'll solve. Rest I will not. This MCQ case scenario booklet I have not even touched. Directly recording here itself. Directly seeing the question here itself. That is why you're able to see my true thought process, where if a student has 100% knowledge of the content, how he will interpret that interpretation you will see in me. What kind of mistakes are possible you will see. Suppose if at all I went through all this once again, I practiced everything, figured out answer, I will only tell you the answer oriented. I will not show the mistakes that are possible. Even though you're knowledgeable, even though you have complete command of the provisions, still mistakes will happen. Exactly. The thought process, if I have to transfer you, I have to be like this. So, but some, you know what, generally people advise me, you should not do. Students might misinterpret that. I mean, they will think what faculty don't know the answer. Okay, 5-6 mistakes anybody can do. I didn't do conceptual mistake. Yes, human error. It's just a human error. I don't mind showing the mistakes of. Okay, fine. You take break and come. Okay. Yes. Next. Case scenario 19. Mr. X wanted to file his return of income for the year 24-25. He required assistance, for which he approached you. He has shared the following details. Okay. Mr. X owned a house property in Mumbai, and the same was rented out for 70,000 per month. He claims that this was the only income which he earned during the year. However, when you had sought off for his bank statement, you observe the following information additionally. Okay, house property income is there, additional income is there. There is a credit of 23,900. By the way, what is his age? Not yet given. Anywhere else he gave? We'll see that. We'll see that later. Okay. There is a credit towards income tax refund. Income tax refund is not taxable. That's not income at all. But 5,775 is towards interest. This is income. IFOS. On 15th August, the bank statement showed a credit of 55,000, which he claimed to have received as a gift from his grandchildren. Grandchildren is a relative. Lenient descendant is a relative. Ascendant is a relative. Descendant means children, grandchildren, great grandchildren, great anybody. So no. On further assessment, yeah, on 60th birthday, they said automatically is a senior citizen. So no, he's a senior citizen. And you say senior citizen does not have BGBP income, therefore exempted from advance tax. That also you should recollect. Okay. On further assessment, you were able to understand that Mr. X and his wife had traveled to Australia during the year to spend some time with a daughter who is staying in Australia since her marriage. Okay, means daughter is married already, and Since age is not given, is a major. Okay. On scrutiny of their passport and relevant documents, you concluded they had left India on 27 September and returned on 30th March. Appa, 181 days only they stayed in India. Mr. X stayed in India only for 181 days. So no, and they didn't go for employment. Understand? B2 still apply. B2 condition will apply. 60 days or more he stayed in India. Last 4 years, 365 days or more. That information. During past 4 years, both had stayed in India for 320. Oh, 60 days or more failed, 365 or more also failed. Then I will apply special residential category who is applicable, which is applicable visitor. This is not a visitor. An Indian citizen and does not have any foreign income. No, that and all is not there. Okay, yeah. Prior to that, they had been staying only in India. Okay, based on the facts of the case scenario given above, choose the most appropriate answer. They are non-resident. Mr. X is a non-resident. Correct? Non-resident. Yes or no? Option number C. But let me apply once deemed resident logic also. Deemed resident is applicable for an Indian citizen whose total income from Indian sources is exceeding 15 lakh. The 15 lakh condition also not satisfied anywhere here. Therefore, he is a non-resident directly non-resident. Compute is tax liability for in manner that is minimum. Default tax, optional tax, we need to compute. We'll see. See, this is the reason why students score very less in tax paper as a whole. When in GST also twist like this only. Okay. Next, fine. We'll take the information. House property income 1270 gross annual value directly that only. Okay. Gross annual value 8,40,000. Correct? Minus municipal taxes paid information. I think they have not given that. Municipal taxes information not given. So net annual value 8,40,000 minus 30%. Interest on loan information not given. That's it. Yes or no? So 5,88,000 is income from house property. Next, interest on IT refund, IFOS, IT interest 5,775. Correct? Gift received from grandchildren exempted. That's it. Oh, simple only. There is no other income, right? Yes. What is the total income? 5,88,000 plus 5,775. So which is 5,93,775. Optional tax regime, the answer is 0. I don't have to compute. Why? Sorry, default tax regime, the answer is 0. Default tax regime, the answer is 0. In optional tax regime, he will get some tax because it is more than 5. I'll directly conclude. So no? Why I am concluding directly? Is a senior citizen and income is less than 7. Wait. He's a non-resident. For a non-resident, 87-year rebate will not apply. So we need to compute. We need to compute under both the regimes and then find out the tax. Very tricky provision. Yes or no? Optional tax regime up to 5,10,000 tax. Correct? Then 93,775 into 20%. No. Non-resident, no. Basic exemption is 2.5 lakh only. Under optional tax regime, basic exemption is 2.5 lakh for non-resident always, irrespective of age. Age doesn't matter because he's a non-resident. 12,500 up to 5 lakh. 93,775 into 20%, which is 18,755. So total amount 31,255 plus 4%. 31,225 plus 4%. Yeah. 32,474. No. 31,255 plus 4%. 32,509. Yeah. Hey, I got this number. 509. Correct? 31,255 plus 4%. 505. I think I wrongly took the number. Okay. Now here up to 3 lakh 0. 3 to 7 means nothing but 3 lakh. 3 to 7 means 2,93,775 into 5% plus 4% cess 15,276. The answer is 15,000. Hey, what happened? Default tax regime, no. No, they are asking in a manner that is minimum. Okay, we'll see. Is there any other question that we missed? Okay. Is a non-resident, correct? But under default tax regime, the tax liability is same. Default tax regime rebate 87A is applicable for everybody. 1 minute we'll see that. Okay, better we'll see once, because to best of my knowledge, rebate is applicable only for residents. Yeah, rebate for resident individuals, correct only. Individual residents in India paying tax under default tax regime. So no, correct only. Our analysis is correct only. It's by the way, it's not D. We initially thought of it's D because it's a non-resident. Compute the tax liability in a manner that his tax liability is minimum. Other answer, how much we got by the way? 31,255. No, 32,505. Is that option? Yes, that is there. The answer is there. 32,501 is there. Okay. Default tax regime. I don't know why that why they've taken nil. Okay, we'll keep it hold because I'm also doubtful on this. He's a non-resident only, right? Because if at all you think resident, he is a non-resident. Once we'll see the number of days count better. Until September 20. Wait. Date of entry in India, date of exit, both will be counted as days. Am I right? Here exactly 182 days come. We misinterpreted 181. Why? 30th March returned. 30th March you will count. 31st March also you will count. 2 days. Up to September 27, 181. Now up to September 27, 180. And here it is. He's a resident. Okay. The resident. And remember, regarding and he's a resident prior to this staying only in India. See how edge it is, like literally we miscomputed here. You see now, I'll show you. You see this. April 30, May 31, June 30, July 31, August 31, September 27, exactly 180. March 30, 181. March 31, 182. One address is staying in India. Therefore, is a resident. Basic condition satisfied. One. Now, additional condition we need to see. In the past 7 years, he should be 730 days. He has been in India. Out of past 10, any two. Resident and ordinarily resident. We did this wrong. Resident and ordinarily resident. Automatically, his tax liability will become 0. Correct. So, better always when you are calculating number of days, don't apply shortcut like me. Right away, you take it. Take better calculator. Even if you know the answer, still take a calculator and count number of days specifically. And we know very well the date of entry and date of exit, both are counted as stay in India. That's it. So automatically ROR and tax liability will be nil. Mr. X had given house property at Mumbai on rent to Mr. Y, a salaried employee. Is there any requirement to deduct tax on such rent by Y? If yes, what would be the TDS amount? Yeah, Y has to deduct under 194 IB, because monthly rent is more than 50,000. So he has to deduct. So how much you need to deduct? 70,000 into 12, 8,40,000. Now 8,40,000 under 194 IB, no. Here there is a twist actually. In this I also need a clarification. Under 194 IB, no. Up to September, 5% TDS. October onwards, 2% TDS. Understood? And we will have to deduct TDS in the month of March at a time. Yes or no? Now, there are multiple interpretations on this. First 6 months and 5% TDS apply. Last 6 months and 2% TDS apply. But total it and then deduct at a time in last month. This is one logic. Okay. But here I'm doubtful whether which treatment they followed. I'm doubtful. Okay. But I feel it is the latest rate they will follow. I generally feel this is followed latest rate. We'll see, or else we'll Google it and then see. 194 IB. 194 IB. TDS rates. 194 IB. Yeah, I think there is something called decoding TDS on rent. Yes. Navigating the 2% versus 5%. We'll see this article, whether what they are saying. The applicable rate 5%. The applicable rate depends upon the last payment occurs. 5%, 2% if honored. There is no need to split TDS between rates. The timing of final exactly. This is actually given in the this one. The article provides in-depth analysis. Directly 2% only we apply. Yes. Now, last month of the tenancy is before. For example, last month of tenancy before 1st October, then entire amount is liable for 5%. If the last month of the tenancy is after 1st, then entire amount is liable for 2%. Yes. This logic, I think even we have one question on this in some MTP somewhere previously. So similar question, similar treatment only they did. So there's a clarification given by them. Okay, CBDT or somewhere they have given clarification on this because there is a doubt on this. So since last month of financial year is there, tenancy is there, October 1st later also 2% only will applicable. 8,40,000 into 2%, 4,000, 16,800. Yes, Mr. Y is liable to deduct 16,800. Some new learning, yes or no? 194 IB. At what rate we should deduct? If at all you are vacating the property before 1st October, on entire amount 5%. Suppose you are staying and up to March also you are there, or vacating after 1st October. And whatever the rate, whatever the month in which you are deducting TDS, in that month what is applicable rate? At that rate you deduct TDS. Understood? That's it. Even at TDS intro, there are some section combinations like that I told. 194D, 194H, in all these cases TDS rate is reduced, increased from 5 to 2. TDS intro, marathon on the YouTube you will find TDS marathon. Intro I told this section combination. 16,800. Very good question. Correct? Which of the following statement is correct with respect to advance tax? Advance tax liability is not arising. Why? He don't have any PGBP income and he's a senior citizen and a resident. He's a resident senior citizen not having PGBP income. Therefore, advance tax shall not arise. As is a resident senior citizen, he has no income chargeable under PGBP at all. This is the right one. There is another, advance tax since tax liability not less than 10. That's wrong. That's wrong. He's a resident. Yes or no? The answer is B. Thank God. We did correctly. Without looking at the answer. Option D, nil, correct. Then option C, yes, that is also correct. Correct. Appa. Thank God. Good question actually. Really good question, right? Case scenario 19. 19. Yes. Okay. 19. Perfect. 1 minute. Yes. So 20 onwards, we'll take a small break and continue. Okay. So now let's continue case scenario 20. Zucaro, age at 42, a Singapore citizen, visits India for business purpose on regular basis. He was in India for the first time 2021 for 270, 21-22 for 190, 22-23 for 145, and in the year 23-24 for 155 days. Okay, almost more than 730 days. Yes or no? And in the last 4 years, resident, for 2 years is a resident. The last 10 years technically. 730 days or more stayed in the last 7 years. Current year, how many days we'll see. In the current year, 24-25, he along with his family had came to India on 10th August for a pleasure trip. Okay, his family returned to Singapore on 31st August. However, he stayed back to complete some business commitments and then returned to Singapore on 17th November. 10th August, from 10th August, 31 minus 9, 22 days. September 30 days. October 31 days. November 17 days. 100 days in the current year. B2 condition 60 days or more and 365 or more in the past 4, satisfied. A1 730 or more in the past 7 years, satisfied. 2 years out of last 10 years, satisfied. He is a resident and ordinarily resident. is an ROR. Now some students might get, sir, B2 condition will not apply. B2 condition is not applicable for Indian citizens. Here is a Singapore citizen, so B2 condition will apply. Yes or no? He is an ROR. He owns a manufacturing unit in Singapore. By the way, these are the last 4 years, sir. 23, 24, 22, 23, 21, 22, 20, correct one. Yeah. In all these 4 put together, I think it's more than 730. 270 plus 190 plus 145. Better we calculate. 760 is there. Thank God. And almost for 2 years, no more than 182 there. B1 satisfied, resident for 2 out of 10 satisfied, 730 or more out of 7 years satisfied. Current year 60 or more is there. Last 4 years put together 365 or more is there. Therefore B2 satisfied, A1 satisfied, A2 satisfied. Therefore ROR. Correct? Next. Now, manufacturing, he basically comes to India for procurement of raw material. He appointed Manish as dependent agent in Mumbai who procures raw material from India and then export it to Singapore to manufacturing unit and then sells the finished product there. If you have an agent in India just for procurement of raw material, yes or no, we cannot call it as business connection in India. We'll see that. Business connection establishment, you remember business connection section 9. Business connection. You see this. No income is deemed to accrue in India if the non-residents' operations are confined to purchasing of goods in India for export. Okay. Now look at any income accruing arising anywhere outside India, directly or indirectly, through or from business connection in India. For non-resident, the following. But here, this exception is for non-resident. In this case, that fellow became a resident. Therefore, this exception do not apply. So hence, that income is deemed to accrue or arise in. Exactly. Yes or no? And an income of 8,75,000 was received in Singapore out of this activity in previous year 24-25. So business is in Singapore. This also is outside, but actually it's an ROR since global income is taxable. He had purchased residential property for 17,50,000 in Indore in April 2020. On getting an attractive deal in November 2024, he sold property for 26,25,000. He also paid a brokerage of 2%. By the way, sale is in November 2024. Long-term capital gain tax rate is 12.5. Indexation will not be available. He purchased it in April 2020, sold it in 2024. It's a long-term asset. Indexation will not come because the sale is on or after 23rd July. But at the time of tax computation, since the purchase is before 23rd July, sale is after 23rd July, option of lower tax, long-term capital, that option we need to check. If at all tax liability they're asking. Yeah, they gave indexation numbers also. Yes or no? Yeah, Zucaro had also purchased agricultural land in India and leased it out to tenant. The tenant shares a portion of his agricultural income in Zucaro as a consideration for the rent of the land. Okay. The share of income from the land for the previous year was 6,50,000, entirely agricultural income. This income is important for aggregation. For aggregation purpose, this income is important. Technically, this is agriculture income. Okay. Now, what is the status of Zucaro? ROR? Yes or no? B2 satisfied, A1 and A2. Yes. Assume for the purpose of answering this question only he is a non-resident. Thank God they gave non-resident. Would income of 8,75,000 through procuring of raw material would be taxable? No, because that is not deemed to accrue or arise in India for non-resident because they're only purchasing and then exporting. No, as it is confined to purchase of goods in India for further export and hence not an income deemed to accrue or arise in India. Yes or no? Would income, that exception is applicable only for non-residents. Business connection exception is applicable only for non-resident. Would income arising from transfer of residential property in Indore is chargeable tax in India in Zucaro? Yes, of course. Compute the amount of capital gains chargeable to tax. Remember, capital gain computation purpose, no indexation. Always straight away. Sale value minus cost of acquisition. What is the sale value? 26,25,000. Yes or no? 26,25,000 is the sale value minus 2% brokerage. Minus 2% brokerage. So net consideration 25,72,500 minus 17,50,000 cost of acquisition. 17,50,000 cost of acquisition. Therefore, 8,22,500 is the long-term capital gain. 8,22,000. Yes, long-term capital gain 8,22,000. Yes or no? Would income from agriculture land given on lease is taxable in the hands of Zucaro? No. It is not taxable. Such income is exempt since it's an agriculture income. Yes or no? It's an agriculture income because the land is situated in India. Okay. Now see, agriculture income, no, the rent is of agriculture income is of multiple types. One is direct agriculture activity, two leasing. Rental income is also rental income, and agricultural income is also an agriculture income. Yes or no? Is leased out to tenant. The tenant shares a portion of agriculture income, means tenant is using for agriculture activity, therefore it's exempted. Yes or no? Next. That's it. So what are the answer? Agriculture income definition. For R and O, that exception will not apply. That exception, business connection exception, is only for non-residents. For residents, it's a income deemed to accrue or arise in India if at all there is a business connection in India. That's it. Now, A, B, D, A. Correct? A, B, exactly D, and what is the last? A. Perfect. Easy. Next. By the way, we'll once recollect this business connection examples, okay, for the better sake. So any income accruing or any place outside India, actual accrual is outside, through or from business connection in India. See here, receipt is also outside, accrual is out, both are outside. But because of business connection is there in India, they are deemed to be accrue or arise in India. However, the following are exceptions for non-resident. Business with operations partly outside, only the income which is attributable to India. Suppose if they have a non-resident has a head office outside, branch here, only branch related incomes will be attributable. Income from operations outside is not deemed to accrue. No income is deemed to accrue just because he's purchasing goods in India for export. Collection of news and views in India, they are not taxed, just for transmitting the news outside India. Shooting of films, no income is deemed to accrue. However, if at all the non-resident is not an Indian citizen, no income is deemed to accrue if non-resident is subject to conditions. Not an Indian citizen, no partners. If it is a firm, no partners must not be Indian citizen. If it is a company, or shareholders must not be Indians. Then only we assume that the non-resident does not have a business connection. Then only not deemed to accrue. Just because of display of rough diamonds in specified notified zones, which are uncut and unassorted, that is also not deemed to accrue. That's it. And by the way, all these 5 exceptions are only for non-residents. That's it. Case number 21. Mr. Rajan, aged 62 years, an Indian citizen, resides in Delhi. His wife Sheetal and daughter Ria also resides with him. Okay. Rajan, Sheetal, daughter Ria. Ria, aged 16, minor, is studying 12th standard in DAV school at New Delhi. Rajan left for employment to Dubai on 15th September. Left for employment. The word left for employment, B2 conditions will not apply. If at all he is just going for tourism purpose, then B2 will apply. He left for employment. But his family did not accompany. So 182 days logic failed. 60 days logic we should see. No. 60 days logic will not apply. B2 condition will not apply. So B1 failed, B2 failed. Okay. Hey, sorry. He returned to India again on 25th March. We'll see. And no. He returned for visit. Okay. That's only for visit we call it as. Understood? That's only a visit we call it as. Okay. Now, he's visiting India. We will apply special residential status category. We'll see. We'll apply special residential status category. We can apply because in Indian citizen later on he'll be visiting India. Mr. Rajan had gone outside India for the first time in his life. During 24th to September, he was working with a multinational company where he earned 14 lakhs from his job in India. He was working with the okay. In the current year, before he left to Dubai, 14 lakhs is income. He paid tuition fee 1 lakh 80 for Ria's education. This is ATC. Or no? Apart from that, Rajan also earned a professional income 60 lakhs. Okay, gross receipt is 90 lakh from India. His Indian source income is more than 15 lakhs already. He might become a special resident. During the year, he also earned interest from his Indian savings bank account to the tune of 12,000 and interest from fixed deposits with nationalized banks 45. Okay, fixed deposit savings interest is there. ATTT exemption. So ATTTA will only be for residents. No, ATTA for everybody. TTB is for residents. What is his age? 62. Oh, he is eligible for TTB. But actually remember, here since Dubai discussion is there, probably, yeah, no taxes paid. He will be a deemed resident. He is a deemed, no, he is. Why? Because Indian source income is more than 15 lakhs already. Yes or no? He is straight away deemed resident. And since he is a resident, okay, 80 TTB deduction he can claim. TTB up to 50,000 interest deduction he can claim, whether it is FD interest or savings interest, doesn't matter. TTB. Fine, we'll see. Mr. Rajan also earned a salary income equivalent to 6 lakhs for his job in Dubai. on which no tax is paid or payable in Dubai, which was deposited in bank account in Dubai, source outside, receipt outside. And remember, he's a deemed resident. Deemed resident is a RNOR. For RNOR, income is taxable only if source is in India, receipt is in India, or business or profession, source is outside, receipt outside, but controlled from India. Yes or no? That's it. But there is no business which is controlled from India. And Mr. Rajan exercised option of shifting out means optional tax regime. Fantastic question. Yes or no? We'll solve it. What is the residential status? Deemed resident. Yes or no? Why? Professional income itself is more than 15 lakhs. Salary income 14 lakhs is there in India. Total is more than 15 lakh and is an Indian citizen. Remember, deemed resident will not apply to Indian origin visiting India. It is only applicable for deemed Indian citizen. Whether visiting or does not visiting or no conditions. He has having Indian source of income more than 15 lakh and not liable for taxation in any other country, territory. That's it. D. What would be the income chargeable to tax under the head salaries in the hands of Rajan? You know, his salary income is how much ma? 14 lakh earned salary. That too optional tax regime. 14 lakh minus 50,000, 13 lakh 50. Yes or no? Standard deduction 50,000. How much deduction is available under chapter 6A? ATC deduction. How much is ATC? Tuition fee 1 lakh 80. Okay. Tuition fee 1.8 lakh. And interest income you see 12 plus bank account interest. Therefore, entire 12 is taxable under IFOs. FD interest 45 fully taxable, 57 taxable up to 50,000. 50 plus 1 lakh 80. 80 TTB 50,000. 180. ATC total 2 lakh 30. Hey, wait, yeah. ATC maximum limit is 1 lakh 50. ATC maximum limit is 1 lakh 50 plus this one 50. 2 lakhs. Is there any other deduction? That's it. Nothing. 2 lakhs is the answer. Correct? Yes or no? ATC 1 lakh 5. 80 TTB 50K because other sources 57K was taxed. That's why 80. See how 80 TTB link is there. 80 TTB is applicable only for senior citizen who is a resident in India. For him only it is applicable. Now here in this question, if at all deemed resident provision, if you do not apply correctly, if you interpret him as a non-resident, 80 TTB mistake you will do. 2 mistakes you will do. Tax liability. Is a resident, right? They are asking tax liability directly under OTR, so not an issue. Okay, we'll compute it. We will compute. Okay. What is the salary income in India? 13 lakh 50,000. Correct? Income from salary. PGBB income is what? 60 lakh. Am I right? Just once we will see better sake. 60. Okay. During the he also earned. Everything is clear. Right. Rajan also earned. This Dubai income is not taxable because he is an RNOR. That's accrued outside. Source is outside. Receipt outside. Not taxable. Okay. Yes, sir. So income from other sources 57,000. Gross total income 73 lakh 50. 74 lakh 7,000. Correct? Correct? Just check out once my totaling. 80 TTB 2 lakhs. 72 lakh 7,000. Correct? Now since income is exceeding 50 lakhs, surcharge applicable 10%. How many checkpoints on income tax is so thrilling, no? Income tax is always, the thrill is different. Is a senior citizen. Basic exemption limit is 3 lakh. Since optional tax regime. Okay, up to 5 lakhs 10,000 only tax. Now 62 lakh 7,000 balance as or no into 30%. 18 lakh 62,100. Total basic tax is how much? 18 lakh 72,100. Why special income is not there? No. Plus 10% surcharge. 1 lakh 87,210. Yes or no? Plus 4% as a whole. Cess. 21 lakh 30,242 is the tax. You total this for 4%. 1 minute. 18 lakh 72,100 plus 10% plus 4%. Sorry. My totaling was wrong. Okay. Yeah. 21 lakh 41,682. Okay. That's it. You total this. You know, and on that add 4%. On this total add 4%. Okay, that's it. 2141. We reduced chapter 6 here. We reduced it. Senior citizen. Relief, no chance. We'll see once. I think here we made some mistake. I don't know why. 1 minute. 45, 55 to 57. 1,50,000 only tuition fee. Correct. 52 lakhs. 60 lakh. Okay. Then this is 13,50,000 only. Optional tax doesn't shift out of default. 13,50,000. See whether have we done any totaling mistake. 13,50,000 plus 60 lakh plus 57,000, 74 lakh 7,000 minus lakh 50,000, 72 lakh 77,000. Correct only. Yes or no? 10 lakhs you remove into 30%. 18 lakh 62. Okay. Hey, remove 10 lakhs. 1,12,500. No. 1,10,000. We added 10,000. Think our students online, they would have computed correctly. Yeah, correct. 1,10,000 is equal to clerical mistake. 190 lakh 72 plus 10% plus 4%. Okay. 22 lakh 56,000 082. That option there. 20 lakh 56,000 080. So no, and 1 lakh we missed. Up to 10 lakhs fixed. No, 1,10,000. By mistake we put 10k. Next, what would be the due date for filing return of income? Since it does not have any business income is there. Professional receipts are more than 50 lakh. Tax audit is applicable. Doesn't matter. 31st October. For ITR due date is 31st October. Sometimes here instead of ITR they'll ask you tax audit report due date. If it is tax audit report due date 30th September. What is the due date for filing tax audit report under 44AB? 1 month prior to the due date under 139 subsection 1. So anyhow here they're asking written due date. So B. Yes or no? DCDCB. DCB. Yeah, perfect. Okay. Good question. This one, is this? You can take a note. 21 also exceptional. So many were there, no? All out of 25, these are must solve questions. Okay. Yeah. Next, exceptional. 21 also good question. Case number 22. Anmish, an Indian citizen aged 61 years, has set up his business in Canada and is residing in Canada since 2011. He owns a house property in Canada, half of which is used by him for resident, half of is given on rent. Indian citizen, senior, has business in Canada and residing since 2011. He is a non-resident. Based on that information, is a non-resident. But Indian citizen, if at all Indian source of income is more than 15 lakh and he is not liable for tax in Canada, for example, then he might become a deemed resident. Converted rent into India is almost 12 lakhs per annum. Okay. Converted into INR, half of is given on rent, only half property rent 12 lakhs. He purchased a flat in Delhi on 13th October, 42 lakh. The stamp duty value of the flat was 35 at the time of purchase. Okay. At the time of purchase, no. Fantastic provision. 49 subsection 4 cost of acquisition. No. That actual consideration is more, so we don't have to worry. For the buyer, buyer is getting more than SDV, no? For him only it will be. For him only, no, seller. For seller, he's getting, yeah, it's okay. No, ignore SDV logic at the time of purchase does not apply. For example, no, if this is actual, but this is stamp duty value, then gift provision would have been applicable that time at the time of purchase. Then cost of acquisition, if at all capital gain purpose, would have been different. Fine. Here I don't think it's a different question. He has taken a loan from Canara Bank, 34 lakh for purchase of this flat. The interest on such loan was 3,14,000 and principal repayment was 80. 80k is you know 80c. Or no? No. Mr. Anmish has given this flat on a rent since it's a let out property. Therefore, entire interest amount he can claim deduction. Yes or no? The annual property tax of Delhi flat is 40, which is paid by Anmish. So municipal taxes is also paid whenever he comes to India to meet his parents. Oh, the annual value of the property tax is 40, which is paid by him whenever he comes to India. Okay, did he visit in India this year? Mr. Anmish visited for 120 days, 124 during the year. Okay, so he would have paid. Before that, he visited India for total 360 days during 20. Okay, in the past 4 years they gave. Yeah, yeah. No, we need to see that. Because how much is the rent income? How much is his Indian income? We need to see, no? No, that's foreign income. That's Canada property. You must select 15 lakhs income. You should see Indian source income. Ah, next. He had a house in Ranchi which was sold by him in May 21. In respect of this house, he received arrears of February 2025, not taxed earlier. This information is irrelevant. Irrelevant. Even if they say tax earlier, it doesn't matter. 2,96,000 is taxable. The other incomes. He also derived some other incomes. PGBP. Okay, Canada income. That's a foreign source. Okay. Interest on bonds and Canadian, out of which 50% was received in India. Just because it is received in India, we cannot say it is Indian source. Income from apple orchard in Nepal given on contract and yearly contract fee 5 lakhs was received by Anmish in Nepal, all foreign sources. Anmish has sold 10,000 listed shares of 480 per share and Indian company on 15th May. Remember, the sale is before 23rd July, which he acquired on 5th. It's a long term. STT was paid. 112A capital gain is there. Yes or no? How much it is? 380 rupees per share. Is there any brokerage information? Nothing is given. 380 into 10,000. How much is that? Appa, Indian income is there now. Indian income is there. Yes or no? Therefore, he will become a special resident. On 31st January, the shares of A Limited were traded on recognized stock exchange as under. Fantastic. This, 31st January 2018 is a landmark amendment. I'll show you. Wait. Cost of acquisition is not 100 directly. You can't take like this. Okay? Wait. Because now, if any shares were acquired which are listed on stock exchange before 31st January, before 1st February 2018, and the shares were sold on or after 1st February 2018, cost of acquisition of those shares will be higher of one, actual consideration 100 or market value 2001, because 2001 logic does not apply. 2, full value of consideration right now how much? Full value of consideration and 31st August market value how much? Highest price on that day was 300. Okay. So, and second one, lower of FMV on 31st January, which is 300, full value of consideration 480, 300, and among these two, higher 300. Appa, fantastic. This changes your entire decision making. I hope every one of you remember this. What is cost of acquisition of shares which are 112A, which are 112A shares, listed shares? Okay. Now STT was paid both at the time of acquisition and sale. Cost of acquisition will be higher of 1 and 2. What is 1? Actual cost of acquisition. If at all that shares were purchased before 2001, then market value on 1/4/2001, whichever is higher. That is first one. No, first one. Second one again. Lower of market value on 31st January 2018 or sale consideration. Now you are selling, right, 480. Whichever is higher. No, whichever is lower. Now between 1 and 2, whichever is higher. I'll show you that provision. Bonus shares. Where is capital? See here, bonus shares point in capital gains it will be. This cost of acquisition discussion will be. Now it will come. That's what I told. So no, listed equity shares which are acquired before, okay, and now we transferred. Okay, they were acquired before 1st February 2018. What is its cost of acquisition? Higher of 1 or 2? 1. Cost of acquisition, fair market value, if at all they were allotted before 1 2001, whichever is higher between this again. And second one, lower of market value. In our example, cost of acquisition 100, market value 300, actual consideration 480, lower 300. 1 is 100, 2 is 300, higher of 1 and 2 300. Remember, and I told logic for this in the class also, because until then there is a section called 10 subsection 38 which says long-term capital gain on sale of listed shares is exempted. Later they brought taxability. So all the people whoever have investors bought earlier with an assumption that it is exempted, all were shocked. So to give incentive to them, those who really bought genuinely earlier, for them we should not tax it now again suddenly retrospectively. So for them to avoid this exemption was given, that entire explanation was given in the class. Fantastic provision. Yes or no? Yeah. So which means 480 minus cost of acquisition 300. So 180 will be long term capital gain multiplied by 10,000 shares is equal to 18 lakh. Even then Indian income is more than 15 lakh. Therefore he is a deemed resident. So no sir, special resident. So resident but not ordinary resident as per 120 days logic, because he stayed in India for 120 days and more, last 4 years 366, and moreover he is a citizen visiting India. Yes or no? A person is visiting, yes or no, either citizen or Indian origin, both of them, yes or no, 120 more or 365 or more plus Indian income is more than 15 lakh. Therefore is a special resident, nothing but resident but not ordinarily a resident. Fantastic question, no? And now again, now fair market value on 31st February you should take, right? Fair market value on 31st January or 1st February. Now we watch one highest price, average or lower, highest price you should take, highest price on the day, that you should take. Next, fantastic question. This is what is the case study number 22. Market. What would be the residential status of Mr. Anmish for the year assessment year 25-26? What would be the residential status of Anmish? He is a resident but not ordinary resident in India. Correct? Next. Actually, all the provisions we covered. More than 30-40% of the provisions we covered. And you know, all these points I covered in marathon also. Yeah. What would be the amount of income taxable under the head income from house property in the hands of Anmish for the assessment year 25-26? House property income, how much they're asking? So Indian house, Delhi house you see. Okay. Remember, this is foreign Canada house and his RNOR. When his RNOR, source is outside, receipt is outside. That is not taxable. Canada house is not at all liable for tax. It won't come within the house property purview itself. Delhi house. Delhi house is renting. How much? 32,500. So no? Now we'll calculate house property income. Gross annual value 32,500 multiplied by 12. How much it is? 3,90,000 minus municipal taxes paid is 40,000, I guess. Yes, 40,000. He visited in India during the year, so he has definitely paid it. So net annual value 3,50,000. Correct? Minus 30%. How much it is? 1,05,000 and minus interest on loan. How much is interest on loan? Interest on that loan is 3,14,000 and principal separately 80. Principal is 80C. Entire 3,14,000 I can claim. Why? It's a let out property. No interest limits. Interest limits are applicable only for self-occupied. Therefore, loss from house property 3,50,000 minus 1,05,000 minus 3,14,000 is equal to 69,000 loss. Or no? And by the way, if at all, what is the mode of taxation is going? What is the mode of taxation? DTR, OTR? Nothing is given. If nothing is mentioned, we assume default tax regime. And if we assume default tax regime, house property loss we can't set off with other heads. Yes or no? we can only carry forward. We can only carry forward under default tax regime. Suppose if it is optional tax regime, we can set off with capital gains income happily. Capital gains or PGBP, if at all, whatever income is there, with that. Yes, next. So now that is house product. Hey, wait. Forget about it. Arrears of rent is there. You see here, areas of rent 2,96,000 we can set off. 2,96,000 we can set off. 2,96,000 minus flat 30%. Okay, 2,96,000 minus 30%. 207,200. And set off these two. Intra head set off. Now look at the house property answer. Fantastic. Yes or no? They are literally asking total income problems here. MCQs. What amount of capital gain would arise in the hands of 18 lakhs? Yes or no? Option number A. If this question comes in exam, many will do mistakes. What would be the total income of Anmesh if at all he has exercised the option of D, shifting out? Oh, ODR, which means we can set off house. No, house will already set off over. Fine. So now we already computed. Yes or no? Long-term capital gain 18 lakhs. Correct? House property income 1,38,200. PGBP, any other income is there? Just we'll see. Is there any business income like that? You see, Canada business, nothing is taxable. Interest on bonds in Canada, 50% is received in India. Since it is received in India, 50%, 3.1 lakh is taxable. So no. Very, very important. That is, that many will miss. IFOS income is there. IFOS, 1 lakh. 1 minute, I'll go and see. 3.1 lakh. 3.1 lakh. Everybody will miss that. 3 lakh 10,000. See, once again, anything else is there. This we covered. Okay. And Nepal contract received in Nepal, everything, nothing is taxable. R&OR. Since R&OR 50% received is taxable. Profit from business R&OR. We assume that receipt is there only. Arrears we considered. House property income we considered. This is outside India. Now, what is the income they're asking, by the way? Gross total income or total income? Total income they're asking. Be careful. So which means gross total income is what? 18 lakhs plus 1,38,200 plus 3,10,000. 22 lakh 48,200. This is gross total income minus ATC. Principal repayment. How much is the principal repayment? 80. Yes or no? Is there any other deduction in ATC, ATD? Nothing. Yes or no? 80,000. Fantastic, no? 21 lakh 68,200. So they're asking 21 lakh 68. That's it. Next. Tax liability. What would be the tax liability? Anyhow, total income 21 lakh 68. Or no? Optional tax regime only. 21 lakh 68,200. Now in this, long-term capital gain is 18 lakh. Balancing figure 21,68,200 minus 18 lakhs is equal to 3,68,200. What is his age? Is a resident, right? Is a resident 61 years. Therefore, 3 lakhs basic exemption is available. So no, 68,200 into 5%. 3,110. Whereas this one 18 lakhs long-term capital gain 112A. Which date we got? That is most important, because if it is before 23rd July sale, up to 10% tax rate, 1 lakh anyhow exempted. If it is after 23rd July, after 23rd July, exemption is 1,25,000. 12.5% balance is taxable. See that, everyone. Oh my God, very good question. This 112A. 112A. Very good, no? Actually, you see here, 10%. 10% exceeding 1,25,000. In this year itself, 1,25,000 basic exemption. Okay, in that. But tax rate alone is 10% if it is before 23rd July. After 23rd July, 12.5. Oh, clever. Okay. So now 18 lakhs minus 1,25,000 you remove into 12.5%. 16 lakh 75. Yes or no? Minus 1.25. 16.75 into 12.5%. Hey, by the way, 12.5, which date he sold? That once we will see, ma. Better. Ah, is sold 15th May. Tax rate is 10%. Ah, 23rd July before, no. The tax rate is what? See, in this question, we took every care. Yes or no? 10%. So, 16 lakh 75,000 into 10%. 1,67,500. The total is 3410. Okay. Plus 4% straight away. 1,77,750. B. Ah, done. See, everywhere. You see, capital gains, I do exact dot answer. You observe, capital gains, I'll never do a mistake because capital gains is most toughest chapter. It's all about memory, understanding everything. Okay. For me, capital gains is most exciting chapter also because it's very tough. Fine. Clear? See how interlinking they did R and OR, taxability of R and OR, yes or no, and total income computation, ATC, resident senior citizen, so many complications are there. Yeah, option B, resident but not, we did right. This is also right. House property income 138 200 we got. Capital gains also we got right answer. 2168 200. Total income, total income 2168. Yes, correct. Okay. Yes, and tax liability 1,77,700. Perfect. Next, this also add it, ma. Exceptional. Okay. Literally every question they can solve. Every question they can solve. 23, 24, 25. 3 more case studies. That's it. It will be over. Can I? Just 2 minutes. Okay, we'll continue. 23rd case scenario. Mr. Akash had bought a residential house worth 2.5 crore at South Extension, Delhi in 2019 and let out the house to Riaz. The property was funded through loan from PNB. The interest due for financial year 24-25 to PNB is 25 lakhs. Okay, the interest due is 25 lakh. Interest due, so big. Oh, property, okay, 2.5 crore. Out of which he paid only 20 lakhs. Remember, interest under house property deduction is on accrual basis. How much is paid? Irrelevant. Mr. Akash then took a loan of 1.5 crore from SBI on 1st July for construction of first floor in that house for self-occupation. The construction is in progress as on 31st March 2025. Mr. Akash started repaying EMIs due to SBI. Okay. During the previous year, no pre-construction concept. During the year, he repaid principal amount of 25 lakh and 5 lakh to PNB and SBI. Principal repayment. 5 lakh to PNB means it's the original loan. Yes or no? He paid 25 lakhs to PNB. This is eligible for ATC. SBI he paid 5 lakhs. Under construction property, principal repayment may not be eligible for ATC. We'll see. He also paid interest of 8 lakhs to SBI out of 10 lakhs, being interest due for the P. Yeah, sorry for the interruption. Charge got over. We changed it. Yeah. Now look at the PNB Bank. He bought a house. Okay, residential house. For that, 25 lakhs is the interest incurred, and principal amount was 25 lakhs repaid. Okay, he paid principal amount, and SBI 5 lakhs principal he repaid, and also 10 lakhs is interest expenditure incurred. Okay, now SBI loan is related to under construction floor. Actually, we saw under construction property in case study. For under construction property, completion certificate won't be there. Therefore, that is not accessible under house property. Therefore, that will not be considered. Here also it's an under construction floor. For that floor again we need completion certificate, municipality permission, all that is required. So for that, in order to occupy that, completion certificate and all might be required for under construction floors also. So the same logic will apply. Okay. So the interest deduction and principal repayment let us not consider for under construction property. Okay. That's the call right now because we also don't know exactly what is the stand on that. Next. Mr. Akash owns another house in Haryana. He transferred that house to his minor daughter Miss Sia on her birthday as her birthday gift. Okay, minor married daughter, not married. Okay. Is there any marriage information for minor Sia? No, Sia is not married. Okay. Minor daughter Miss Sia on her birthday as a birthday gift. Okay, fine. So not a minor married daughter, but anyhow, any house property transferred without consideration to minor children, the transferor is deemed to be the owner. Correct? So he has another house in Haryana. Miss Sia gave the said house to local panchayat from September 2024 at a rent of 5,000 per month. Mrs. Akash total income. By the way, we are looking at Mr. Akash. Okay, okay. This is father. Sia is daughter. Mrs. means spouse. Okay, he's higher than that of Akash. This is the first year when CS is having. So mother income it is clubbed. Okay, mother income only it will be clubbed. Mr. Akash brought electric vehicle worth how much? Okay. Electric vehicle worth 50 lakhs on loan from a bank which is sanctioned on 1st April 2022. 1st April 2022 to 31st March 2025. This is the period in which sanction 80 EEB. Okay, I'll show you. 80 EEB. You see here, the loan must be sanctioned, not this BEB. The loan must be sanctioned. Oh, sorry. 4 years period 23. 1st April 2019 to 31st March 2023. Within that, here 2022 it was sanctioned. See that? We'll see case study. 4 years period here it is. Yes, sanction of 1/4. So BSM charge an interest of 7 lakhs on the electric vehicle for 24-25. You see how much is the maximum reduction? 1,50,000 for electric vehicle related interest accrued. No, in this year. So 1,50,000 80 EEB deduction. Correct? Next. Mr. Akash had also taken a loan from ABC Bank for his daughter's higher education. He paid 50,000 as interest, and he also paid Mediclaim 20,000 to New India Insurance for insuring his health. This is 80D. This is 80E. Education loan interest. It's on a bank. Mr. Akash, Mrs. Akash, spouse, okay, mother, owns her shop of 200 square feet area in Gurgaon. He rented it out to Mr. Vishal from October at 60,000 per month, who gave her an interest-free deposit of 1,50,000. This is deposit. This leave it. 60,000 per month is important information. Yes or no? 60,000. Based on the facts, choose the most appropriate answer. So 60,000 per month is 7,20,000 gross annual value. Accordingly, all that will apply. What is the amount of interest allowable as deduction under 24B? Remember, the first house no. 25 lakhs is the interest accrued, whereas under construction house interest accrued is 10 lakhs. Total 35 it is coming, but actually we know it is only 25 because under construction floor we will not offer to income tax department right now. The floor is under construction, so right now we will not. Yes or no? 25. By the way, that is used for self occupation. Huh? No, let out. That's why I remember. Wait a minute. 1 minute. Mr. Akash then took a loan for 1.5 for construction of his first floor in that house for self occupation, whereas the property was funded through loan. Let out ma, ground floor is let out. Regarding let out property, no limit. Regarding self occupied property, 2 lakhs limit. But anyhow, the property itself is not coming into existence. The 10 lakhs portion of interest I will not consider. First floor is still under construction, no? For construction of first floor. And remember, the construction is progress as on 31st March. Completion certificate is not there as on 31st March. So same logic which we previously discussed in one of the case study, under construction property, that is not liable for offer at all. Therefore, that interest also we will keep it aside. For the next years, it will be called as pre-construction period interest. So the answer is 25 lakh. That's what I'm thinking. So understood? Okay. Then correct on, I think so. Next, any other loan, any other information? That's it. Okay. Next, what is the amount of deduction permissible to Akash under Chapter 6A? 80C, principal repayment 1.5 lakh maximum. 80D, mediclaim 20,000. Correct? Medical claim you see? 80D 20. 80E, How much it is? 50,000 she's paying interest for higher education. 80 EEB, 7 lakhs interest is incurred, but 1 lakh 50 only they can claim. 3.7 lakh. The answer is correct. Next. Is the notional interest on interest free deposit received in respect of shop let out on rent chargeable to tax? If so, under which? No, it is not chargeable to tax. No, it is not chargeable to tax. Yes or no? Then, in whose hands Sia's rental income from house property in Haryana is taxable? How much would be taxable? You need to answer. Mrs. Akasha. Sia's house property income. Sia got his house property how? Sia, father gifted. Transferor is deemed owner. Clubbing provision will not apply here. Deemed owner concept. So it is taxable directly in the hands of Akash. Many students confuse. If it is house property to minor children, clubbing provision will apply. If it is a house property to minor married daughter, sorry, if house property is given to minor children except to minor married daughter, 27 deemed ownership concept apply. Directly transfer our hands, it is taxable. Suppose if it is a transfer of house property to minor married daughter, in the given case, suppose if CA is married, then parents higher income, mother income, it might be clubbed. Very careful. So here it is taxable in the hands of Akash only. Okay, Akash hands only. Mr. Akash hands only. 1 minute. By the way, how much is taxable? How much is the income she got? Mrs. Sia gave the house on rent for September 24 onwards. 5,000 per month from September means 7 months. 35,000 minus 30%. 24,500. Okay, directly in the hands of Akash, 24,500. B. Yes or no? You should know the alternative also. Thank God. 25 lakhs correct. Okay. SBI borrowing related is not allowed. Then option C, 3 lakh 70. That also be correctly computed. Yes or no? C. No, not chargeable to tax. That's it, over. Easy. 23rd also exceptional only. Good question. Right or not? That and all is very, very confusing. Like many don't understand that level. You have to be very careful. If 27 is applicable, clubbing point will not apply. Accordingly, higher income that on transfer, it's directly taxable. Next, case scenario 24. Mr. Kashyap, a manufacturer, has disclosed a net profit of 40 lakhs for the year ended 31st. He claimed a depreciation of 12 lakh 20 in his books of accounts. Expenditure in P&L includes interest payable to Raj, a resident, without deduction of tax 1 lakh 50. Such tax was however deducted on 15th April and remitted on 17th. So no disallowance under 40A subsection 1A, clause 1A. Yes or no? They have given P&L account only technically. Okay. Mr. Kashyap is engaged in in-house scientific research and development. In-house research 35 subsection 1 clause in-house research. Okay, whether it is optional tax or default, doesn't matter. Deduction is allowed 100%, but contributions default will not be common. He incurred expenditure of 1 lakh 50 on purchase of research equipment and 1 lakh as remuneration paid to scientist. Entire amount deductible. The said sums are also debited. No problem. We can happily allow. This one already debited. No adjustment. Mr. Kashyap purchased a new plant and machinery for 45 lakh on 2nd August 2024 and put the same use less than 180 days. Yes or no? Less than 180. And what is he manufacturing? Manufacturer. Automatically additional depreciation he will get. Okay. For this purpose, he borrowed 25 lakh on 1st August and paid interest at 10% per annum, which is debited to P&L. From 1st August to 1st November, interest on loan will be added to cost of the asset. Explanation 8 to section 43 subsection 1. Explanation 8 to section 43 subsection 1. Actual cost. Okay, fine, you see. Explanation 8. PGBP 43. Okay, I'll directly go with in this 43 subsection 1. Yes, here you will find explanation 8. Interest amount up to date of first put to use will be added to block. Okay, so when you're claiming depreciation on that interest also you could usually claim, and since it is already debited to P&L, that interest amount you should disallow, whereas from 1st November interest you don't have to disallow. Wow, finest question. This is very finest question. Pakka. Everybody will do wrong answer here. Written down value of the block as on 1st April was 95 lakh. Turnover for the year last year was 2.5 crore and current year was 3 crore respectively. This information was given. Last year turnover is more than 1 crore. Therefore, this disallowance section and all you need to see carefully for that reason. Okay. Wow, fantastic. Let's solve. Okay. Now P&L account. What is the P&L account profit? 40 lakhs. 40 lakhs. Next, he claimed depreciation 12 lakh 20. This is as per books. Yes or no? Book depreciation 12 lakh 20,000. I'll add back. Next, minus depreciation under section 32. This I will working note separately. Okay. Then expenditure includes interest payable to Raj, a resident, 1 lakh 50, on which tax was deducted. So TDS is remitted within due date. Wait. Without deduction of tax he paid. When tax is deducted? Next year it was deducted. Therefore, in the current year, 30% I will disallow. Next year for 25-26 again we'll do in assessment year 26-27. That time we will allow that deduction. 30%. Many might, because tax is deducted and paid, they will think deduction date is after 31st March, not within 31st March. If at all it is within 31st March, payment date is same, no treatment. So 1 lakh 50 into 30%, 45,000, correct? Add 40 subsection A clause 1A, 45,000 disallowed. And remember, he paid interest. 194A section is applicable for him because last year turnover was 2.5 crore. Suppose in this question, no, last year turnover is less than 1 crore. 194A will not apply for current year for us. And 194A does not apply. This disallowance section does not attract. Very careful, okay? Here if one amount change, the answer will change. Next. So 40 lakh considered, 12 considered, this amount considered. In-house scientific research, he incurred expenditure 1 lakh 50 on purchase of research equipment, 1 lakh on remuneration to scientists. The said amounts are debited. No treatment because they are allowed. Either which regime? Regime it doesn't matter. In-house research, no, doesn't matter. Yeah, next. Now this is regarding in machinery. Okay, directly we can compute only with this working note. If at all we did over. Opening WDV how much ma? 95 lakh. Yes or no? Additions during the year. 45 lakhs on 1st November because used to. Yes or no? 1st November. And remember, interest on loan up to 1st November. That also, I will bet I showed this in our book also, depreciation format. This is a big proof for you. Okay. You see, I told capital repairs incurred, and I even specifically mentioned that added to block here. Added to block. In many books, what actual cost it will be there? The wordings. I specifically mentioned added to block. Understood? Yeah. Added to block. Remember how much ever you're adding back to the block, to that extent your disallow also you have to do because interest is already debited here. Okay, fine. So how much is the loan, by the way? 25 lakhs loan borrowed. Okay, August, September, October, only 3 months because 1st November we are put to use. Yes or no? 25 lakhs into, what is the rate of interest? 10% into 10% into 3 by 12. So 62,500. Or no? 62,500 we need to add. And remember, this entire interest is debited to block. 1st August onwards and paid interest which is debited to P&L. So this 3 months interest we should disallow. Or no? 43 subsection 1 explanation 8 and disallowance. Or no? How much it is? 62,500 because it is entirely debited in P&L. When they are computing this profit, full amount reduced. This amount is to be added to block. It's a capital expenditure, not revenue. So we added back. Now we added to block. Now, total gross block value how much? Gross block value how much? 95 lakh plus 45 lakh plus 62,500 is equal to 1 crore 40 lakh 62,500. Now minus any part of a block they sold 0. So what is the value available for depreciation? 1 crore 40 lakh 62,500. Okay, I will go back to our book. I'll apply here the logic. Okay, How much is the amount available now? 140, 62, 500. 1,40,000, 62,500. Allocate to the assets bought not used 0 in our example. Allocate to the assets for less than 180 days. How much it is? Interest also added to mission cost, no? That should also be added here because that is related to that mission. Added to the cost. How much to be added? 45 lakh plus 62,500. Both you need to add to less than 180. Correct, huh? Here 45 lakhs plus that corresponding interest. That also, yes or no? 45 lakh 62,500. 45 lakh 62,500. Balancing figure 95 lakhs opening. Yes or no? The interest is, depreciation is 15%. 95 lakhs into 15%. How much it is? 14 lakh 25,000. Here, I hope everyone understood why 62,500 is added. 62,500 is added because this is related to this missionary only. Capitalized to the missionary, added to the cost of the mission, nothing but. Yes or no? 45 lakh 62,000, 45, 62,500 into 15% divided by 2. 3 lakh 42,187. This is only normal depreciation. Yes or no? 14 lakh 25,000. So total normal depreciation is equal to 17 lakh 67,187. And remember, additional depreciation you will get. Additional depreciation on actual cost you will get. Actual cost is what you know here? 45 lakh 62,500. It is to be considered as cost only. Added to block means matlab capitalizing. So depreciation, that is actual cost means, because actual cost definition is same. Because additional depreciation is on actual cost. That 62,500 plays a key role. We'll see whether the examiner who designed this question, no, that fellow have this much knowledge or not, we don't know. But 62. So now additional depreciation 45 lakh 62,500 into 10%. We'll see 45 62,500 into 10%. 4 lakh 56,250. That's additional depreciation. That 62,500 has so much impact. Total depreciation 17 lakh 67,187 plus 4 lakh 56,250 is equal to 222,3437. 22 lakh 23,437. This is the total depreciation. Thank God it is there. He used brain. Nobody would have seen this question till now. Yes or no? That interest on that is to be capitalized, that is added to block, nothing but that is added to the actual cost. Actually, it is actual cost. This is the actual cost. Actual cost means what? Added to the block because of that missionary. So that is also considered as part of actual cost for the purpose of claiming additional depreciation. That is also considered for the purpose of claiming normal depreciation. Cost of the mission. That's it. We'll see whether this I'm excited to see this answer. Okay, Hamma, thank God. Yeah, perfect. Yes or no? Yeah. Next. This is really a challenging question. What is the amount of disallowance, if any, attracted for non-deduction of tax at source? 30%. Yeah. 45,000 disallowed. Yes or no? No disallowance. Deposit on that's wrong. 45,000 disallowed because deduction is in next year, not in the current year. What would be the income under PGBP of Kashyap for the year under normal provisions of the Act? We are now computing already. Minus depreciation under 32. How much we calculated? 22 lakh 23,437. Reduce it. Now calculate the income under PGBP. 40 lakh 1220 minus 22 23 437 plus 45,000 plus 62,500 interest is allowed. 31 lakh 4,063. 31 lakh 4,063. 31 lakh 4,000. Option number A. What would be the income chargeable under PGBP if he pays default tax regime? No difference at all. Yes or no? Same, because no scientific research expenditure, direct expenditure is incurring. For that there is no difference. Yes or no? What happened? Yes. Additional depreciation, no deduction for default tax regime. Additional depreciation will not be there. To that extent of additional depreciation, add back 31,040 062 additional depreciation, yeah, correct only, plus additional depreciation we already computed in our book, we computed, plus 4,56,250 add back 35 63,112, that's it. Yes or no? We'll see. 45 3104 35 45 3104, perfect. Yes or no? Superb question, no? This is the last one, huh? That's it. Just 2 minutes. And the last case scenario 25. By the way, 24 also exceptional. Okay. Miss Abhinav and Sons, a sole proprietorship, is engaged in the business of manufacturing pharma, and it started business on 20th June 2020. Tax hit furnishes you the following particulars. Income under PGBP, income itself they gave. Interest on FD, gross they gave. The same was received on 30th April, after that it doesn't matter. Donation to PM Cares Fund. This is 80G, category 1 donation. Turnover during the previous year, last year was 15 crore. Oh my god, TCS provision might have been there. They didn't ask TCS because last year turnover was more than 10 crore, no. So TCS under 206G1H might apply. Okay, 206C1H. Okay, fine, 1H. But anyhow, here there is no purchase information is given. Okay, fine, it's okay. Mrs. Vaibhav and Sons opted out of default tax, means optional tax. It has employed 150 members during the 2023-24 with an annual increment of 10% in their monthly emoluments. So they have an increment of 10% in the current year. Okay, date of joining 50, regular, monthly emoluments are more than 25, so not eligible for 80JJAA. Okay, yes or no? Casual labor who are not participating in recognized provident fund, they are also not eligible for 80JJAA. Yes or no? 1st July 2023, 35 employees, regular 22,500. Yes or no? And remember, annual increment 10%. So current year we are focusing on 24-25. So 1st April 25 to 30th June 24 to 2024, for these employees the salary is 22,500, whereas 1st July 24 to 31st March 22,500 plus 10% increment current year 24,750. Yes or no? So how many employees were there? These people 35 totally. For 35 employees, what is the annual salary for all of them? 22,500 into 3 months, 24,750 into 9 months, correct? 2,90,750. 2,90,750 is annual salary, multiplied by how many employees? 35. Yes or no? 1 crore 1,58,750. Yes or no? These are the employees recruited last year. Yes or no? And it was totally employed 150. By the way, when they started the business, 2020 itself they started the business. So again extra employees employed in this year, that we will see. So related to them, they will get exemption for 3 years. Last year they would have claimed. This year this on this 30% under 80JJAA. Correct? 30 lakh 47,625. Don't worry if you did not understand, I'll tell you. Okay, under 80JJAA, last year he recruited some employees. I assume that 80JJAA deduction came in the last year also, assuming that there is a total increase in number of employees. Now remember, they are participating in RPF, their monthly emoluments are less than 25,000 in that year, they are eligible for deduction. Yes or no? That next year also monthly emolument is less than 25, again they are eligible for deduction this year. Next year also they are eligible. Next year no, 25, 26 they may not be eligible because these people monthly emoluments cross 25,000 in the next year. Yes or no? 3 years you will get deduction for the actual cost incurred, provided the monthly emoluments are not exceeding 25 and they are participating in RPF, all that. This is regarding employees who are recruited in 23-24. Now again, it has employed further 50, details are as under. Yes or no? This is straight away not eligible, whereas this one is eligible. 1,420. So 21,000 rupees for 12 months we are paying into 20 employees. How much is that? 20 into 12 into 21,000 is equal to 50,40,000. Yes or no? Into 30% is equal to 15 lakh 12,000. Yes or no? Now total plus 30 lakh 47,625 is equal to 18 lakh 16,765. 80 JJAA deduction. Correct? We'll see. Computed everything. We'll see now. What is the due date for filing return of income? He is liable for tax audit. Obviously, he is liable for tax audit. 30th return of income, right? 31st October 2025. What shall be the deduction? What shall be the amount of deduction available for under 80 JJAA? We got how much? 18 lakh 16,765. What happened? One minute. 150 employees, no? It employed totally. Okay, annual increment 10%. It has employed further 50 employees during the year. Hey, wait. Emoluments to all employees were paid by account paycheck. Good. No employees have left the job during 23 as well as. Okay, none of them left the job. So there is an overall increase in number of employees. Hey, what ma? 20. Up here. We'll see once. 21,000 into 12 months into 20. Which one? This one, Huh? Oh, here, This is came wrong, Oh, sorry. Correct. 15 lakh 12,000 plus 30 lakh. Did wrong. 45. 45. You also compute along with me always. Okay. 45, 59, 625. What's the answer? 45, 59, 625. See, actually, no. They say every year eligible. No. I think they may not consider this increment. We'll recompute once that part alone. Okay, they're eligible for 22,500, right? Only 22,500 base pay you take. 12 months into 35 multiplied by 30% plus, okay, plus 15 lakh 12,000 you take. Then 43, 47,000 you're getting. Even that also we are not getting. Casual employees who are not participating in RPF, we will not be considering. Regular employees, we will consider who are participating in RPF. In this current year, we paid 1st July means okay. 1st April 2024 to 30th June, 3 months. 3 months is 22,500 only, no? Into 3. Okay, wait, I'll compute for all 35 employees. Okay, then 22,500 plus 10% increment into 35 employees into 9 months. 1 crore 1 lakh 58,750. Correct only. 30%. 30 lakh 47,625. I don't know what happened here. Okay, can we check the working what they did? Opted out of default tax with an annual increment of 10%. Okay, it has employed total 150. Is there any clue that before year they have employed lesser employees? Turnover during the current year was this. Okay, liable for tax audit. Correct only. See once. 36, 38, 250. Yeah. Employee cost 21, 12, 20, 50, 40 deduction that we corrected. So no, additional employee cost during 20 to 500, 9 months 35. Why 9 months they took? What about the first 3 months? Just 1 minute. I think deduction you will get for 3 years, right? That provision has to be interpreted like this, I guess. I think that's the way, because we don't have till now the problem on this. In 23-24, what is the salary cost the company incurred? 22,500 for 9 months into 35 employees. How much is that? 22,500 into 9 into 35. 70 lakh 87,500. Correct? No? Into 30%. That's the deduction. Correct? How much is that? 21 lakh 26,250. Okay, this deduction you will get for 3 years. The meaning probably, which means you don't have to compute every year the cost. Every year the cost. Okay, fine. So in that logic, 23, 24 first year we claim this deduction. Second time once again we are claiming now. Third year again we will claim once again. Okay. So here the reason what they have taken is first year what is the additional employee cost they derived as per whatever the knowledge that we know, 9 months. The same deduction they applied for all the 3 years, which means 30% deduction you get for 3 years, right? For the same 35 employees, you don't have to compute every year. But actually no, I have seen some cases where every year they compute. Logically that is correct only. Yes or no? That's it. Technically that is eligible for deduction every year, 30% of this additional employee cost. Okay, fine. Okay, but we'll take this answer. Okay, for ICA our solving purpose we take this, because even in reality also I still remember to certain clients in manufacturing tax audit cases we see we compute every year the emoluments and then we give deduction. Maybe I don't know, there might be some case on this, we don't know exactly. Okay, we need to see circular on 80 JJAA. So guys, 80 JJAA deduction you will get for 3 years, right? First year what amount you claim deduction, exact same deduction will be there for second year and third year. That is what they're taking here. Understood? So on that logic their answer is right. On that logic their answer is right. Correct. So 36 correct, huh? Then so 36, 38, 250, right? What would be the total income? Total income is net income we need to. Okay, total income is how much? Now superb question. No, that is some new point we learned again. Is because no, that question till date never there. Last year deduction, now how much we should claim? 5 lakh 75 22. 5 crore 75 lakh 22 22,750. Okay, interest 12 lakh 50. Then donation to PM fund we'll see later. Okay, is there any other income? That's it. Gross total income 5 lakh 87,000 72,750. Correct? Minus 80G category 1. Okay, 15 minus 80G 2.5 lakh. Now 80 JJAA just now we computed. What is it? 36 lakh 38 through 50. 36 lakh 38,250. What is the total income? 587 72 750 minus 2 lakh 50 minus 36 38 250 is equal to 5 crore 48 lakh 84,500. PM cares fund, how he paid, by the way, by check only, no? I hope so. And nothing is mentioned, I assume that it's paid by check only. So that's it. Option number B. Tax payable by Abhinav and Sons. This is a partnership firm. So no, we'll see. Sole proprietor. Okay, they name sole proprietor only. What is his age? Nothing is mentioned. And optional tax regime, age is not mentioned anywhere. Indirectly birthday, nothing is given. 5 crore income crossed. Yes or no? How much is the income? 5 crore 48 lakhs 84,500. Okay, so 1 lakh 12,500 for first 10 lakh. 5 crore 38 lakh 84,500 into 30%, 61 crore 61 lakh 65,350. So no, so 1 lakh 12,500, 1 crore 62 lakh 77,850. I don't think relief will apply here because it's more than, so heavy income is high. So 4%. Hey, surcharge yaar, 162,77 directly can't apply. 37% surcharge. What is the surcharge? Optional tax regime. 1 crore 62,77,850 plus surcharge 37%. Hey, 1 minute. 1 crore 32,77,850 into surcharge 37 apply. 50 lakhs you're getting a surcharge. Relief is there here. Relief is there. Wow, so tough. Step number 1. Compute tax on total income. By the way, plus 37% you add it ma? 160,770,850 into 37%. Oh my god, 60 lakh 22,804. Okay. Step 1, compute tax on total income including surcharge at 37%. Correct? So total 1 crore 62 77 850 plus 60 22 804. Yes or no? 2 crore 22 lakh 30,000. 2 crore 23 lakh 654. Okay. Step 2, tax on 5 crore plus total income minus 5 crore. Total income how much? Total income automatically this amount will come 4884. Okay. 4884 500. Tax on 5 crore. On 5 crore 25% only surcharge na? Yes or no? So 1,12,500 up to 10 lakhs, remaining 4,90,000, 4 crore 90 lakh into 30% plus 25% surcharge. Total tax, basic tax, total tax plus surcharge. No. Wait. 4 crore 90 lakhs multiplied by 30%. Okay. 1,12,500. So 14 lakh, sorry, 1 crore 48 lakh 12,500. This is basic tax. 1 crore 48 lakh 12,500 plus 25% surcharge. So step number 2, entire runs, step number 2 with surcharge 1 crore 85 lakh 15,625 plus this 1 crore 85 15,625 plus 48 84 500 is equal to 2 crore 34. Hey, coming so much here. 2 crore 34 lakh 125. One second, I'll see. Either here we might have done wrong. Gross total income is 548, right? Once I will see 5 lakh 48 84 500 minus 10 lakhs you see into 30%. Okay. Up to 10 lakhs 1,12,500. Okay. Plus 37%. Thing going wrong here. First 10 lakhs 5 lakh 38,000 84 500 multiplied by 30%. This is at slab up to first 1,12,500. 538 84 500 into 30% is equal to 1 crore 61 lakh 65 350. This plus this total basic tax. Correct only. 1 crore 62 lakh 77 850. Correct? 1 crore 62 77 850. Okay. Plus 37% is equal to 2 crore 23 lakh 654. That's correct only. 2 crore 23 lakh. I think here we 2 crore 23 lakh. Correct? Yes. Then tax on 5 crore 4 crore 90 lakh multiplied by 30%. Okay. 1 crore 47 lakh 1,12,500. So total 1,48. Okay. 1 crore 48 plus 25% surcharge, which is 185. Okay. Now, and the extra income is how much? 48 84 500. There is no relief. Since step 2 is coming bigger than step 1, there is no relief. Yes or no? This itself plus 4% straight away. 223,00654 plus 4%. 2 crore 31 lakh 92,680. Clear? 31st October. This we did. We understood. 548. 2 crore 30 lakh 67 680. Perfect. That's it. All the case studies completed. Fantastic. No? This also exceptional. This also keep it exceptional. Okay. That's it.